The Asia-Pacific trade largely lower following weak cues from Wall Street. The GIFT Nifty is also suggesting a weak start for the Indian market. Brent crude rises marginally to trade around $77 a barrel as the dollar strengthens. Gold prices continue to trade about $2,500 an ounce. Minutes of the Monetary Policy Committee meet show divisions within the panel. Governor Das and RBI members remain firm on the 4% inflation target and argue that growth is steady. Two external members say monetary policy exceedingly restrictive and growth is showing signs of softening. Sources tell CNBC TV18 that the promoters of Ambuja Cement are likely to sell 2.84% stake in a block deal worth 4,198 crore rupees. A block deal is also likely in Nykaa, where pre-IPO investor Harinder Pal Singh Banga is likely to sell 1.4% stake in the company. A very good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. It's a Friday. We are towards the end of this trading week. A lot that has happened. It went by quickly as well. But yes, a lot to catch up on as well. So first up, let's take a look at what the Asian markets are doing. Now, it was a down day for the US markets because of higher treasury yields. That is something which we can see in the Asian markets as well right now. The Taiwanese index, it's down 140 points. We have the Hang Seng sitting with cuts of 100 points. And mostly across the board, it's the red-looking Asian screen that we are talking about. Kospi is down 0.5%. We have Nikkei, which is sitting with cuts of around 0.3%. So it is the impact of US markets that we're seeing on the Asian screen as well. The GIFT Nifty, that'll come up for you on the screen because that one is indicating absolutely flatter start. It could be in the green, but yes, it's largely a flat move that the implied open is suggesting right now, up around 3 odd points. Let's talk about the US markets because Wall Street ended Thursday's trading session lower in anticipation of the Fed chair Jerome Powell's speech later today. The Dow lost 180 points while the S&P shed 50 points. The tech-heavy index, the Nasdaq, was the worst performer, shedding 300 points. The US 10-year Treasury yields also climbed nearly 9 basis points as investors looked ahead to the Fed chair's comments. And let's stay with Wall Street ahead of Fed chair's speech. Philadelphia Fed President Patrick Harker shared his opinions on the speculation surrounding Fed rate cuts and softening of the labor market. Listen in.
Well, I think it means this September we need to start a process of moving rates down. The one thing I heard from them, bankers, business leaders, community leaders, is whatever you do, do it methodically and signal it well in advance. Give us time to absorb the change. I mean, they understood why we did what we did to bring rates up very quickly, but they're saying, please don't do that again to us. Now, barring something we don't anticipate in terms of the data, right, we need to start bringing them down methodically. What they say to me is, we don't really care that much whether it's 25 or 50. It's just start the process and keep it moving.
Okay, and Jeremy Siegel from Wharton School at University of Pennsylvania shares his position on how aggressive Federal Reserve needs to be with its rate cuts with respect to inflation and labor market. Additionally, former chief economist at IMF, Kenneth Rogoff, comments Federal Reserve should move deliberately and methodically to cut rates.
This is my position. If you look at the last dot plot from the June meeting, the Fed says that if we are balanced risks, we should be at 2.8% Fed funds. Now, and I ask you, looking forward next 6 months, what do you think is more likely? That we're going to have a flare-up of inflation or that the employment picture is going to weaken? Now, I actually think the latter. As you know, the Fed has stated its long-term unemployment goal. It's 4.2. Well, the last meeting, we hit 4.3. So they've already loosened the labor market to their ideal position.
I mean, I think what they need to do is move deliberately and methodically unless the data is really bad. I mean, the fact is that what matters the most for the economy are the longer term interest rates, and you set the direction for where you're going with the short term rate, and it has pretty much the same effect. So sure, there are traders who will make money or lose money, depending on if it's 25 or 50. But unless there's something dramatic, I bet they do 25, but signal they're going to keep doing that for a while.
Okay, all right. It's time to get to the final update on our global market wrap this morning. Stocks in Europe closed mixed as investors digest the Fed minutes that point to a rate cut in September. The French CAC closed flat while the German DAX gained 44 points. The British FTSE also closed near the flat line, gaining 4 points. The Pan-European Stock 600 index, it also ended 0.35% higher, with major bosses and most sectors in the green. Meanwhile, minutes from the ECB meeting released yesterday show that policymakers were in no rush to cut rates in July, but that they saw September as the next best opportunity to consider a further easing. And that's the global market action and opinion. But let's talk about how all of this will impact our own markets. We have our research team joining in to tell you just that. They're happier today since it's a Friday. So, guys, a very good morning to all of you. And may it be a very happy Friday for all of us. First up, Vivek, let me come across to you. What is the market setup looking like today?
Well, good morning. Absolutely, it's Friday. Now what's actually transpired is that today you will be seeing a very important event where, like you've been mentioning since the start of the show, that speech from the Fed chair is something that the entire street is looking forward to. Ahead of that, yesterday, US market sold off a little bit, so they're going in quite lighter compared to what they were, around 10 sessions ago. Now, talking about how oil prices panned out. Oil prices yesterday ended with minor gains. Brent ended up almost 1.5% higher, closer to the $78 a barrel mark. But now coming to the Indian markets. Indian markets yesterday ended with minor gains, largely, range-bound trading session. What did well? The Bank Nifty did very well. Not only did the banks, the entire banking bank, and also the NBFCs, they also did well, and they ended amongst the top gainers in the broader markets as well. Apart from that, a couple of sectors yesterday that started seeing some up move was the cement as well as the fertilizer pack. So they were also something that saw quite a bit of an up move. Advance decline ratio yesterday was very strong at 2:1. So the broader end of the markets continue to see positive momentum. What is it that we're watching out for today? Well, you are seeing a whole host of block deals that happened in trade yesterday. That looks also to continue today as well. Block deals, fundraising, QIPs. This is on the radar. Asian markets, Gift Nifty, all of them indicating a flat to slightly subdued start for our own markets today.
Okay, all right. Thank you so much for that, Vivek. Let's talk about all the stocks which will be on our radar today. Hormaz has that list for us. Good morning, Hormaz.
Morning, Sonal. And if it's not earnings, it's block deals, and they are going to continue today as well. After almost 7 or 8 that we saw yesterday, 2 more are lined up today. Ambuja Cements is the first one, where the promoter Holder in Investments is looking to sell around 2.8% stake. Deals are valued at around 4,000 crore rupees. The price of the deal around 600 rupees, which is a 5% discount to yesterday's closing price. The other one, though, is lined up in Nykaa, where Harinder Pal Singh and associates are likely to sell up to 1.4% stake. The floor price of 198 is around a 5 to 6% discount here as well. And the Harinder Pal Singh, as of the 30th of June, held around 6.4% stake in the company. Now, Adani Power will also be in focus because the NCLT has approved its resolution plan to acquire Lanco Amarkantak Power, and that is for around 4,000 crore rupees. This is just another step towards this because the Committee of Creditors had approved this in March. And so this is the NCLT approval that has come in. Now, Jain Irrigation, they have signed an MOU with the Indian Coffee Board, and this is for a commercial release of advanced, high quality and disease-resistant coffee plants that they have signed the deal for. Bharti Airtel will be in focus because the GST demand notice that was given to them, that has been cut down from 600 crores to just under 200 crore rupees now. Polymedicure, they've closed their QIP. They raised 1,000 crores through it. 7 funds were issued, a significant amount of shares, prominent among them being Lighthouse India, SBIMF, Nomura, and of course a Quant Mutual Fund as well. Bikaji Foods board meet is today to consider approve the stake purchase that they are planning in Ariba Foods. And Yes Bank is also meeting today to consider funds via debt securities. And on the IPO front, we have Orient Technologies is the final day today. And for the last 2 days, the issue has been subscribed around 17 times. Back to you.
Okay, all right. Earnings, no earnings. The stock is always, the list is always long when it's stocks and news. But let me go across to Mangalam now. He's joining in with all the cues from the FNO space. Good morning.
Good morning. So, it's a very interesting phase of the market right now. Whatever happens, we're consolidating on the way up. This week has been a very strong one for the mid-cap end of things as well. And the Nifty Bank and the IT index keep taking turns to support the frontline index. Yesterday, 24,811, right in the middle of that range for expiry that we were expecting is where the Nifty ended. But the Nifty Bank was the one that really stood out in yesterday's trading session. Why is that? Because it conquered the 20-day moving average and now is just about 500 points away from the 50-day moving average as well. Where does it go from here will be extremely crucial. The other part will be the IT index. That was weak in yesterday's trading session, and that will be in focus ahead of Fed Chair Jerome Powell's speech at Jackson Hole today. Remember, typically ahead of these meetings, the market takes long positions into the Fed event itself. So does the IT pack return today or not is something that we'll be tracking very, very closely. In terms of an up move yesterday from cash markets, yes, there were net institutional flows, of course, some of them impacted by a couple of large trades as well, but a purchase from both the FIs and the DIIs is what we saw. Interesting space in the index futures as well. The FIs bought 600 crores worth index futures, but they sold 425 crores worth Nifty futures, and they actually bought Nifty Bank futures. So can the up move on the Nifty Bank sustain or not is something that we will track. And on the Nifty itself, they are in index futures, they're 52% long. If you look at the Nifty options, 24,800 call is very active. The premium is 160 rupees. If the Nifty crosses past that hurdle of 24,950 to 25,000, then there is a large breakout which is available, and that's reflective in the kind of call writing that we've seen or call buying that we've seen at 25,500 itself for a premium of just 4 rupees. So what is it that the option writers are expecting given the call and put action? They're expecting support around 24,650 to 24,700. But if the Nifty holds above that congestion zone, then there is a big breakout that the street is positioned for. In terms of stocks, watching out for Chambal Fertilizers, IEX and RBL Bank. They've entered F&O ban. And out of ban is Balrampur Chini. So keep an eye out on that one.
Okay, all right. So that's the market setup looking like today. Thank you so much for guys for joining us and telling us what to expect from trading day today. We'll slip into a break now. When we come back, we'll get to the highlights from the minutes of RBI's Monetary Policy Committee meeting. Stay tuned for that.
We came up with the second tax regime, the new regime as we would call, the alternative regime as we've called, even as the first one continues till today. And that showcased how a transparent, simple, easy to comply system could be brought. Otherwise, today, within 2 years of bringing it in, we wouldn't have had 72% of all the taxpayers moving to the new system. Today, the numbers speak for themselves. 72% moving from the old system to this very clearly shows that this has been now accepted as a very well thought through system, wherein the rates are simple, there are no exemptions, no compliance headaches, and therefore has become very attractive.
Wonderfully magical is in the air, isn't it? Yeah. You know, we're feeling it here in this arena, but it's spreading all across this country we love. A familiar feeling that's been buried too deep for far too long. You know what I'm talking about. It's the contagious power of hope.
Welcome back. You're still tuned into Power Breakfast on CNBC TV18. Well, the minutes of the RBI's Monetary Policy Committee meeting of August 8 were disclosed yesterday, and the key takeaway is the deep division in the MPC about how strong growth is and how bad is food inflation. Lata Venkatesh is joining us with her take on the same. Lata.
Well, the minutes clearly show a very deep division in the MPC, with 1/3 of the members clearly believing there was a rate cut space, and the majority, 2/3, not agreeing. But we must remember that we were already aware of this. The voting was known. The two members who disagreed, Dr. Verma and Dr. Ashima Goyal, spoke to CNBC TV18. And the minutes also indicate that they believe India's potential growth is actually much stronger. It should be 8% plus. And by keeping the interest rates as high as 6.5%, the RBI is restricting, or the MPC is restricting the economy from achieving that growth. What they would target is the real rate, that is 6.5% repo rate minus the actual inflation. The year ahead inflation, according to RBI, is 4.4. So Verma says 2.1% difference, the real rate, is too high. 1.5% is enough, and that will help India achieve. The important point that both of them make, and more Verma strongly, is that actually the Indian economy is slowing. The corporate results of the first quarter saw more downgrades of earnings. The profits came in lower than expected, and they're also pointing to the fact that core inflation is only at 3%, which means there is not enough demand in the economy. So they're very strongly arguing something which the other four members are not buying, and that's more important because the three RBI members and one external member, Dr. Bide, including the governor actually, strongly believe that growth is good. And when growth is good, it gives the MPC the space, the elbow room, to chase down inflation all the way to 4%. And the fact that food inflation is very high persistently, and very important ones, as Patra points out, pulses, cereals, etc., indicates that there can be a spillover into a generalized inflation, and therefore the MPC should not leave out its vigil. The important point to note is that this is the last MPC meeting for the three external members, Verma, Goyal and Bide. Their 4-year term ends, and in October we will have a fresh set of three external members. If the governor's term indeed ends in December, then there will be a fourth new member, and if Deputy Governor Patra's term ends in Jan, as it is supposed to, they all can get extensions, governor and deputy governor. But going by the current term, 5 members will be new by the time we come to the February policy.
Okay, all right. On that note also, let's listen into what the external members had to say.
A very high real rate makes capex unattractive to the corporate. And if demand is inadequate, that also does that. And restrictive monetary policy is one of the things driving demand as well. If we think that demand is deficient, that the economy requires very large fiscal support because private demand, the private consumption expenditure is not growing, then we have to ask, what have you done? Is monetary policy part of the problem?
The budget deficit is conservative. It's on the fiscal consolidation part. So the excess demand stimulus from government is going down. And so there's space for monetary policy to support demand more. And we're not using that space. So we are restraining growth.
It's not the supply side alone. I think that is important, looking at the growth rate. In that context, 7% growth rate appears to be fairly strong growth at this point. So I think, if we need to raise this 7% growth to 8%, I don't think the present demand conditions support that. Inflation on the major components of the basket of consumption is moderate.
Okay, some important comments coming in there, but for now we'll slip into a break. When we come back, we'll talk all about the cues from the commodities market, so stay tuned for that.
America, hope is making a comeback. Kamala Harris is more than ready for this moment. She is one of the most qualified people ever to seek the office of the presidency. And she is one of the most dignified. A tribute to her mother, to my mother, and to your mother too. The embodiment of the stories we tell ourselves about this country. Her story is your story. It's my story. It's the story of the vast majority of Americans trying to build a better life.
Welcome back. You're watching Power Breakfast on CNBC TV18. It's time to talk about commodity markets. Manisha Gupta is joining us with all the updates. Good morning, Manisha. Happy Friday to you.
Oh, to you as well, Sonal. And we are looking at some profit taking in many commodities. You know, remember we started this week on a positive note, but that's not how we seem to be ending it. And understandably so, because you have the Jackson Hole meeting today, and markets would want to listen to what the Fed Chair Jerome Powell has to say, and that would really set course on how this week ends and how the next week begins. So ahead of that, we have seen the strength in US dollar, and that is weighing on many of these commodities. So the gold prices have come off, fell 1% overnight. Silver fell 2% overnight. It's trading off its 2-month highs that we saw trading it earlier. Some bit of a strength, though, has come back in case of the crude oil prices. That gained 1.5% in the overnight markets. Prices now are off its January lows. There also is a decline in U.S. crude inventories. That seems to be supporting the markets as well. A very strong gain is what we are also looking at in sense of coal prices. Those are trading at an 8-month highs. Markets also have seen some stability come back in case of base metal prices. No further gains, but many of these metals are holding on the higher side of the range in Asia right now.
Okay, all right. So that's what's happening with the commodity space. Let's move on to some international news updates now. Prime Minister Narendra Modi is set to visit Kyiv today for talks with Ukrainian President Volodymyr Zelensky. PM Modi met Poland's Prime Minister Donald Tusk in Warsaw during the first leg of his two-nation visit. PM Modi voiced his deep concern over the ongoing war between Russia and Ukraine and the conflict in West Asia. He also met with Polish President on Thursday on the last day of his visit to Warsaw. And the trip follows his July visit to Moscow, which drew criticism from the US and the Ukrainian president. Moving on, after the World Health Organization declared monkeypox as a public health emergency of international concern, the Union Health Ministry has issued directives to prevent the spread of the virus in India. The guidelines include the establishment of testing laboratories and health facilities dedicated to the screening and managing of monkeypox cases. The BMC, as a precautionary measure, has reserved a 14-bed ward in Mumbai's Seven Hills Hospital. The Airport Health Organization has already started screening passengers from monkeypox-affected countries. A health information desk has also been set up at the airport. Okay, with that, it's curtains down on Power Breakfast today. But stay tuned. Bazaar Morning Call comes up next with all the market action. Stay tuned.
In 1972, a fearless black congresswoman named Shirley Chisholm for president. And her determination let me and millions of others dream bigger, not just because of who she was, but because of who she fought for. Working parents, poor children, the last, the least, and the lost. In 1984, I brought my daughter to see Geraldine Ferraro, the first woman nominated for vice president. If we can do this, Jerry said, we can do anything. And then there was 2016, when it was the honor of my life to accept our party's nomination for president. I wish my mother and Kamala's mother could see us. They would say, keep going. Shirley and Jerry would say, keep going. Women fighting for reproductive health care are saying, keep going. Together, we put a lot of cracks in the highest, hardest glass ceiling. On the other side of that glass ceiling is Kamala Harris raising her hand and taking the oath of office as our 47th President of the United States. My friends, when a barrier falls for one of us, it falls and clear.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome. You are with us on Bazaar Morning Call and we're coming to you live from the CNBC TV18 Motilal Oswal studios. It's a Friday morning. We've made it through another week, almost made it through another week. I'm Surabhi Upadhyay and with me as always Nigel D'Souza. And today we have Rima to get the weekend vibe going. Good morning, guys.
Good morning. Happy Friday to all of you. And it's been a good week for the markets. So today could be a bit of a downer given the way global cues have stacked up.
We're not too far away from those all-time highs. So let's see if the bulls can do their thing.
And who would have thought, right? When we started off August, people are a little bit nervous. But now, all-time highs, we're even talking about that. So that's tell you the kind of pullback that we're seeing. But
I was just checking. At the beginning of August was the time when we had that manic Monday. The Dow fell 1,000.
5th of August, yes.
Yeah, and before that, the Japanese carry trade unwinding. Then that reliable recession indicator, SAM, got tested. By the way, guys, US markets are positive now. The Nasdaq is up 0.1% for this month, and the Dow is only down about 0.2%. All is forgotten and all is well so far.
Well, let's hope so. Fingers crossed, right? Because we had a bit of a flutter on Wall Street last night. Suddenly, we had a sell down going both on bonds and on stocks, actually. In fact, the fall was about 1% or so, between 1% and almost going up to 1.5%, 1.7% on the Nasdaq. So the overnight action was a bit on the edge. And like I said, this played out even in the bond market where yields shot up. The 10-year yield was up almost 9 basis points, likewise for the 2-year. So bit of a flutter. And of course, today is that big Friday. It is all about Jackson Hole. The symposium is underway, and today Fed Chair Jerome Powell is going to be speaking. This is basically around 7:30 our time. And markets are eyeing this event with a lot of anticipation. So what's the expectation? Because now we have not just Fed expectations, we have Jackson Hole expectations. The expectation is that the Fed chief is going to guide for the beginning of the rate cut cycle, but no one's obviously expecting him to exactly guide the market with respect to timing or the quantum of those rate cuts. I mean, if you talk quantum, then if you go by the latest, Fed Watch, the CME tool, then the expectation is that middle of September, when we get the Fed meeting, we'll see a 25 basis points. That's where the majority of the respondents are veering. It's a very small minority, less than a third, is expecting a 50 basis points rate cut. But in any case, so what caused this flutter yesterday? Well, you can pinpoint the jobless claims data, which wasn't too bad, but it did show up an increase in the jobless claims number. So the number went up by about 4,000 over the previous week, and that led to a bit of a reaction. Basically, it's still telling us that the job market is not doing too well. Remember the downward revision on the full year number that we had yesterday. So that was the big one, and then you're still seeing that jobless claims number come in on the lower side. So therefore, the Dow, the S&P, and of course the Nasdaq, all of them down, yields down, like I mentioned. This morning, I mean, Japanese markets are picking off Japanese and Asian markets are picking off on some of that caution. In terms of data, we've got inflation numbers out of Japan. The core numbers, the headline number is fine, it hasn't changed, but core inflation is showing a bit of a decline. So the Bank of Japan should like that, and maybe it gives them more reason to stay on hold and not even think of hiking, not that they can think of it, I think, after the global market turmoil. But that's the overall global picture. A little cautious is what we've got. Back home, just to quickly talk about the flows. Yesterday, the FIIs were on the buy side. We're talking a net inflow of just under 1,400 crores. Domestic institutions were buyers to the extent of almost 3,000 crores. But the caveat in these numbers is obviously the amount of blocks that are happening, large blocks, right? So the data tends to be a little skewed. In fact, blocks will continue to be in focus today as well. We'll watch out for big ones. The expectations are that Nykaa and Ambuja could see a lot of action. So let's see how that goes. Before I hand over to Reema, I'm going to watch out for this online gaming space, some of these listed stocks, because yesterday we had commentary from the Bihar Deputy Chief Minister, who is the convener of the GST group of ministers on rate rationalization. Remember all the buzz around how online gaming and maybe casinos as well, they deserve to get sort of, a bit of a relief on the GST front. So he acknowledged that, yes, there are representations that have been received, both on insurance. There's a huge representation on life insurance and health insurance, that the GST rate should be far, far lower because these are essential services in some sense. So he acknowledged that, yes, we've received these representations. We're looking at it. The council will come back with its view. So let's see, maybe some sort of a trading punt perhaps on the insurers, as well as stocks like maybe Nazara and who knows, maybe Delta as well.
Okay, let's put on some more internals on the table. Well, markets have been making higher highs and higher lows now for the last couple of days. So even as the up move continues, it's good to note that the indices, the Nifty particularly, that data will come up for you on your screen, has been making higher highs and higher lows. But yesterday, the range on the Nifty was just about 83 odd points. And this is the narrowest daily range that we've seen in the last 2 months. For our own markets, the up move has continued for the 6th day in a row, but will be run into profit booking today, given the global setup. That said, week to date, the Nifty is up 2.1%. The Nifty is up 1.1%. The mid-cap index is up 2.1%. And the small-cap index is up 3.5%. And the point about flows, yesterday's buy figure by the FIs was only the 4th instance of the FIs buying in the cash market in the month of August so far. And month to date, the FIs have sold about 32,500 crore in the cash market, while the DIs has pumped in more than 44,000 crore rupees. But Nigel, so far that buy on dips is approached, but today it's going to be tested because the global setup has been weak.
Well, that's right, Reema. The buy on dips thesis, that's going to be tested in today's trading session, and that's because of a couple of factors. Overnight, the global cues weren't very, very good. You had the yields that spiked up, the jobs report as well that did come out of the United States. The economic data not looking too good, so that's why the global markets were in a bit of a dizzy. And also the central bank action is going to be crucial. We'll have, the Fed chair that will be talking later today, and you'll have comments coming in from the Bank of Japan as well. So both those two, central bank action will be top of mind. What about the FIs? Well, yesterday they added some long positions. They covered some shorts, not too much movement. 52% of the positioning is on the long side. What about the clients as well as FIs? Both of them are net long on index futures, but they're aggressively net long on stock futures. Yesterday, there was some mild addition with the FIs. Well, that moved up by around 6,000-7,000 contracts odd, while the client positioning as well came down a little bit. But both of them net long, not aggressively net long, but we like that. So let's move to the next part of the data then. The Nifty PCR it's moving to the upper end of the range. Normally, the range is 0.7 on the downside, on the upside, 1.5, 1.55 odd has been that. So we're closer to the upper end of the range. And sometimes this tells you that, in fact, that put writing is getting very, very easy because the PCR has moved up. So let's pull up a couple of strikes then. In yesterday's trading session, the 24,800 call, fairly active. 24,500 put, fairly active in trade as well. So just punching in these numbers and going by the premium, we get a broad range out there. On the upside, closer to around 25,000, expecting some resistance. Yesterday, we started gap up, but we couldn't end at those highs. So that's the crucial resistance zone. While on the downside, going by the options data, and the 20 DMA as well comes in, added on the 24,500 mark. That's going to be an important mark that we'll have to track. The Nifty Bank, that's crucial. Yesterday, it made a dash towards the 50 DMA. It couldn't conquer that, however. So it's currently holding above the 20 DMA, but it needs to get closer to around that 50 DMA to help this market trend higher. So the Nifty Bank is going to be the important one. It's showing signs of strength, but it needs to get past that 51,350 odd mark. Stocks that I'm tracking today, well, one of them, Ambuja Cements, because the market had a bit of a sense of this. We as well quizzed the CFO of the company, whether or not the Adani Group will look to pull down some stake or, trim their stake in the company. Well, so the street is positioned for this event where the promoter group is looking to sell roughly on 2.8% at a 5% discount. So post this block will be interesting to see because there's big appetite for Ambuja Cements and large cap cement on the whole. And there are shots in the system as well. So we'll have to see how the stock reacts post that large trade that does take place.
Okay, thank you very much for that. Let's take the discussion back to the U.S. markets and the way forward. Matt Orton, U.S. market strategist and the chief market strategist at Raymond James Investment, is now with us on the show. Great to have you back on the show. Thank you very much for joining in. Well, the big event today is going to be Jackson Hole. Investors are in wait and watch for any kind of guidance on future rate cuts. So first, if you could lay out your own expectations, and can it surprise the market? Because even if he does signal a rate cut is coming in the month of September, it's probably only going to confirm what the market is anticipating.
Hey, good morning, Rima. Great to see you again. And I think you're right. The market's probably going to get confirmation of what it already suspects is going to happen. It's essentially consensus that the Fed is going to cut rates at its September meeting. And the key question is, how much is Powell actually going to broadcast with respect to not only the scale of the rate cut, so is it going to be 25 or 50 basis points in September, but also is he going to give any clues as to the depth of the rate cutting cycle, both for this year and next year. And so market positioning as a whole still looks offsides to me. It's been my base case that the US economy is in better shape than a lot of people have thought. I think that's why we've seen the recovery over the past week or so, because the totality of the data, despite one or two weak prints here or there, it just doesn't signal the need for the Fed to step in and cut by more than 25 basis points, which would require serious revisions to the summary economic projection. So I think Powell's going to broadcast that that rate cuts are going to be coming. I don't think he's going to give too many clues, both either to the scale of what that cut's going to be or to the depth, because that's just not typically what Jackson Hole is for. So I don't think the market's going to get what it wants. If we get a little bit of volatility, I've been telling a lot of our clients, use that as an opportunity to continue putting capital to work in this market, but use it to build balanced portfolios, lean into quality, because I think this elevated level of vol is probably here to stay through the fall, or at least until we get through elections.
Okay, Matt got that high. Good morning. So stick to quality. I think we're getting similar advice here in India as well, because volatility has become quite a companion in the last few weeks, right? So just tell us a bit in terms of looking at positions beyond the US. We also have obviously the whole question in Japan about whether the whole carry trade issue is behind us or not. I mean, I was looking at data out of Japan as well, the inflation numbers that came out. What's your sense? I mean, for every additional $100 you have to invest, how much would go to the US? How much would go elsewhere? And how much would you put to work in India?
It's a great question, Surabhi, and it's one that a lot of clients are asking too, is just, if I'm going to put money to work, where is it going to go? I would say the US is still the top place I would be allocating dollars, just because I think the economic story is clear. Liquidity is very good. There's still a lot of good places to put money to work, given where earnings growth is broadening and the fact that the average stock in the overall market just hasn't performed anywhere near what the fundamentals should be suggesting. But I think there's also opportunities, countries like Japan, which have been an overweight for me this year. It certainly was painful over the past couple of weeks with the drawdown, but the fundamental story that is there hasn't really changed. I think Japan, knowing what you own and that quality bias is going to be really, really important. Maybe you don't own as many banks because the BOJ is not going to hike rates as quickly or as much as I think some investors may have been expecting. But the fundamentals of the Tokyo Stock Exchange, basically having companies that are low valuations, implement shareholder reforms, more equity ownership by domestic investors, that's still a positive tailwind. So, $60 goes to the US, $30 probably goes to Japan. And then the rest of that, I think India is certainly still a very, very appealing place. I mean, when you're looking at a global economy that's normalizing, starting to slow down, that's not the case in India. And I know a lot of clients complain about valuations in India in general, but I think the growth justifies it. And earnings growth is growing at 16, 19, 20% in India, which is almost double that of what you're getting in the US. So I think there's some very clear fundamental stories that exist in India that justify valuations. So it's still very, very attractive to me. And it's very under-owned by overseas investors.
All right. Hi, Matt. Always good to hear your thoughts. You're clearly sounding very bullish on India. And fundamentally, there are a lot of stocks as well that are well placed here, particularly the large cap names. In the past, you've spoken about stocks like ICICI Bank, Coal India, Mahindra & Mahindra. What's the top 2-3 bets you're taking here in India?
So I think given the pullback that we've seen in Mahindra & Mahindra, I think it's a decent time to reload or put some money to work if you feel like you've missed it. I think the launch of Thar Rocks is certainly attractive, and I think just the volume gains they plan to get through the whole lineup looks good. I know passenger vehicles overall is not really the hot place to be in the Indian market right now, but I think their market share coupled with the farm implements business gaining market share in the tractor segment, that's very attractive. It's accretive to earnings, and I think they've continued to surprise to the upside. So definitely a name that I would be using weakness opportunistically. I think as well a name that's fallen that also looks attractive right now is Hindustan Aeronautics. The global defense theme is one that applies. I like defense companies everywhere around the world, but Hindustan, I think, is particularly well positioned, just given the modernization that's happening in India, the fact that they're trying to go both with the domestic market and increasing exports, and they've delivered on the earnings front and on the margin front. So to me, I think using that downside looks attractive right now too. So definitely a good opportunity there.
Okay, so Matt, just a quick last word. You said most of the capital, a majority of it will still go to the United States. India looks appealing. Japan is still attractive, barring the banks. But say for the next 2 or 3 months, because now we're entering into a regime shift with lower interest rates coming in from the US market. So from a 2 to 3 year point of view, with the entire shift in the investing landscape, with the macro backdrop changing, how would you approach? Would it still be the same allocation to equity classes that you earlier highlighted?
Yeah, Rima, that is a fantastic question because it's something I was actually just having a conversation with a client with yesterday. And this goes to the fact of why I think emerging markets can be more attractive and over the longer term, why I think India is a strong beneficiary of that change, because as rates come down in the US, as the dollar weakens a little bit more, emerging markets become more attractive. And we're at 10-year lows with respect to EM allocations across global funds. So if you extrapolate that and you start to see just a little bit of an increase with the decreased weight of China in EM indices, increasing weight of India due to strong fundamental performance, the math adds up that India just becomes even more attractive as that shift starts to happen. So, if you're looking for growth and you're looking to play the long-term game with respect to regime shift around the world, India is still incredibly well positioned within the emerging market complex.
Okay, all right. Good to hear that, Matt. Thank you for joining in, and I wish you a good rest of it's night for you, and then a good Friday and a good weekend. All right, thank you so much for being with us. Let's quickly move on and get you the equity call of the morning. Harold Vanderlind of HSBC says Indian equities are hot. However, he adds after 13 out of 15 years of gains and trading at lofty valuations, they ask what can go wrong. He identifies 10 risks that could potentially derail the rally, and they are stress for banks increasing. Banks are struggling to grow deposits. Private sector capex is sluggish and weak, and concentrated foreign investment, unequal consumer growth, risks to earnings, ESG, and sudden changes in regulations. Herald says on their own, none of these risks pose an immediate threat, but in aggregate, they could derail the rally. They are still staying overweight. While they acknowledge the risks, India also has the strongest growth story in emerging markets. So there you go, all the 10 risks that HSBC is looking at, but still remaining overweight.
Well, let's get you some money market views then. Lakshmanan V of Federal Bank says the dollar index recovered marginally with stronger Eurozone PMI data. He says FOMC minutes show the Fed is moving towards a September rate cut, and markets now await guidance from the US Fed Chair Powell's speech at Jackson Hole Symposium later today. He says the Indian rupee is trading near all-time lows, tracking mild declines in most of its Asian peers and sustained dollar demand from local importers. For the coming sessions, he expects the USD INR to trade in a range of 83.8 to 84.15 against the dollar.
Okay, on bonds, Lakshmanan says government bond yields traded marginally lower, tracking US peers, with the 10-year benchmark yield failing to break below 6.85%. He says the US FOMC minutes showed majority of members indicating that a September cut was likely. He says the RBI MPC minutes reiterated the focus on taming inflation while supporting growth. He adds oil prices were steady near $76 a barrel after falling for 4 straight days as investors worried about the global demand outlook. Lakshmanan says coming sessions could see the 10-year benchmark bond yield trade in a range of 6.8 to 6.9%.
So we've got a lot of stocks to track for you today. We'll get to that list in just a bit. But for the time being, let's run you through what all we're looking at. We're looking at Realtel, PowerMech, PDS Limited, Jammu and Kashmir Bank, Poly Medicare, Eris Life Sciences, as well as Kalyan Jewellers. All of them will be reacting to positive news flow on the flip side. Ambuja, Nykaa, PNB Housing Finance will be reacting to negative news flow.
Okay, well, that's our list. We'll get to it in just a minute after a quick break. Back with that in a moment.
For all of us.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources, but mushrooms.
Good morning and welcome back. We've been telling you the cues. The cues are a little cautious as far as the global setup is concerned, which is why the implied opener is telling us that maybe we'll be off to a slightly flat start. The color across most Asian screens is red for the time being. But we've told you about the macros. It is time to boil this down to the micros and discuss our top stock list to watch today. And we have the team standing by for that. So, Nigel, you kick it off because I guess Ambuja is going to be in focus. Expecting some blocks today?
Well, that's right. We are at CNBC TV18, the team, particularly Sudarshan and team, they've been on top of this. And we told you that there's a high probability, and Nimesh as well had mentioned that there's a possibility that a large trade takes place in the next few days. And that's precisely what we're picking up. Now, the promoter entity of Ambuja Cements could be looking at selling closer on 2.8% odd. The total block size will be roughly around 4,200 crores, and it's priced at a base price of around 600 rupees per share, which is a 5% discount. If you pull up yesterday's intraday chart as well, the stock did end a little bit lower, but in the final 10 minutes, there was a big surge that we saw in the stock if you pull up the intraday chart. To give you a couple of alerts, well, the promoter entity, 2 years ago, that's in 2022, they had taken some warrants, which they have gradually been converting. And because of this conversion, the promoter stake in the company has moved from around 63% to around 70%. So once this block gets cleared out, it'll be interesting to see the kind of appetite we see for the stock because it's a large cap name. It has its focus on cost cutting measures as well. And I believe demand is quite good as well. So expect the stock to open up in the red. But from there, I think we could see some bit of buying. So let's see how that goes. But Vivek as well is joining in to tell us about Nykaa. Morning, Vivek.
Well, good morning. It's another block deal that we are tracking. So Nykaa, we understand from our sources, we accessed the term sheet last evening. A pre-IPO investor, Harpinder Pal Singh, as well as the associates are looking to sell up to 1.4% stake in the company. The floor price for this particular block deal is at 198 rupees a share. So the size of the block at this particular floor price works out to over 800 crore rupees. Now remember, Harpinder Singh held close to 6.4% stake in the company at the end of Q1, and also there will be a lock-in of further 45 days on sale of shares if they want to sell further. Going with the red on this particular name on the back of this particular overhang.
Thank you very much for that. The stock is up 20% this year and 55% in the last 1 year. But over now to Vamakshi for more stocks which are in the news. Vamakshi.
Well, good morning, Reema. Let me first start off with Realty Corp, where the company has received work orders worth 53 crores from Uttar Pradesh Police Recruitment and Promotion Board. So on the back of this, going with the green for this counter. Power Mech 2 is expected to open higher today, and that is because the board has approved issue of bonus shares in the ratio 1:1. That is 1 bonus share for every 1 share held. They've also gone ahead and fixed September 28th as the record date for entitlement of the bonus shares. PDS Limited also on our radar, and that is because a QIP opened yesterday. They've approved a floor price of 563.59 per share, which is coming in at a discount of nearly 3% to the closing price yesterday. JNK Bank also on our radar, and that is because the long-term issuer rating and Basel III compliant Tier 2 bonds rating has been upgraded from IND A+ to IND AA-. This bodes well from a cost of funds perspective, and that is why I'm going with the green for this counter as well. And lastly, let's focus in on Poly Medicure. The company recently raised 1,000 crores via QIP, and the shares have been allotted to Lighthouse India Fund, SBI MF, Nomura Funds, as well as Quant MF, among some others. So given those notable names entering Poly Medicure, going with the green for this counter as well.
Okay, all right. Vamakshi, thanks so much. We will put all of them on our list of stocks to watch. Back to Vivek. Vivek, let's talk about yesterday's star, right? What a glittering performance by Kalyan on the back of the deal. So we have the confirmations now. Tell us more.
Well, absolutely right. What a strong move Kalyan Jewellers saw yesterday. So let's just break down, the deal itself. Number one, Heidel Investments, Warburg Pincus, so now, which held close to 9.17% 4% stake at the end of Q1 has gone ahead and expressed its intent to sell the entire stake. In yesterday's block deal data, you actually saw a little over 7% stake getting exited. So now what the official notification has come to the exchanges that the promoter group will be picking up close to 2.36% stake from Warburg Pincus at 535 rupees a share, and this particular deal is expected to close soon. In yesterday's block data, the 7% stake was sold at 539 rupees a share, and amongst the top buyers yesterday, you saw HSBC Mutual Fund, you saw Invesco Mutual Fund, Motilal Oswal Fund, as well as Sundaram Mutual Fund. So expect the up move to continue because this is a clean out trade from a pre-investor, which was the overhang on the stock.
Okay, at a time when we've only seen promoters and promoters sell stake in the listed universe. In fact, so far this year, promoters have sold 1 lakh crore rupees, according to data which has been compiled by one of the pink papers. It's good to see that promoters of Kalyan Jewellers have gone out there and purchased stake in the company. But let's get to some more stocks that we are tracking. Vivek, it's still with you for Eris Life and PNB Housing.
Well, more block deals that we saw in yesterday's trading session. First on our list is Eris Life Sciences. So even here, private equity investor Chris Capital, which held stake in the company under Emerald Investments, sold the entire 7.2% stake yesterday at 1,201 rupees a share. The good part is, Infinity Partners picked up the entire stake in yesterday's block deal. The other stock on the radar is PNB Housing. Remember, even day before yesterday, you saw a very large block deal where General Atlantic PE sold close to 5.13% stake. So they exited completely. Yesterday, Asia Investments Fund, Mauritius, they sold a 3% out of the total 5.19% stake that they held in the company. Amongst the top buyers was Government of Singapore. They picked up 0.6% stake. Now, the other names are not yet disclosed. But on the back of this, given the fact that they continue to hold some stake, going with a red because there is a slight overhang on further sale of shares.
Okay, all right, Vivek, thanks so much. So let's quickly recap our list of stocks to watch today. The ones that have positive news around them are Railtel, Powermech, TDS Limited, Jammu and Kashmir Bank, Poly Medicure, Eris Life Sciences and Kalyan Jewellers. The ones that have negative news flow around them are Ambuja Cements, Nykaa and PNB Housing Finance. All right, with that, let's quickly move on. Another important development and a culmination of a long saga, so to speak. Adani Power has finally received the NCLT approval for the acquisition of Lanco Power. We have Lata joining in with the details. Lata, good to have you in the studios. Good morning to you. So I remember we've been tracking this. You've been talking about this right from the time Lanco went into bankruptcy, right? So what are the final details?
Well, it's very clear that power has now become a profitable sector. So deals are getting done. But to stick to the deal at hand, Lanco Amarkantak was in the NCLT, and the Adani Power bid has been declared the winner. The Adanis are paying 4,101 crore against an admitted set of claims of 631 crore. So it's quite clearly a very good deal for the Adanis, and the press release also shows that the amount of revenues in the last 3 years itself is 4,000 crores from the Lanco plant. But who will get this 4,101 crores? The earlier people who had lent to the Lanco power plant. These are PFC, which had 20.1% of the share of the loan, so it should logically get 800 crore. REC 20% of the loan, 800 crores. IDBI 10% of the loan, so 400 crores. IOB 344 crores. Axis 340 crores. PNB 287 crores. LIC 279. Bank of India 180 crore. And a few other banks like Canara Bank, Indian Bank, and even the Edelweiss ARC. Most of these banks, I think all of them, have written off their bad loans. So this goes directly to the profit. And that could be a benefit. But I must admit that I got this from an old Lanco website, the claims that were admitted against it. So the veracity is as per the veracity of that website.
Thank you very much for that. Now let's go across to Manisha for a complete roundup of all the action from the commodity markets overnight. Manisha, what happened while we were sleeping?
Well, we have seen the dollar index gain while we were sleeping, and this is absolutely ahead of the Fed Chair Powell's speech at Jackson Hole today. So the strength in US dollar clearly seems to be weighing onto the dollar. We have seen many of those commodities see a bit of a decline as well. Well, investors have logged in profits from recent gains when it comes to metals. So whether it's precious metals like gold and silver, we've seen gold decline 1% overnight, silver fell 2%. It's a similar situation for copper, zinc, aluminum, steel. Many of these metals, which saw very strong gains in the matter of last 8 or 10 trading sessions, have seen a bit of a profit taking coming in. Clearly, all eyes on the Jackson Hole meeting today. The only couple of areas that I see gains come in is one, the crude oil prices. This is gained because the U.S. inventories have declined and the ceasefire talks really seem to be fizzling out. The other area is the coal prices. The futures in the international markets are now trading at an 8-month highs onto this one. This is also because there is stronger demand and the IEA statement saying that there is expected a stable coal consumption in the next 2 to 3 years despite renewable energy expansion as well. So these 2 to 3 commodities doing well, but apart from everything, everything else has seen decline in volumes, decline in interest, and a bit of a decline in prices also.
Okay, all right, Manisha, thanks a lot for that. Well, for the time being, we'll slip into a short break. On the other side, we'll have Siddharth Khemka, the head retail research at Motilal Oswal Financial Services, who'll get into further fundamental analysis on all the stocks we discussed. Don't go anywhere. Well, all later on, we'll also have a conversation lined up with Kaushal Parekh, the CFO at Metro Brands, to discuss their business outlook. Stay tuned.
Well, the script is out. What is that? After 2 months of speculation, reportage, and the companies talking about being in touch with each other, Zomato's acquisition of Paytm's ticketing business for a little over 2,000 crore is their new bet on the going out business itself. Remember, they've announced a foray into that through their third app, which is District, which could launch anytime in the next few weeks, as per Deepinder Goyal itself. This will be their third app after, of course, the roaring success of both Zomato as well as Blinkit. So to understand what Zomato's game plan here is, how big can this be from a shareholder value creation standpoint, let's take a look at a couple of numbers. The business that they've acquired from Paytm, they had a gross merchandise value of close to 2,000 odd crores. They had a revenue of 297 crores as of FY24 with EBITDA of close to 29 crores itself. Now, these numbers imply at 2,048 crore, the deal was done at a one-time GMV and 7 times sales business, which has an implied take rate of 15% and margins of 1.5% of GMV. What does Zomato plan to do post-acquisition? They intend to transition customer traffic from Paytm Insider, Ticket New, all these apps to District, and also incentivize customers to move to District. So you and I as customers could brace for a lot of offers as well. They're targeting FY26 GOV at over 10,000 crore rupees with rapid growth, which implies a 40% CAGR as well. They also see medium to long-term margin potential of anywhere between 4 to 5% as a percentage of GOV. Additionally, they say further scale will depend on newer use cases beyond just ticketing like shopping, staycations, travel, etc. Now, assuming all of this holds true and using conservative estimates versus the company's own guidance and projections, FY27, the GOV could actually be over 20,000 crore with an EBITDA percentage of 3% of GMV, telling you the absolute EBITDA could be close to around 600 crores. Now, if you just juxtapose the current deal multiples to that itself, which means the business could value itself by over 20,000 crores. That's a 10 to 12 times jump over the 2,000 crore that they've paid for this business. And this does not even account for newer use cases or further synergies and, live event IP valuations, etc. as well. Now, for normal, deals, a 10 to 12 times jump in 2 years seems extremely high. But for Zomato, it's par for course. We've seen that with Blinkit as well. From the price that Zomato paid for Blinkit in 2022, the valuation of Blinkit itself has rallied by over 20 times, with brokerages citing further upside for quick commerce as well. So the short point, the bottom line is that the street expects at least 10 to 12 times valuation extraction from District, which the management has earlier said will be their third major value driver.
Welcome back. Here tuned into Bazaar Morning Call. Well, as promised, let's get in Sid Khemka, head retail research at Motilal Oswal Financial Services, who joins us on the show. Hi, Sid. Happy Friday, and hoping it's going to be a fairly okay trading session, and then we get off to the weekend. Let's discuss a few stocks. Ambuja Cements. The street is going to be looking forward to this large trade that will take place, where the promoter entity, according to sources, is likely to sell 2.8% stake. What's your view on this? Some part of the street is a little bit cautious. They converted shares at around 420 rupees, and now they're looking to sell some shares. But the other part of the street says, well, that's par for the course because they need to deleverage the parent. Your take?
Yeah, good morning, Nigel. Happy Friday to you as well. So I think, yes, as part of the ongoing process where we have seen a lot of managements coming out and kind of reducing their stake, taking in benefit of the bull market that we are currently on, and definitely helping the parentage to deleverage. So overall, if you look at Ambuja from a pure numbers perspective, Q1 was marginally weak. But what we like about Ambuja is that there is a continuous focus on reducing costs to increasing the green power share, logistics optimization, lead distance reduction. And overall, if you look at that, should lead to improvement in profitability. Also, we like the value accretive acquisitions that they have done and the overall ambitious organic plus inorganic expansion plans. So we have a positive view on Ambuja with a buy rating and a target price of 800. We believe any fall in this stock because of the block deals, 5% discount is what the block is at. If the stock falls to that level, it would be a good entry opportunity for investors to get into a cement company which is preparing for the long haul.
Siddharth, hi, morning. What about Kalyan Jewellers? Now, there was a lot of skepticism, right? That even though many things are going right for Kalyan Jewellers, people were watching the stock price, the valuations and saying, hey, has it gone up too much? It's up 400% in the last 15 months. But now that the promoters have come out and purchased stake, about a 2.5% stake at these high valuations after the run-up, it's reinforced confidence in the mind of investors. Would you go out there and buy Kalyan Jewellers?
Yeah, Rima, good morning. So I think it's the same case that we were seeing a repeat of what Titan did for past so many years. A company with a very strong growth trajectory definitely commands a premium valuation. And now with the promoters willing to buy at these levels, this is reverse of what we have seen across the street where promoters are reducing stake and taking in the benefit of the bull market. So definitely gives a shot in the arm for Kalyan Jewellers. What we are expecting is a steady, if you look at in terms of earnings growth, 45% earnings growth for this year and another 35% growth for next year. A very strong growth, far outperforming the market leader Titan. So we also see that it is one of the larger retail chains in India, and the gradual shift towards nationalized players, organized players in jewelry, that trend continues, and Kalyan is a key beneficiary of that. It has a network of 217 stores across, and with that kind of growth and foreign and the promoter buying in, we definitely have a positive view there. Buy rating with a target price of 650.
650 on Kalyan Jewellers. Okay, Siddharth got that. Hi, morning. Since we're talking consumer, let's talk about the other hot consumer stocks. Nykaa as well as Zomato. There's so much going on. I mean, Nykaa, maybe we'll see a block trade today, so some more supply in the market. Zomato, we all know the story. Now they'll be in the ticketing business. Your thoughts and, whether you still see upside on the stocks from where we are?
Yeah, should be. So I think Nykaa came out with good numbers, Q1 numbers, and after that, there was some of the interest in the stock came back. We are seeing that across some of these new age, you can say, the e-commerce companies, with improvement in profitability, there has been a lot of interest. Our pick in that space has been Zomato, continues to do very well in the core food delivery business, very strong growth in the quick commerce business. And now with this acquisition, we believe that it is only going to solidify its overall offerings of a lifestyle kind of a offering where you have food, you have quick commerce, and now you can also offer the entertainment, the going out, the likes of. So it will be a competition to Book My Show, and we believe this is a good acquisition, and the acquisition will be completed by Q2 of the current financial year. So overall, while the valuation might be a bit stressed, but we continue to be positive on Zomato. We have a target price of 300 on there and a buy rating.
Yeah, all right. Very quickly, Sid, before we let you go, I was reading a Jefferies note, and they're talking about Ola in the two-wheeler EV space. They seem to have lost a little bit of market share. What's your view on this? The stock is no longer the 70, 75 rupees that we thought it would be at. It's at around 130 plus. Your view, very quickly.
Yeah, Nigel. So I think the street is definitely excited about the two-wheeler EV space. The penetration is good, and the expectation that this will be one segment where the EV penetration will be much faster. And rightly so, there are others who are the old war horses of the two-wheeler companies have got in with the likes of Hero with its Vida. Bajaj Auto, TVS Motors, they're all getting into the space. So I think this space will get even hotter competition going forward. What we like within the space right now is TVS Motors, which has gained a significant share in the two-wheeler space, and we believe that could continue to do well for TVS Motors. Among the older ones, between the Hero, Bajaj and TVS, we believe TVS has gained a significant share, and that could drive growth for the overall company.
Okay, all right. Good to have you on, Siddharth. Thanks very much for joining, and you have a good day and then a good weekend. With that, let's move ahead. The second half of FY25 will be very strong. That's the word coming in from Metro Brands CFO Kaushal Parekh. Despite a year of muted consumer demand, the company remains quite optimistic on the way ahead. In an exclusive conversation with our colleague Shilpa Ranipeta on the sidelines of the RAI Retail CFO Summit, he added that the company has big plans for the sports and athleisure segment. Take a look.
As we guided in our earnings call, we have seen overall customer sentiment sort of, coming back. In fact, for us, even in Q1, products above 3,000 rupees, which we classify as premium, we saw the percentage of that increasing from 49% to 54%. So that undercurrent in terms of customer shopping behavior is there. We strongly feel H2 would be very strong for this financial year, and that's how for the year as a whole, we should hit that 12 to 15% overall sales CAGR.
I think casualization was the biggest trend that came out of COVID as well. So currently, is that Metro's main focus, and brands like Fila, are they going to be the growth drivers? And if you could sort of maybe give me a figure or put some number to it as to how big do you see these brands being, say maybe by the end of FY25?
See, if you see our overall brand portfolio, we have like 7 brands now: Metro, Mochi, Walkway. These are our own brands. Then we have tie-ups with international companies like Crocs and FitFlop, and both these brands have been doing exceptionally well. Our latest acquisition was Fila, that was in 23, and then we tied up with Foot Locker, which is a multi-brand sports and athleisure outlet. So these are the recent ones. Obviously, our endeavor would be to make sure that all our existing format grow, and we see a huge amount of growth opportunity across all our brand formats. So obviously, that is something that we would not want to let go by. So that is something that we would be completely focusing on. As I said, sports and athleisure we feel is going to be a huge market going forward from here on. You touched upon casualization, right? 10 years back, Metro was broadly a black and brown formal company, and today casual plus sports contributes to more than 60% of whatever we sell. Right. So obviously we always follow what customer wants, and that is where we sort of migrate to. So we'll keep working on all our format and keep growing them. And sports and athleisure is something which we want to set it right for the kind of opportunity that we see going forward. So to answer your question, obviously sports and athleisure, both Fila, Foot Locker will start growing from H2 and FY26 onwards. But along with that, other formats would also grow. Right. So for this these formats to become substantial, it would take some amount of time, because we expect all our formats to grow significantly from here on.
You know, last question with respect to store expansion. Generally, retailers, we saw in the last couple of quarters, given the slowdown, there was a lot of store rationalization that was happening. It always happens, I agree, but then more than usual given the slowdown. And while there is store expansion, the pace of expansion has slowed down. Is Metro looking at store expansion that way, or are you going to continue to go aggressive? And given your focus on the value format also, will most of that happen in tier 2, tier 3 markets?
Whenever we sign a store, we sign it for long term, right? It's not for 1 quarter or a year. It is predominantly for 7 to 9 years to sort of come. So we are very cautious whenever we see euphoria in the market. We have been existing since more than 65 years now. So whenever there is euphoria in the market, we would slow down, because you can't sign deals which will come and bite you maybe 2 years down the line, because these are long-term tenure leases. At the same time, when there is overall pessimism in the market, Metro would be most aggressive among the lot. So that has been our philosophy over the years. Having said that, we opened 15 stores in Q1. We have guided for 225 stores over next 2 financial years, excluding any new stores that we open for Fila. We feel extremely comfortable and confident of achieving that numbers. For this financial year, our target would be to touch or exceed 100 stores. And as I said, right, 225 for next 2 financial years. So logically, for next year, we would target somewhere around 125 stores.
Yeah. And what about for Fila? What's the store plan there?
Fila, we had clearly defined our strategy, because when you take when you do any acquisition, you have to work over cleansing and getting the integration done properly, right? So as we had defined, FY24 was the year of liquidation. Right. FY25 was the year when we want to reset the brand in India, and we plan to predominantly do that by placing Fila within our MBOs and eventually Foot Locker, which we hope to come in H2 of this financial year. Once we start seeing green shoots in terms of customer accepting our merchandise at the price at which it is offered, we would think of opening exclusive brand outlet for Fila, which most probably should happen in FY26.
Interesting one. Well, when we come back, we'll slip into a short break for now. You come back, we'll focus on the technicals of the market. Mitesh and Shrikant will be joining us. Don't go anywhere.
Wonderfully magical is in the air, isn't it? Yeah. We're feeling it here in this arena, but it's spreading all across this country we love. A familiar feeling that's been buried too deep for far too long. You know what I'm talking about. It's the contagious power of hope. America, hope is making a comeback. Kamala Harris is more than ready for this moment. She is one of the most qualified people ever to seek the office of the presidency. And she is one of the most dignified. A tribute to her mother, to my mother, and to your mother too. The embodiment of the stories we tell ourselves about this country. Her story is your story. It's my story. It's the story of the vast majority of Americans trying to build a better life.
Welcome back. Most of the Asian markets are lower today. So Kospi, Hang Seng down about 0.5%. The Taiwanese markets have a cut of about 0.75 of a percentage point. The GIFT Nifty for now is suggesting a flattish start, but after 6 days of gains will be run into any kind of profit booking. Investors, remember, may also choose to stay on the sidelines ahead of that all-important Jackson Hole meeting, which will set cues on the global front. But let's take stock of...
I think that 2.7 crore shares that had to change hands with regard to the promoter entity likely being the seller in that particular deal. Well, that's taken place on Ambuja Cements. Now, this is going to be very, very interesting because there were some shorts in the system as well. This block has taken place in pre-opening. So, you know, those shorts could get squeezed out. So we'll have to see how the stock reacts towards the end of trade. The last 10 minutes, that's telling you the picture. There was a bit of a sniff that maybe this could take place in pre-open. And that's precisely what's happened. So those shorts get squeezed out now. And let's see how the stock reacts. In all probability, you know, it'll open up, gap up, you know, because those shorts are stuck in the system. The deal pricing we'll wait by, but we understand that it was likely to take place closer to around 600 rupees per share. In fact, Ambuja Cements is going to be the one in focus, and you know, as the promoter entity is looking to sell stake. In fact, I quizzed the CFO, Mr. Vinod Baheti, on the same. Let's hear out what he had to tell me just 2 days ago at the Motilal Oswal conference. There is this rumor or this buzz that the promoter entity, after increasing stake in the company, that's Adani, they could be looking at going ahead and maybe selling some stake. There is some buzz in the market, so I wanted you to clear the air on that. Either ACC or Ambuja. Ambuja is where the buzz is, that there is potentially a large block. You want to deny it? You want to confirm it? Is that a possibility?
Well, I would not comment anything on that because that will be directly looked upon by the family office. So at the business level, at Ambuja ACC and Sanghi level, I would be able to answer all your questions.
So I should not take that as a denial or a confirmation.
I would say that I'm not aware of it, and there would be appropriate people to answer that.
Well, a large trade of more than 2 crore shares has also happened in the block window for Nykaa. That's about 0.7% of the equity. Vivek had learned from sources that one of the investors, he's not a promoter, group entity, but Mr. Harinder Pal Singh is likely to sell a 1.4% stake in Nykaa. In the block deal window in pre-open, we've seen about 0.7% of the equity change hands. But back to tracking the market technicals for today's trading session. Mitesh and Shrikant Chauhan of Kotak Securities are with us on the show. Gentlemen, morning. Thank you for joining in. Mitesh, you go first. How do you see the trade pan out?
Good morning. So, we've been maintaining a positive stance for the last couple of days, and now I think the Nifty is heading towards that first gap area which happened on the 2nd of August. I think around this 24,850-900 mark, you will see a lot of supply emerge. So in that sense, the Nifty might be slightly subdued at higher levels. You will see some profit booking happening. What I would want to keep a watch upon, and I've been stressing on this point for the last 3-4 days, is the Bank Nifty sustaining above 51,000. Yesterday also we did try and got past that 51,000 level on an intraday basis, but it was only by 50 points and we didn't get a closing on the 2-hourly chart. So I think if that can happen, then the Bank Nifty possibly could be an interesting trade. So buy above if it closes above 51,000 for about half an hour and keep a 150 point stop loss. Look for 51, 450, 400 as the first target area, though 51, 800 is my eventual target in the short term.
All right, got that. Mitesh, stay on. We'll just come back to you. Shrikant Chauhan is also with us. Shrikant, hi, morning. How are you looking at things? What's the setup like?
Yeah, good morning, Survi. Good morning, everyone. I think, see, we are again back at the same levels. And at 25,000 when the market was there some few days back, that time also there was confusion that how the Fed will go for cutting its interest rates and whether the US is going into recession or not. So we are again at same levels, and till this particular uncertainty is not like getting clear, we are going to see the market in a range. And at these levels, we are seeing some cautious sort of activity. So I'm of the view that in case if there is any correction in today's date, then close to 24,750, 24,700, the market is having excellent support. So close to those levels, we should look for taking some long bets. We can keep stop loss at 24,600 because now the supports have shifted from 24,400 to 24,600 levels. Similarly, for the Bank Nifty, there also we are seeing shifting of supports to 50,300 levels. And during the day, if we see any correction close to 50,700 levels, then there we should look for taking long bets. But yes, broadly, I am of the view that we should look for taking bets if there is any correction in the market.
Okay, got it. Let's also talk about stocks then. Mitesh, what is your list looking like? What will you go with today?
Morning, Surbi. I have more of buy calls today. The first one is a buy on Tata Consumer with a stop at 1184 for targets of 1250. A buy on Indian Hotels. Here I would recommend a stop at 630 and look for targets of 680. And IDFC First Bank, the stock has corrected a lot and now is showing first signs of reversal. So let's see if it can get back to about levels of 81, 82. That's the target, and stop loss here should be about 73.5. One sell call, that's IGL. Keep a stop at 551.5. Look for declines to about 520 levels.
Okay, 3 buys, 1 sell for Mitesh. Shrikant, what do you have on your plate today?
So I would like to go with a few pharma companies. There we are seeing good amount of buying attraction. In that we like Biocon, we like Natco. But on Thursday, we saw some specific buying interest in Apollo Hospital, which is currently around 68.30, 68.40 levels. And it is very close to its previous all-time highest level. So from here, the stock can move to the levels of 7,000, 7,050. That's the overall view. So it's a buy at current levels with a stop loss close to 6,780. And the other stock which we like is CESC, Kolkata Electric Supply, which is currently closing at currently trading at 194, 193 levels. And it is also very close to its breakout level. So from here, the next level to watch out for would be 205. We can keep stop loss around 187.
Okay, all right, gentlemen, thanks very much for the calls. We'll come back to you a little later. Right now, a quick break. And then we'll look at the pre-opening trades, which will be kicking off at 9 o'clock. Also with us would be Mangesh Bhadang of Centrum Broking. Let's focus on the cement space and, of course, the big block that we've seen in Ambuja Cements and the outlook ahead for the company.
See Barack Hussein Obama last night take little shots? He was taking shots at your president. And so was Michelle. You know, they always say, sure, please stick to policy, don't get personal. And yet they're getting personal all night long, these people. Do I still have to stick to policy? The Harris-Biden administration has been caught fraudulently manipulating job statistics to hide the true extent of the economic ruin that they've inflicted on America. The new data from the Bureau of Labor Statistics shows that the administration padded the numbers with an extra, listen to this one, 818,000 jobs that don't exist. So they said they existed, and they never did exist. They built them up so that they could say what a wonderful job they're doing. No, we've never had numbers like this. They don't exist.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate.
Welcome back. The first rate from the pre-opening sessions have come in and it's in the green, but we'll wait for it to settle down. The Nifty right now is showing a pop of close to about 0.5%. Avni Bhatt, Senior VP, Equity Derivatives Research and JM Financial Services is now with us on the show. Avni, it's been very sideways for a market and we've just been trading in a tight, narrow band of about 80 to 120, 30 points for the last couple of days. Are you sensing a bigger move coming through on the indices, and what would the trade be?
Good morning, everyone. Very good morning to all the viewers as well. So yes, definitely what gives me comfort is the fall in India VIX. It has come down to almost 13%, and that's a very comforting factor. So although the move is slow, the bullish trend continues, and we believe that it's just about a waiting game. When the breakout happens and we see Nifty and Bank Nifty scale higher from here on, from current levels also. So as far as levels are concerned, I think 24,960 is one area where we had seen the first gap down opening on Nifty, and that will be a resistance level. Once that is crossed, 25,000 is just going to be a psychological resistance. We should be seeing Nifty going up to around 25,200. Support base is forming well at around 24,650 and 24,500 levels. And similarly on Bank Nifty, 51,100 is a very crucial level. And in case if we see a close between 51,000 to 51,100, then the bullish momentum will continue next week up to around 52,000. Support base has come up to a good level of 50,300. And intraday supports today are at around 50,700. So any dip close to these support levels, we should be using it as a buying opportunity.
All right, Avni, you got a couple of stocks as well for us?
Yes, definitely. So, Nigel, the first stock that I would like to go for is Godrej Consumer Products. After a decent correction from 1,500 to 1,360, stock underwent a good consolidation. And as on yesterday, after 8 days of trading below the short-term moving averages, it bounced back and closed above both the 50-day and the 20-day exponential moving averages. Volumes were good. Open interest addition of almost 7% plus were seen in futures. So I think the stock is ripe to move higher up to around 15-20 levels. So I would recommend a buy in this particular stock. The first target would be 1480. I wouldn't say target, it's just a resistance level where it may consolidate for some time and then move up to the ultimate target of 1520. And since our view is pretty bullish on the banking sector, I would like to go for one of the banking stocks, which is ICICI Bank. So after nearly 12 days of consolidation and sideways price action below the short-term moving averages, the stock has shown some green shoots of reversal by closing above the 20-day exponential moving average. So ICICI Bank also, futures also witnessed around 2.2% addition and also a surge in delivery volumes. So ICICI Bank becomes a good buy today in case if we see some dip close to around 1180, it will be a very good buying opportunity. For a target of 1250 on the upside and keeping a stop loss of 1158.
Thanks a lot, Avni, for joining in and giving us your take on the index as well as both those two stocks, Godrej Consumer as well as ICICI Bank. But let's focus on the cement space. And to help us out, we have Mangesh Badang, the Senior Vice President Research at Centrum Broking. Hi, Mangesh. Good morning and good to see you in as always. Mangesh, a couple of days ago, we had asked the CFO of Ambuja Cements about this possible block trade, and it's in fact taken place. And sources indicate that in all probability, it will be the promoter entity that's sold. What's your view? Because some part of the street was a little bit cautious. They converted those warrants at 420. They're looking to sell some stake at more than 600 rupees odd. Give and take everything, your view on Ambuja Cements from these levels.
Good morning, Nigel, and as always, thanks for having me. Any stake sale by promoters at higher levels is always looked at, in fact, it is not looked at very positively by the markets. But given the way things are, we have seen so many deals happening. I think the overall impact on the stock has been limited in most of the times. I think yesterday the announcement was, or the understanding was, the deal will happen at 5% discount to market price, which was a very surprising thing. But I think that as the deals have just gone through, I think it has happened at around 625. So, at least on that pricing front, it is slightly higher than what the earlier estimate was. So, if you look at this overall view in terms of how the deal has happened, what we see is that the promoter entity is actually trying to reduce some of the debt burden that they would have, and that would be looked at over a longer term. I think that is a wise thing to do for them. There is definitely this thing that they had taken the preferential warrants at 419 rupees. But if you look at the time and the amount of money that they raised through deal, and that has been utilized by the company, so that money went into the company. And this is from the market, they are taking this up. So I don't see too much wrong in it. And in terms of our view, we have a positive view on the stock.
Okay, you have a positive view out there. Mangesh, earlier today, we had made this point as well. As per what feedback suggested, is that there was fair bit of demand out there. And if it takes place in the block window, then those shorts will have to scramble for cover. And that's why in pre-open, if we see, the stock is likely to open up, gap up with close to around 3% because those shorts are going to get squeezed out. That aside, you're positive on Ambuja Cement. Just a quick question. They have been talking about growing volumes, cost cutting as well. And they also hinted that maybe in the next few years, there could be one listed entity, Adani Cement, with all the companies, part of the same group. What is your view? They've already been talking about synergy benefits. Will this still add something? If yes, could you quantify it?
Most of the synergy benefits in terms of cost reductions or OPEX on OPEX front are largely in place. They are working out of the same office. I think the merger over a longer term would benefit in terms of creating a larger entity. So going to the capital markets or raising debt in future, that becomes easier. Secondly, the dealers and everyone, for all of them, all the other entities that the company deals with, if they have a single entity, I think it becomes much easier. I think that was probably the way, and a lot of these common administrative works will go with. So that is something that probably should be at the back of their mind. They have Sanghi, which is also a listed entity, as well as ACC. So having three listed cement entities for one business doesn't make sense, and that's why they would go for this merger. Having said that, there are certain cost elements that one needs to look at. Those are the stamp duty when you transfer the mines, when you consolidate the entities.
Okay, all right. So in operational performance, it will be a smaller, smaller saving is what we could look at. Yes. Got it. Mangesh, the other burning question is whether or not a price hike can finally be absorbed. All through the week, various brokerages are saying that it's been hiked by 10, 15, 20 rupees. I also asked Ambuja Cement CFO. He said these are par for the course. Nothing big is going to happen till the monsoon, gets over. But what's your feedback? I understand that 10 to 20 rupees was what they tried to push through. How much of it has been absorbed according to you?
Yeah, so early days in terms of assuming, in terms of how much it has been absorbed till now. So South and East are the two key regions where, I believe that price hike is needed because the kind of prices prevailing right now, it is very difficult to generate a relatively higher EBITDA per ton for there. So this would be like, I would call it as a recovery instead of a price hike. So even if there is a 10 to 15 rupees price hike, I don't see that your profitability is going to be higher than what they delivered in the first quarter. So I think this is something which is necessary, which the industry is trying to get it through. If it sustains for 6-7 more days, I think that is something that is need to be watched out for. But in my opinion, it has not gone through in South.
Got it. Very quickly, your top buy and sell calls from the cement pack.
Yeah, so we have a buy on Ambuja and Birla Corp. And third one I would like to add is Nuvoco Vistas. So rest we have neutral or sell rating. And in terms of specific stocks, I think I would say Heidelberg, Ramco and Star based on either valuations or balance sheet issues. We have a sell or a neutral.
Okay, all right, got that. Helpful conversation. Thanks very much, Mangesh, for putting things in perspective. By the way, both the major stocks in focus today, Nykaa and Ambuja, in which these large trades have happened, both are up and about. And that's telling you the market's mood, right? If the business is good and if there's supply coming in through the block, whoever is selling, even if the promoter is selling, the market's willing to lap up that supply. It's a very different kind of a market that we're in. Block trades are no longer seen as a big negative, cast in stone. It really depends on business to business and the stock positioning. Anyway, speaking of positioning, let's look at the Nifty in the pre-open. About 33 points higher, not too bad. Some of the stocks on the upside include Hindalco, Grasim, Bajaj Auto. So these are the gainers. By the way, Reliance is working well because some of the brokerage notes that are, looking at Jio after looking at the annual report, they're pointing towards some more upsides perhaps, and reading through the details quite positively. So that Jio impact on Reliance seems to be working well. 3,000 is the price as we see it. Let's quickly go across and get our technical calls going. We have Mitesh back with us. Mitesh, 910, which stock will you go with?
Yeah. Sorry. I'll go with the long on Indian Hotels for targets of around 680.
Okay, Indian Hotels on your radar. Nimesh is now with us for the standout brokerage report of the day. Nimesh.
Hi, morning, Rima sir. Today's standout is on two-wheelers. Interestingly, JP Morgan has today upgraded TVS Motors to overweight from neutral, and they've raised the target price to 3050. Even UBS has today put out a note on TVS Motors, and they've also raised the target price to 3200. JP Morgan has also raised the target price on Bajaj Auto to 11,225. They have an overweight stance on Bajaj Auto as well. Interestingly, they have downgraded Hero Motors to neutral now, and they have a target price of 50 to 30. And their caution on Eicher Motors with a neutral rating and a target price of 45.10. Now, on the overall two-wheeler industry, JP Morgan believes, and they say that they are more attractive segment. Two-wheeler is a more attractive segment within the auto space. They expect two-wheeler growth to be much faster than the PV growth. Electrification has picked up, but it's at a very gradual pace, so they do not expect any margin pressures for the incumbents, at least in the near term. And for TVS, they believe that the market share gain is going to continue, and on back of that, they've raised the EPS estimates for FY26, FY27 by almost 5 to 18%. For Bajaj Auto, JP Morgan believes that it's a potent combination of ability and intent. So they've raised the EPS estimates by 3 to 5%. A good note on the two-wheelers with upgrade on both TVS Motors and a target price rise on Bajaj Auto by JP Morgan.
On TVS Motors, they see a 10% upside from current levels. Currently, TVS is at 2760 in pre-open, and their target price is at 3,050. But another big mover in the large cap space is Reliance Industries. Potentially, Reliance Industries has opened in the green in pre-opening. Here, Bernstein today has raised the target price to 3,440. This is ahead of the AGM, which is on the 29th. That's next week. The company had released the annual report. So based on their study of the annual report, Bernstein has raised the target price to 3,440, outperform rating. Bullish on Jio. So they've gone ahead and raised the target multiple for the Jio business because Jio is focusing on monetization now that the 5G rollout is completed. And recently you had that big tariff hike, which Jio itself had initiated. So they're expecting a 16% revenue growth for Jio over the next 3 years. EBITDA margin growth should be about 20%. They expect market shares gains to continue as the subscriber base crosses 500 million subscribers, and they expect Jio to command 47% of their revenue share by FY25. FY25. CLSA too is bullish on Reliance Industries. Their target price is 3,300. They also concur the next leg of growth will come in from 5G monetization and the broadband ramp up for Reliance Jio.
Okay, so Reliance in focus. Reliance is definitely looking like it will start on the optimistic side, about 0.5% up on Reliance Industries. By the way, the stocks that Nimesh was just highlighting in in that standout brokerage, the JPM note on two-wheelers, both those stocks that JPM is liking, Bajaj as well as TVS Motors, both are up, and the rub-off is already seen in the pre-open. TVS is up about 2% and Bajaj is up about 0.5%. Remember Bajaj, I mean, there are the other stories as well, the source-based information that we got you yesterday, that Bajaj perhaps is going to get the PLI approval for all of its products. It's also trying to convince the GST council to look at a GST rationalization or reduction basically on EV two-wheelers. That, of course, is good for the entire industry. But anyway, I mean, these are some of the other news points surrounding Bajaj, and most of them have been taken quite favorably by the market. Just about 4 seconds to go. So about a 30-point pop is what we are getting at the start. Off we go. So let's look at the movers and shakers. On the upside, Hindalco, Grasim and Bajaj Auto. These are the top 3 winners on the Nifty. By the way, we started with that 30-point, but within the first take, I mean, there's a bit of a sell-off as well. The Nifty is now up only about 9 to 10 points. So the global overhang and caution ahead of Jackson Hole seems to be kind of weighing in as we get into the first couple of minutes. So what is pulling the market on the downside? I can see Infosys and TCS straight away. So these are your big ones that are not on the positive side of the screen. Some of the bigger banks, Axis, Kotak Mahindra on the downside as well. HDFC Bank is lower by about 0.25%. So basically IT and banking not very hot as we start things off. Bank Nifty is about 60 points lower, but it's also flipping very quickly. So let's see. But yes, IT and banks, 2 watch points. Right now the mood is a little cautious around both of these. But some of the auto names, along with Bajaj Auto, Tata Motors on the upside as well. There is some buying in Reliance, like we've been discussing, 0.5% up. So it's fairly split and absolutely flat on the Nifty to begin with.
Well, that's right. You know, a few stocks that are in focus. Maybe Ola Electric is reacting to that note coming from Jefferies, where their market share has tapered down a little bit. So the stock is down close to 2.5%. It's all just had a big run yesterday as well. It came off the high point of the day. So that's one of the movers out there. Jain Irrigation is one of the top volume movers. It's up close to around 5%. So big move is what we are seeing. Morpin Labs continues its uptrend. It's up close to around 3%. They raised some money via the QIP route a couple of weeks or so ago. And from there, the stock has done quite well. Even yesterday, the stock was up and about in trade. Ambuja Cements, that's the one in focus. The shots are getting trapped on the wrong side. The block floor price was at a big discount in comparison to yesterday's close, but the block took place in pre-open. So that's why, you know, the shots are getting squeezed out as we speak. Sadbhav Engineering, yesterday as well, the stock was up 10%. Today as well, it's up close to 9%. So big up move is what we're seeing out there. From the F&O pack, the frontline names that are moving quite well. I think TVS Motors had opened up gap up 3% higher on that one. Crompton is up close to 100%. On the flip side, Deepak Nitrite and Firstsource giving back some part of what they've put on in the last couple of weeks.
Nykaa too is up nearly 3%. Go Digit, I think Jefferies has initiated coverage on Go Digit with a buy call. Citi too says that in the non-life insurance space, Go Digit is one of their preferred picks, and they've put a target price of 425. So that stock opens up with a gain of about 3%. Realtel, small order win of about 52 odd crore, but that pushes the stock up by nearly 3%, and now its year-to-date rally stands about 45%. Kalyan Jewellers continues to see buying. Poly Medicure with the conclusion of that 1,000 crore QIP, and lots of marquee investors have bought in it. So Poly Medicure has a gain going for itself. Zomato closed in the red yesterday after buying Paytm's ticketing business for about 2,000 crore rupees. But today Zomato has some green, at least in the early morning tick. Sorry, excuse me. Outside of that, you've got an NIIT Limited, which pops up on the volume charts. You've got Raymond, which is up 4.5%. There is news flow surrounding Jain Irrigation, so that's another big mover. Vardhaman Textile. Again, these are stocks which you don't generally see on the volume charts early on in the first few minutes, but these stocks are higher. On the way down, you've got Firstsource, which continues to correct, I think, second or third day in a row. IEX in the F&O band, so IEX is down nearly 1.5%. And in the frontline space, just keep your eye on HDFC Bank. That's down about 0.2%. HDFC Bank was planning to sell about a 20% stake in HDB Financial, one of its subsidiaries. It's an NBFC to a Japanese company, but it looks like that's hit a bit of a roadblock, according to Pink Papers, and HDFC Bank has opened in the red.
And just some more names to add from the broader market. Senco, 3.5% on the upside. The rub-off continues. And by the way, Kalyan itself on 3.5% after yesterday's 78% move. So the jewelers are sparkling. The other name to look out for is Office. Office is this recent listing. The stock's already doubled in the last 2.5-3 months. Yesterday, they announced that they're expanding further in Bengaluru, adding some more space there. The stock was up yesterday. It's building on that momentum this morning, almost 4%, 5% higher on Office as well. So these are some of the early movers. Adani Power, which has finally concluded that transaction with Lanco in the NCLT, getting that approval, about 2% up on that stock as well. TVS Motors, 3.5% higher. So yeah, it's a good morning as far as the broader market goes, but at the headline level, absolutely flat and consolidating for the time being. Andrew Holland, Chief Executive Officer at Avendus Alternate Strategies, is with us on the show this morning. Andrew, great to have you on. Happy Friday to you. So lots to discuss. and a lot going on, right? A month can be a very long time, I guess, in this kind of a market, because we started August with this big, scare around the carry trade, the scare around the U.S. economy itself, and now here we are with all eyes on Jackson Hole. The volatility has settled to an extent, but the question is, can the upside continue in the one-track way that the market has gotten almost used to?
Yeah, that's what we're all kind of thinking about, right, in terms of where the market heads from here. So I think there's a few things. One, what will come out from the Jackson Hole meetings today. I think we all kind of working on the basis now that an interest rate cut in September is coming. It's really, is it 25 or 50? The data suggests that it should be around 25. All that kind of problems you talked about at the beginning of the month have ebbed away, and the economy remains kind of resilient in the US. So that kind of Goldilocks scenario still stands. But I think the markets will continue to worry about, is the jobs data showing a bigger slowdown coming? And should the Fed do 50 basis points? Now, I think they should front run the kind of interest rate cycle. I think they should do 50 basis points, albeit that our base case is 25. I think that would give the market that kind of extra fillip that the Fed is ahead of the curve this time. And I think that's the key. The market continues to worry about whether the Fed is behind the curve. And you saw, as well as I did, all those kind of revisions to the jobs data a few days ago. I mean, those are big changes. So I'm not quite sure that the data that they're following is really giving them a good indicator of where the economy is heading. And I think that's what the market will grapple with. So if it's 50, I think markets continue to move higher, not just for globally, but for India too.
Andrew, completely take your point. And guys, just to jog our memories, the revision that Andrew is speaking about, that revision was 818,000 jobs revised downwards. That's what, I was actually a little surprised the market wasn't shaken up yesterday when that number came out. Maybe the impact is playing out with a lag, because that's the biggest revision in US payrolls that we've seen since 2009. I mean, you can revise by a couple of hundred here and there. This was massive, 818,000. So yeah, let's see how it plays out from here.
Well, right now, at least, the Fed CME tool suggests a 25% probability that we will see a 50 basis points rate cut in the September 17th to 18th meeting. Andrew, morning. So what's the best way to construct a portfolio in India now? Because it appears the easy phase of money making is behind. Markets have been consolidating for the last couple of days. There are voices which suggest that mid and small cap, and you're in that camp too, that valuations have just gotten a bit overheated when it comes to the broader market. And it's time now to perhaps focus on, making money, but also preserving capital and, diminishing the kind of risk you take to make that money. So what's the best way to construct a portfolio in India?
Well, I mean, obviously, the way we think about it is that, we continue to play on the themes that we think will, play out over a longer period, because that's where you're going to continue to see the earnings momentum, not just for the next 2 quarters or 3 quarters, but for the next 2 to 3 years. So again, that falls under that defense, renewables, CapEx spending kind of scenario. So I think, as soon as those orders start to be awarded, I think you'll see in the next fillip upwards for these share prices. But the other trends which we talked about before, the electronics manufacturing sector, hospitality, and premiumization in beverages, those are themes that are just not going to go away from you over the longer period. So that's how I'd kind of look to construct the kind of more longer term long-only portfolio, and then look for opportunities which the market presents you in terms of you help get the momentum going. So if the interest rate cycle is now starting to fall, it should be good for our banking sector in India if the RBI follows suit. And of course, we'll all be thinking about October at that next interest rate policy meeting, whether we could see a kind of reduction in interest rates here in India. And that would be, I think, the fillip for the banking sector to move the index higher. And it's a big weightage, and it's done absolutely nothing for a very long time. So I think whilst our patience is wearing out a little bit for the sector to perform, this could be the catalyst for the sector. So that's a kind of a more longer term, but shorter term kind of catalyst for the banking sector.
All right. Hi, Andrew. Good morning. Good to see you, and as always. And from the banking space, preference would lean towards the private, or you still believe the PSUs have something to offer?
No, I think if you're taking the view that interest rates will fall, that's going to be good for a lot of the banks in terms of their bond holdings and M2M. So that falls both for the private and the PSU bank. So I think if you're playing this, you play the whole sector in the short term, and then see which ones have outperformed, and then do your kind of reallocation between private and PSU banks.
Okay, all right. Since you mentioned defense, renewables, as well as power, what kind of exposure do you all have to this space? Because that's clearly the sector, as you mentioned, there's going to be a lot of capital expenditure, a lot of investor interest out there. But valuations, well, on some of these counters have gone through the roof. Your exposure to these spaces right now, and will you increase?
No, I mean, we've reduced, obviously, because of what you've said. I think the next catalyst, as I mentioned previously, will now be the awarding of more contracts. And I expect that will happen from probably kind of next month onwards to the end of the year. And I think that's going to be the next leg. My concern is always execution, and that's maybe down the road. But until the order... If orders dry up, that's when I think the valuations will start to fall, because I think execution is always a little bit more difficult. But for the time being, for the next 1 to 2 years, I expect that those orders will continue to flow very strongly into these sectors.
You said you've brought down your exposure to these stocks. By how much?
It depends on the stock, and I obviously can't give a portfolio stance away in terms of individual stocks, but we move around within the themes. Obviously, if you're feeling that some of the themes are not have taken a back seat compared to others, then you can shift across. So hospitality is probably where we're a little bit more excited at the moment.
Okay, Andrew, I wanted to ask you about the two-wheeler space, because suddenly that's getting plenty of attention. TVS has done a new launch. The stock is one of the top gainers today. Ola Electric, did you all participate? Do you have a view out there? What's the preference in the two-wheeler space?
Yeah, individual stocks is all different, but I think in terms of Ola's listing, I think we're all surprised at where the share price is. But it's obviously kind of highlighted some of the undervaluations of the other two-wheeler companies in this sector who also have exposure in the EV sector. So I think, if anything, either one share price is telling you that the overall sector is undervalued, or there's some catch up to do, or the other way around.
Okay, Andrew, just to go back to that point on banks and financials, if you could elaborate on that, because there's this huge debate raging around deposits, right? Whether it's becoming more and more difficult for banks to access that cheap source of funding, and whether margins will come under pressure, because the narrative can be painted in a very bleak way if you're a bear, but you don't seem to think so. So just explain the thought process. And also, apart from banks, whether it's capital market related stocks which have had a great run, whether insurers these days, I mean, they're hitting fresh all-time highs. So what else would you look at in financials, and why?
So I think on the banks, I mean, you're correct. I mean, there's no catalyst for the banking sector, because we all know NIMs are under pressure. I mean, there's lots of reports going around at the moment talking about, the age profile of people in the banking deposit system. But there's other products out there, and we talked about this before, like the arbitrage funds, where, the yields are higher than you can get in fixed deposits, but you're taxed at a mutual fund taxation. And that's obviously grown very, very, very strongly, and it's taken money away, particularly for those more kind of savvy investors in the markets who can see that these yields are there, and can take daily liquidity or hold it for more than a year. So I think that's part of the problem. Taxation for fixed deposits is a lot higher than other market instruments. So that's a passing phase. Obviously, that will change over time. But what I'm saying is that I think the catalyst has got to be interest rate cycle starting to turn for the banks, which will mean that their bond holdings give you some very huge mark-to-market gains. And obviously, the interest rate environment falling, the economy will start to pick up, and then they can start lending, and deposits will start to continue to grow. So that's the story. I like this story better than like the other stories in terms of insurance or asset management companies. I think they've all had a great run.
Okay, got it. Understood that point. Andrew, great chatting as always. Thank you so much for joining in. You have a good Friday and a good weekend ahead as well. We look forward to the next call soon. Well, speaking of financials, let's focus on one company from that space. Muthoot Finance is the one that we have our eye on. Now, Muthoot reported, a strong growth in assets under management in the first quarter. But there are some issues around asset quality. And then, of course, the larger question is how much more growth, looking at what's happening in the gold markets as well. We have with us Mr. George Alexander Muthoot, MD of Muthoot Finance. Great to have you, sir. Thanks for joining us this morning. So, I want to start right there because while growth has been phenomenal, and tell us how much of that is just organic growth and how much the impact, because some of your rivals are dealing with regulatory issues. So just tell us that. But I think the bigger question that the market has is this deterioration in asset quality. And for the benefit of our viewers, let's just pull up the gross NPA levels data. Because at the end of the first quarter, GNPA is now reaching 3.98%. That's almost coming up to 4%. Quite a bit of that is actually because of the MFI business. Let's put up the MFI numbers as well if we can. For Belstar MFI, the gross NPA level has moved to 2.36 versus 1.62 in the previous quarter. So we need to understand, sir, what's happening with asset quality. Is it only MFI? Is it elsewhere? And what can you guide on this?
Okay, thank you and good morning. So we are both on the same track when we say growth is there. We have seen good growth in the assets under management. I'm talking about the gold loan business. The gold loan business, the gold loan growth has been quite good. First quarter, there was a growth of 11% in the gold loan business alone. So that should be a good growth. And we see continued momentum on that in the coming months also, these months also. So we are on track for a good performance this year. So about you are concerned, or rather there were some concerns relating the asset quality. The 3.99 gross NP you see is 99% on the gold loans business, because gold loan constitutes about 80,000 crores. The MFI is only 10,000 crores, and the deterioration in the asset quality in the MFI is only 0.3% or 0.4%. That's insignificant. But coming to gold loan, when we say the asset quality, we looked at the numbers here, and the NPA, the amounts of the NPA gold loan, the loan to value is only 54%. So we are fully in the money. Even if you include the interest, we are fully in the money, and not even a rupee of that will be lost. It is just that we give more time to the customer to repay the loan instead of auctioning it. The option for us was when it becomes an NPA, because after 90 days or 1 year, it becomes an NPA. So we are actually helping the customer, rather supporting the customer and probably giving him some more time. So if you give 3 or 4 months time, many of them will come and take back. These loans are not old loans. These are all changing. So every time you see the NPA number, is a new number. Those you see as NPA now, after 3 months, it becomes closed. It is just that we are supporting the customer.
So understood your point, but I must ask you a little more on this. Now, your provisions have also moved up. So clearly you're sensing, is there no rise in provisions?
The rise in provision is because NPA, whenever there is NPA, we have to show a rise in provision. But of course, there's a standard asset provision also, because the loan growth has also been 8,000 crores this year. So on that also, there's a standard asset provisioning. So both are the provision.
So the question is, why do you think, and you will know your customer best, why is this happening? Where is the stress? Why is there a delay or default in payments? And you said you're willing to handhold for a couple of months. I mean, by when do you expect the situation to start stabilizing, or when will you take the call to start auctioning? I mean, I'm just trying to understand how long why this is happening at a behavioral granular level, and by when will you either start auctioning or expect repayment? So when should we expect an improvement on asset quality?
See, the asset quality has not changed. It is only the NPA, these are technical NPAs. The asset quality is still good, 100%, 110% good. So there is nothing wrong with the asset quality. It's only that we are giving more time. See, we would like to support the customer. And why do people insist that we should auction the gold quickly? Why you want to auction the gold? Customers' gold, these are all ornaments. These are lifelong savings of the people. If you can, give them more time. So we have been giving them time. We have never faced any problem with that. So if we at any time we want, we can auction all the gold. But then it will be, and we'll have to refund money to the customer because we are having too much of collateral. So if you get 100 rupees and our total dues is only 90, we have to return the 10 rupees. And the customer will ask, why did you auction my gold? We are in the money. You could have given me a little more time. That is exactly what we are doing. See, that is why customers take a gold loan. They get little more time. It is not an EMI loan. So when they have some issues, they have some cash flow problems. That is why they're taking a gold loan. And if it extends, we give them more time. 3 months, 4 months, 5 months. After that, they'll come and take. Even if they don't take, we auction it.
What is the level, sir? So while we understand the thought process, just the number, a level of gross NPA that you are targeting by the end of the year.
See, again, NPA is never a problem. We can go even up to 5%, but then we will try to maintain this at least 3-4% itself. That's what we would like to maintain. But then it will mean that we'll have to auction a little faster. I don't think so. It is definitely,
that's what you want to do.
It is not in our heart to auction the gold.
Fair enough. Got that. So I just want to get back to the point about growth now. So you're saying in Q1, you had an 11% quarter-on-quarter revenue growth and 25% on a year-on-year basis. You're saying growth rates have continued in July and August. So for the full year, do you think we can anticipate a 20% kind of an AUM growth? And secondly, I think you've been on record with some of the investors saying competition has come down in the market. So could you elaborate on that?
So, Airtel, we have been always giving guidance for 15% growth. Over the last 7-8 years, we have always been giving guidance for 15%. Quite often, we are able to do much better. Consider this as also like that. And about the revision in the guidance, probably next quarter after Q2 results, we will think of giving a guidance of the revision in the guidance. So we don't want to revise the guidance now, just after 1 quarter. We'll just come to the half year. So after 2, we'll revise the guidance, seeing how things are moving in the second quarter
Fair
also.
enough. And on competition?
The question is about competition. Yes, I have also been seeing the very aggressive growth of banks, PSU banks, especially PSU banks, etc., on the gold loan has slightly waned. That means they are not that aggressive. They are still growing, but they are not aggressive as they were 3-4 months back or 2 quarters back.
Okay, all right. Hi, Mr. Muthoot. Good morning, and thanks a lot for joining in. Well, we'll be waiting for that revision close to Q2 because the start has been good, and one of the competitors are, they have been pushed back. I mean, wrapped on the knuckle. So we'll wait for that. Let's talk about the NIMs then. You had indicated that in fact the cost of borrowing will go up a little bit. So in Q2, in comparison to Q1, how much will the cost of borrowing go up, and what does it mean for your NIMs?
So we will try to maintain the NIMs. The NIMs we have is about 10% plus or minus maybe 0.5%. That's the NIMs we have. We will maintain that NIMs. But if the borrowing cost is going up, as I think maybe some of the borrowing cost, if it is very minor, we will absorb it. If it is going up higher, then we will pass it on to the customer. Because although when a customer borrows from any other place, if the interest is going up, he wouldn't mind paying us also high interest. So we try to absorb it as far as possible. And then maybe if it is not within our reach, we will pass it on to the customer. But we will maintain the NIM at the present NIM.
All right. It was around 11.5%. Your yield in the first quarter was around 18.3%. Also, you'll maintain it at those levels, right?
Yeah.
All right. Let's focus on the smaller part of your business, which is the MFI business. Belstar IPO, that's something Street has been looking forward to. Is it on the cards sometime in this year?
It's still on the cards. We're not in that much of a hurry, though, because it is a 100% subsidiary of Muthoot, and we have sufficient capital in Muthoot itself to support them, even if the IPO is delayed. So we'll wait for the IPO. Probably in the next 1 year, we should be able to do it. So.
Within 1 year, we should have that Belstar long-awaited MFI IPO that hits the market, right?
Yes.
Okay, what about the asset quality out there? That deteriorated a little bit and your AUM declined as well. So for this part of the business, which is only 10% of your total AUM, what's the outlook on both these two parameters, AUM growth as well as asset quality?
Yeah, the AUM, the last year was quite good for the AUM. Now everybody is on a, what should I say, a consolidation mode, collections, recoveries, etc. Not only Belstar, all the other microfinance are on the collection mode. So that must have been one of the reasons the asset, the AUM has, what should I say, not grown. But then the asset quality, compared to other peers in the market, everybody has had a deterioration in asset quality, the NPA, and I think it's the same with the Belstar also. Nothing different from any other microfinance. I think on the top 5%, top 5 MFIs, our NPA levels are exactly much better than many others.
Okay, all right, Mr. Muthoot, we'll leave it on that note. Thank you so much for joining in. Good conversation with you, and we wish you the best of luck for the rest of the year. We'll take that break. On the other side, we get chatting with Mr. Brij Bhushan Agarwal, Vice Chairman and Managing Director at Shyam Metallics. Remember, the stock was in focus yesterday. It had a big up move after UBS initiated coverage with a very positive outlook. We'll figure out how the business is shaping up.
Welcome back. Well, Shyam Metallics and Energy, that's the stock in focus. I recall a year or so ago, we had ICICI Securities that come out with a note and they were very bullish on the stock. And now yesterday we had UBS that initiated coverage with a buy call, the target price at around 1,200 rupees per share. The brokerage has factored in a whole host of factors, and that's how they come at this price. To understand about the way ahead, as well as how things are shaping up, we have the Vice Chairman and Managing Director, Mr. Brij Bhushan Agarwal. Hi, Mr. Agarwal. Thanks a lot for joining in on the phone line. Well, I recall not too long ago when you listed, the market capitalization was roughly around $1 billion. Now you're on the way to around $3 billion, and your operating profit as well from the IPO, well, it's more than doubled. So there has been delivery, but the market wants to know what's the way ahead from here on. Now, one focal point is the VAP as a percentage of your total mix. UBS has said that they expect VAP to move up as a percentage of your total revenue as well as EBITDA to the high 60% odd. So as of now, what is it? And do you believe that you can do that?
Hi, good morning. Good morning, Nigel. Sorry, I'm on the telephone since I'm traveling. So if you see, Nigel, like all our future growth, it is coming on the downstream. And we are putting more investment on the value-added product like stainless steel, aluminiums. And, on the other side, we are also going backward in adding some more power plant to cut down the costs. So in the time to come, if you see in last 3 years, our value addition was 17 to 18%, and today it is more than 50%. In the time to come, in next 3 to 4 years, we expect that we should be able to cross more than 70 to 75%. And most of the investment is on the downstream side, on the value addition side, and also going backward on the cost side.
So, Mr. Agarwal, when your value-added products contribution goes up beyond 70% as you're guiding, what will it do to your margins? Is there a number you have in mind?
See, it is difficult for me to spell out, but definitely whatever margins we are doing today, it has to enhance because, you are seeing all the downstream projects will add more value forward, and the investment backward is also reducing the cost. So definitely the margin should improve around close to 4 to 5% in the time to come.
Okay, all right. Let's talk about it on an EBITDA per ton basis, sir, because you've been changing your mix towards VAP and stainless, the other products that you're coming up with, aluminum foils as well. On an EBITDA per ton, it gives you far better EBITDA per ton. Now, UBS in their note, they're saying that currently on the vicinity of around 4,000 rupees per ton. But they are factoring in a number in excess of 6,500 rupees per ton by FY27. Given that VAP will go up and you're focusing on the cost side as well, do you think that's possible? That's the aspiration, FY27?
We are completely positive on this. That is one of our major agenda, and we are diversifying into a different product mix in the same metal basket just to de-risk and to enhance the company more from the cyclic business to a comfortable business and more value-added product and more on the niche segment.
Right. So then we should work with an EBITDA per ton. The aspiration is that it moves to around 6,500 rupees at least by 2027.
We expect so. Yeah, we expect so. Yep.
All right. So we have got that out of the way as well. Now let's focus on your capex plan. I recall a couple of years ago, or maybe 18 months or so ago, you laid out this ambitious plan, and you said you're going to spend 10,000 crore rupees as capex, which I think 50% is already done. So how much is left to be done? If you could break it up in FY25, FY26, how much would you spend? And what does it mean in terms of debt in books? As of now, your net cash, do you believe you can stay net cash?
Nigel, we started with around close to 2,500 crores capex during our IPO, and gradually with the time we have enhanced our capex plan to 10,000 crores. In last 3 years, we have already invested around 5,000 crores, out of which close to 2,300, 2,004 crores has been capitalized. And we expect that all this new capitalization, production and value should start, seeing in the coming year onwards. And for the balance of, 5,000 crores yearly, we are very concerned on our strong capex allocation plan. So this is going to be spent in the next 2 to 3 years.
Okay. All right. And you will continue to remain net cash, or what would the peak debt be in your books then?
We would love to be, because all the, if you see from last 15, 20 years, and, last 3 years also, since we are in the public domain, we have been always very concerned. Most of the capex and all we are doing from the internal accruals, and our borrowing is majorly on the working capital. Today we are sitting on the cash for more than 1,700 crores, and we have enough, in the time to come, numbers in the terms of EBITDA and all to plan our capex plan. Yeah.
Oh, okay, all right. And I'm seeing, cash flow from operations is around 1,500 to 1,700 crores put together with that 1,700 crores of cash you already have in the books. So you believe that you could stay net debt free even post this capex, right?
Yeah.
Okay. So since you mentioned about EBITDA, sir, as of last year, you did roughly around 1,600 crores. But going by all that you're saying, the estimate is that the FY27 EBITDA could be in the vicinity of around 3,600 crores. Doable? More than double from here?
If you see last 3 years from 6,000 crores, we have gone, our revenue has gone almost more than 13.5. And in next 3 years, 3.5 years, the new capex plan, what we are doing, we expect to more than double the revenue, and simultaneously, since we are expecting the margin as well as to enhance and further go better, we are in the line like we should be able to do a decent EBITDA.
Okay. And on ROCE, UBS believes that with all the steps that you're taking, the ROCE can hit 28% by FY27. Is that a reasonable assessment?
Yeah, because if you see, all the downstreams are not very heavy capex, and it's all value add, little different. So definitely the ROC has to go up further, because it's majorly on the downstream is creating more margins, and the capacity what had to be added on the upstream side has already been added, and most of the downstream, 70-80% of the raw material, we will be consuming. So which will also help us to reduce the working capital load and burden in the system.
Okay, so that ROC number will head towards the late 20% is what you're telling us. Mr. Agarwal, at times it's a little bit tricky for a promoter, right? You came out with an issue at around 300 rupees approximately, post a good listing, then the stock price did dip. And then, in fact, you have sold some stake in the company, you have done a QIP as well. Now the promoter holding has come down to 75%, but the market capitalization has gone up. So there could be some kind of temptation maybe to trim some stake, or will you hold your stake at around the 74-75%?
Not really OFSs. OFSs not at all, because these were the compulsion and we had been always very conservative and prudent on our approach.
Yes.
As Shyam Metallic is always a very investor and stakeholder friendly company, we would like to abide whatever is in the interest of the company, we would like to go on that.
So as of now, you have no plans to sell stake and you're happy, promoter holding is happy at around the 74.5%, right?
100%, yeah.
Okay, final question, sir. The last week we had the Supreme Court verdict that said on a retrospective basis there could be some taxation that could come and hit some of these metal companies. For you, is there any tax notice or tax demand that is outstanding?
Fortunately, there's nothing 0.01%. There's nothing with Shyam Metallic. We are completely sourcing our raw material from the miners, so we are not under any kind of future or any liability in this Supreme Court verdict. Yeah.
Okay, Mr. Agarwal, we appreciate you joining in and clearing the air on a whole host of factors. UBS believes there are better times to come, and going by all that you're saying, you concur with that. VAP going up to more than 70%, EBITDA per ton to around 6,000, 6,500 rupees per ton, and the EBITDA number as well could more than double in the next 3 years from here on. Appreciate you joining in and wishing you and your team all the very best.
Okay, let's move on then to the entire aviation space, because that's clearly had wings. Most of these stocks, particularly Interglobe Aviation, has done very well. To talk more about it, we now have with us one of the regional players, Flive 91. So they're a regional player which is based in Goa, and Manoj Chako, the MD and CEO, and he himself is an industry veteran. He was the former VP of Kingfisher Airlines. He now joins in, and a couple of months back, they started commercial operations, and they're slowly and steadily expanding. Mr. Chako, thank you very much for joining us on the show. We've seen very strong tailwinds for the entire industry in terms of the number of customers, people who are flying now. Crew prices have come down, but supply has been a bit of a constraint. SpiceJet has been looking to raise some money. Can you lay out, when you decided to start this business, what is it that you thought in terms of the opportunity for you?
Sure. So in terms of opportunity, the way we kind of saw it is, India is obviously one of the fastest growing aviation markets in the world. At this point of time, last year we had close to 150 million passengers that flew domestically, about 120 operational airports. We're going to go up to about 200 operational airports in the next, couple of years. And India is still a very constrained market in terms of the number of people traveling versus the supply that exists in the market. While there's a lot of capacity available between core sectors in India, which is really the big metros and the next level of cities, there's a huge gap in regional connectivity. So today you have less than 3% of seat capacity actually being deployed onto the tier 2 and tier 3 cities. And that's really where the headspace is. Like if you look at India today, we have just about 750 aircrafts, and that is less than possibly what the largest carrier in the US has got. So the headspace is huge. The growth is phenomenal, and we clearly see an opportunity to connect, the smaller towns and cities in India. That's really what got us going on this particular journey.
Mr. Chako, good to have you on. I'm going to ask you a very basic, fundamental question, and one that I think saddens a lot of flyers in this country. India has, become the land where the doomsday is written for so many airlines, one after the other. I mean, if I start counting from the Air Deccan days to Sahara to Kingfisher, the latest being, of course, Go Airways because of the engine issues. And who knows, I mean, we're fingers crossed on SpiceJet now. Let's see how that's going. Now, while some of it could be mistakes made at a company level, but I mean, you're a veteran and you've seen, you've been there, done that, seen a lot of this go down. What ails the sector? The first sort of response that we typically usually get is that taxation is very high. But, you know, taxes are part of my ticket price, so it's got to be more than that. What's going so wrong with Indian aviation?
Okay, so I'll kind of answer this at a very fundamental level, and this is not just about India. This is globally. What we typically see is the moment you approach aviation as a service industry, you kind of lose the plot. You know, aviation is the transportation business, and if you look at successful airlines worldwide, the moment they focus on this business as a pure point A to point B transportation business, you find that the focus of the airline is actually on the right set of metrics. Okay, again, one of the interesting points, which I think is good, especially from where we are today in India, is whenever we've had professionally set up and professionally managed airlines come into the fold, they have always been successful. And we've got a whole bunch of great examples. You know, we have examples of, Rakesh Gangwalji and Rahul Bhattaji getting together to form Indigo. We've got examples of Adil Ali in the Middle East setting up Air Arabia. We got Wizz Air. So every time professionals have come together with professional funding to set up an airline, it's always been successful. A large part of the reason for past failures has been aviation has been approached more as a vanity industry as opposed to a transportation industry. So I think that's fundamental number one. Fundamental number two is aviation is not necessarily about the physical product that you get on the plane. That's all hygiene. It is really about how you create your network, how you bring in operational efficiencies, how you bring about cost leadership. I think these are some of the critical aspects that successful airlines have done. Okay, and any airline that focuses on these three things has always been successful anywhere in the world, including India. India's got a couple of great examples of that, similarly in the region as well. So I would basically attribute a lot of past failures to airlines not focusing on the fundamentals and rather focusing on it more from a vanity and a service industry perspective.
That's an interesting perspective, and yeah, a very refreshing one as well. Now let's come to the here and now, the present. What all this has meant is obviously we basically have just about two functioning airlines in the country right now. And if one goes by recent reports anyway, I think ticket prices for the upcoming festive season, they're already shooting through the roof. Someone, between 25 to 30% is the appreciation already. So from the perspective of immediate demand supply, mismatch capacity, pricing, what are we in for? And just, tell us, I think you're looking at a lot of the tier 2 markets in the south, Hyderabad, Bengaluru, some pockets in Maharashtra as well, of course, Goa. What is the capacity addition that you will be looking at?
So from a Fly91 perspective, we're kind of doing a very slow and measured growth. Our entire business plan is built on inducting 6 to 7, 7 to 6 seater regional aircrafts into play. As of now, we got 2 aircraft flying. We got 2 more coming in by Diwali, and we got 2 more coming in the last quarter of this year. So before March 31st, we would be 6 aircraft flying. As of now, we are connecting 7 destinations in the country, out of which, absolutely virgin destinations like Jalgaon and Sindhudurg, and we also fly into Lakshadweep and connecting Pune. And the entire focus on slow, measured growth, but the slow, measured growth is really connecting the tier 2, tier 3, possibly even tier 4 kind of cities. And that is really where the wealth is in India today. That's where the propensity to spend is. That's where the aspiration is to kind of connect into the largest cities. Okay, and that is really the segment that we're going after. And from a plan perspective, like how I said, slow, measured growth, 6 to 7 aircrafts a year. Every year we're going to connect about 8 or 9 cities from one base. So year 2, we get into base 2, connect another 8 cities from there. 5 years, 32 aircrafts, 50 cities, 5 bases is the measured growth that Fly91 is focused on. And really about, what we call as Bharat Unbound. It's connecting the last mile.
Okay, all right, Mr. Chacko, we will leave it on that note for today. Thanks very much for joining in and giving us a sense on how aviation is shaping up. Of course, remember, the context is that yesterday there were several upgrades coming in on Interglobe. A lot of the the broker is saying that there's going to be a sort of improvement in overall operations and profitability as well for the airline. And some of those targets are northwards of 5,000. So that's aviation. Let's take a break on that note. We'll come back on the other side and put the spotlight on the commodity markets.
And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese, and you are increasing your carbohydrate intake with all the junk food that is there, and you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein, because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way, you have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
Welcome back. Well, the markets are holding actually more or less flattish. We have seen a volatility. We've been 20-30 points down. We were up as well by 20-30 points in a bit of a range. Mitesh Thakkar joins us to help us out with quick analysis and a take on the markets. Mitesh, as flat as can be, so I think we'll focus on a couple of stocks. Tell us what you have for us.
Yeah. Nigel, a buy on Dabur and Hero Motors. I think, the two-wheeler space is doing very well. We have seen good action happening on the charts of Bajaj as well as TVS. Hero Motors is also showing some positive traction. So buy here with a stop below 5,325 and a target of 54.50, 54.70 to begin with, and then maybe even higher levels. And the other one is a buy on Dabur. That's another stock which is showing good positive traction on the intraday chart. So could see upside momentum. Buy here with a stop at about 636 for targets of 665.
Thank you very much for that. Let's turn our attention now to commodities. Manisha is now joining in. Manisha, what's the one commodity that you're tracking today?
Well, Reema, I'm looking at energy as a sector, and while we have seen the crude oil prices gain up by more than a percentage point overnight, the sector that really seems to be buzzing really is the coal prices. Well, that one is trading at an 8-month high. The month of August has been quite positive for coal prices, and we have seen prices gain up by almost 2.5% in a matter of last two trading sessions. So we're holding above $145 a ton. The new China coal capacity approvals have declined by 80% in 2024. That does show you that the investment and focus towards renewables is on the higher side, but this also has led to the coal imports within China continue to increase. So when you look at the month in the previous one, we have seen a higher gain onto that one. The first half of 2024 until now has seen China seaborne coal imports up by nearly 11% there. The global coal demand is expected on the higher side. There has been statements from IEA suggesting that while 2023 was a record global coal demand, 24 and the year 25 as well, we'll be looking at steady demand of growth going forward there. If you look at the previous year, we've seen very strong number at around 408,415 million tons of global coal demand going forward there. In the Indian markets as well, while the production capacity has been increasing and the renewable conversation has been quite on the higher side, this is a chart that will show you that the import numbers have kind of continued to increase here as well. Last year was a strong 261 million tons, and until now, for the first 4 months, we've seen 47 million tons of import in India for coal already happen. The last plate should show you on what we've seen in sense of prices in case of coal. We started this year with almost $131 a ton. We did see prices decline to 115. There was this whole conversation about renewables there. But at this point in time, we are trading at the higher point of the year and our 8-month highs at $150 a ton.
Okay, all right. Got that. Manisha, thank you very much. So that's the commodity wrap-up. Let's move on. I mean, two of those stocks are really flying high. Remember, Nimesh, just before the opening, told us about this JP Morgan note on two-wheelers in general. In specific, they, I think, called out for Bajaj Auto and TVS. Look at the stocks rev up, Nimesh. Just go back and revisit that call, please.
Well, so, the two-wheeler stocks are buzzing in trade largely on back of the JP Morgan note, where they've upgraded TVS Motors to overweight from neutral, and they've raised the target price there to 3050. Even UBS has today put out a note on TVS Motors, and they've raised the target price to 3200. So UBS is the most aggressive in terms of target price on TVS Motors. Even on Bajaj Auto, JP Morgan has raised the target price to 11,225, and they have an overweight stance. However, they've downgraded Hero Motor to neutral now, and they have a target price there of 50 to 30, and they remain cautious on Eicher Motors with a neutral rating and a target price of 4110. But on the industry, they believe, the JP Morgan believes that two-wheelers is a more attractive segment, and they expect the growth in two-wheelers to outpace the PV growth, at least in the near term. Electrification is progressing, but not at a faster pace, which means that there won't be any margin pressures, at least in the near term, for the incumbent players. For TVS, they believe that the market share gain is quite resilient, and hence they have raised the EPS estimates by 5 to 18% over the next 2 years between FY25 and FY26. However, on Bajaj Auto, JP Morgan believes that it's a potent combination of ability and intent, and even on Bajaj Auto, they've raised the EPS estimates for FY26, FY27 by 3 to 5%. So, big upgrade on TVS Motors by a couple of brokerages, but JP Morgan believes that the two-wheeler space is more attractive, and there will be larger growth compared to the PV segment.
Okay, all right. Thanks a lot for that, Nimesh. Well, the markets are flat, but a lot of stocks in the broader markets are moving around. Just take a look at a few of them. NIT Limited, the stock is up closer to 9%. Big up move is what we're seeing on that one, and on very high volumes. Shriram Properties, earlier this week, they were talking about trying to rebrand themselves and trying to focus on other newer segments. That stock's up close to around 6%. For the week, it's done quite well. Railtel is up close to around 6% or thereabouts. You have Jyoti Structures as well. The numbers were quite disappointing, one of those potential turnaround candidates. But the first quarter's numbers were disappointing. The stock corrected more than 25%, and now, in fact, it's pulling back from those lows as well. So that's another top volume mover. Nykaa is up close to around 4% as we speak. And CDSL as well, another one that's up close to around 3.5%. So quite a few stocks, guys, from the broader markets that are moving higher.
Absolutely. Plenty of buzz in the mid-cap and small-cap arena. We need to take a break on that note. But on the other side, our monetary policy special coming up. Lata will get chatting with Ashima Goel, Shashank Bhide and Jayant R. Verma, external members of MPC, to focus on the minutes of the last policy meeting. Stay tuned for that.
In 1972, a fearless black congresswoman named Shirley Chisholm she ran for president. And her determination let me and millions of others dream bigger, not just because of who she was, but because of who she fought for. Working parents, poor children, the last, the least, and the lost. In 1984, I brought my daughter to see Geraldine Ferraro, the first woman nominated for vice president. If we can do this, Jerry said, we can do anything. And then there was 2016, when it was the honor of my life to accept our party's nomination for president. I wish my mother and Kamala's mother could see us. They would say, keep going. Shirley and Jerry would.
Hello and welcome to this monetary policy special. I'm Lata Venkatesh. The minutes of the last monetary policy meeting held on 8th August indicate that at least two external members of the MPC hugely disagree with the majority view and the Reserve Bank view. Dr. Jayant Verma and Dr. Ashima Goyal argue quite strongly, according to the minutes, that India's potential growth is probably higher. In fact, Jayant Verma says it is 8%, and that the restrictive rate policy of the Reserve Bank, high real rates, is actually slowing the economy. Dr. Goyal extremely strongly suggesting that high real rates can create social tensions and lower jobs. However, Governor Das, on the other hand, representing the bulk of the Reserve Bank view, says that India's economic growth is fine, and that gives the Reserve Bank and the MPC the space to chase down inflation to the given target of 4%, the mandated target of 4%, which both of them argue has remained elusive. So clearly, those are the two opposing sides to take the discussion forward. I'm joined now by the external members, Dr. Jayant Verma, Dr. Shashank Bhide, and Dr. Ashima Goyal. Gentlemen and Ashima, thank you very much for joining us on the show today. This is the last of the MPC meetings that you will be members of, so this conversation becomes special. Let me start with Ashima. Ashima, you're arguing that the restrictive policy, that is the very high difference between repo rate and the current inflation working out to over 2%, maybe 2.1%, is likely to spark even social tensions and lower jobs?
No, I'm saying that we need to grow at our potential. Our potential is higher. We need to increase the rate of job creation to the maximum that we can. And therefore, monetary policy should not be reducing the growth below its potential.
Mm-hmm. That's important. No, the natural, interest real rate argument presented in the July bulletin is that, the country's potential is actually 7%. So, you can't really argue, going by that argument, that we are below potential at this point in time.
No. So there are a lot of controversies about measuring potential growth and the equilibrium real rate. And I've given some arguments why the RBI has not included some factors related to the structural growth transition path we are on. That would actually reduce the equilibrium real rate. But the argument I'm making is that, all right, estimation is difficult to agree with, but just look at the outcomes. Like if core trend inflation is downwards, it's at 3% core inflation, below the target, right? That means that we are not at potential. We can grow faster without raising inflation.
Yes. No, I take your point that core inflation is one parameter that is indicating that perhaps growth isn't very good. But if you look at a whole host of other parameters, including PMI, including GDP numbers up to the last quarter available, it gives a slightly divergent picture. I'm coming back to you in a minute. Dr. Verma, you are arguing that the whole idea of potential growth at 7% is wrong, underestimated.
Absolutely, absolutely, because we are at the stage of our economic growth where we need to grow much faster and we have the ability to grow much faster. We have to recognize that we are at the stage, in the demographic cycle where very large number of young people are entering the workforce every year. And this demographic the demographic benefit for us will last for another decade or more before the demographic transition reverse and so on. At this point where so many people are entering the workforce, it is possible to grow in a non-inflationary manner at much higher rates because there is that workforce ready to be absorbed. And you can give them jobs without putting upward pressure on wages and input costs and so on. And the other barrier to rapid growth would have been, issues like infrastructure and so on, which again, the reforms of the last few years have addressed many of that. We have had significant investment in public infrastructure, digitalization. All of this means that the economy is capable of growing much faster. It needs to grow much faster. And I think the correct benchmark is not to look at how other economies are growing today. Today, most of the large economies are well past their demographic transition. China's population is actually declining. We got to ask the question, how fast were those economies growing when they were at the same stage of our demographic cycle? When their workforce was growing, how fast was that growing? China was growing at 11-12%. That is the growth rate that an economy is capable of when there is a flood of new workers entering the workforce. And you don't need to pay higher wages to absorb that. So that is the kind of horizon we must have. That double-digit growth is what we should aspire for. And even if we think that would require more reforms, even the reforms that have been done already should be able to push you to 8.
Okay. Well, this is an argument that keeps coming up, and the economic survey doesn't buy this argument. In fact, Ananta Nageshwaran repeatedly says we are not in the global situation that China was in the early 90s. But that argument a little later. I want to come to you with other questions on monetary policy. But first, Dr. Bide, your overall macroeconomic assessment is that growth is fairly strong. So why meddle with it? Let's concentrate on the mandate. Is that the broad thesis?
Yes. So I guess, in this meeting, also the projected growth rate is about 7%. And I think, one of the things that especially I think is important is that on the supply side, I guess, we do see those bright spots, which are opportunities for raising output growth rate. But I think we should also be concerned about the immediate demand situation. And I think so the growth that has happened in the last year and probably projections for the present year also are looking at the prospects for investment growth and consumption. And I think it is important to recognize that, on both these projections, there are risks associated with that. And therefore, I think it's not the supply side alone. I think that is important looking at the growth rate. In that context, 7% growth rate appears to be fairly strong growth at this point. So I think, if we need to raise this 7% growth to 8%, I don't think the present demand conditions support that.
Yeah, that would be, especially because we have a long way to go in terms of employment. But Dr. Verma, to come back to your question about this real interest rate being almost as high as 2.1, because the 1 year ahead inflation, which Reserve Bank has forecast, is 4.4. The current repo rate is 6.5. So it's effectively a 2.1 real interest rate, which you argue is too restrictive. But, when you look at financial conditions, and even when we speak to heads of corporates, which we do on a regular basis, no one complains of any tightness. Look at the way the stock markets are running away. Look at the amount of money going into F&O. And people seem to be having too much money. The Reserve Bank is rightly worried about unsecured loans getting too much of attention from banks and therefore asset quality dwindling. All these don't show tight monetary policy conditions, do they?
See, asset markets have a logic of their own, and monetary policy cannot be hostage to asset markets. Asset markets are swayed by global factors, and there is a global, risk-on appetite at this moment, which is driving asset prices across the board, across multiple countries. Now, that does not tell us anything about whether monetary policy is restrictive or not. The question is that we have to ask is what is happening on private sector capex? If the situation is so bullish, why is private sector capex not happening? For the last more than a year, the thought has always been, private sector capex will happen next quarter. It is just there on the horizon. And we have been waiting, like waiting for Godot. We have been waiting for 4 quarters, 6 quarters. It has not happened. And at some point, as I state in my, in my statement, hope is not a strategy. You can't just keep hoping that capex will revive. You got to ask the question, yes, what are the conditions required for that capex to happen? And the condition required for that capex to happen is that demand has to be there and capital has to be sufficiently attractive. And a very high real rate makes capex unattractive to the corporate. And if demand is inadequate, that also does that. And restrictive monetary policy is one of the things driving demand as well. When your EMI goes up, every rupee that your EMI goes up is 1 rupee less available for consumption. And if we think that demand is deficient, that the economy requires very large fiscal support because private demand, the private consumption expenditure is not growing, then we have to ask, what have we done? Is monetary policy part of the problem? And I think we have to at some stage ask whether monetary policy is too restrictive. Is it too restrictive at a point where inflation is so close to target? See, remember, I would not ask this question if inflation were running at 5.5%. But when inflation is so close to target, you got to ask the question, how much of growth sacrifice are you willing to pay for accelerating that last 40 basis points of decline? That is the question. There's no question about the destination that we have to hit for. That is granted. But the question is, what price are you willing to pay to do that 1 quarter earlier than before?
Ashima, what is your telling argument, the key clinching argument that made you vote for a rate cut?
I think there is room for a rate cut, that we need to follow flexible inflation targeting. And that means keeping the rate at the minimum that will deliver our target and maximize growth towards potential. And this is the principle underlying the kind of coordination we've had, which has delivered very effective, made India one of the fastest growing, largest economies, the most stable macro in the last 3 years. The government is taking enough supply side action to help the RBI keep inflation approaching its target within the tolerance bands. Yeah. And this, like Shashank was saying, that the demand is not enough to give 8% growth. Now, you know that the elasticity of demand is very high in India because we have so many young people who are buying houses and have to equip them with consumer durable on credit and so on. And you might say that financial credit is booming, etc. But then the RBI is doing something very clever, which is to target areas where credit is growing too high with prudential regulation,
No, but I agree with you that you don't have to hike rates to bring down unsecured credit or one specific area. But at the same time, the very fact that unsecured credit is booming, the Reserve Bank had to come down heavily on even P2P lending. it doesn't, these anecdotal evidence don't give the sense that the economy is tight, does it? It seems to give the impression that more credit is available than people can pay back.
No, you know, so this is, as I said, the interest elasticity of demand is very high. If the real rate is reduced, it will increase demand further. And you know, it so happens that given our structure, monetary policy affects demand more because fiscal, see again, the other thing is the budget deficit it's conservative. It's on the fiscal consolidation part. So the excess demand stimulus from government is going down. And in that, so there's space for monetary policy to support demand more. And we're not using that space. So we are restraining growth. You know, like demand is not enough to take our growth to 8%. Growth has come down 1% compared to what it was last year. And this last Q1, there's been a lot of signals of softness. We saw with the US Fed also, when you ignore sort of signals, negative signals, you can be faced with a big event.
Well, on the US, things are still a little murky and we will have to wait to see how the August payrolls look like. But I have to take a mandatory break. Thank you very much, Ashima Goyal, Dr. Verma and Dr. Bide for joining me. After the break, it'll be time for Chartbusters.
For reproductive health care are saying, keep going. Together, we put a lot of cracks in the highest, hardest glass ceiling. On the other side of that glass ceiling is Kamala Harris raising her hand and taking the oath of office as our 47th President of the United States. Because, my friends, when a barrier falls for one of us, it falls. It falls and clears the way for all of us.
Ambuja Cements gains in trade after 2.76% equity worth about 4,200 crores change hands in a block deal at 625 rupees a share. Sources say promoter holder in investments was the likely seller.
Nykaa took climbs after 1.4% equity change hands in large trade. Sources say that Harindrapal Singh and Associates was the likely seller.
Divis Motors zooms more than 3% after brokerage from UBS issues a buy call and raises the stock's target price to 3,200 rupees, citing new model launches that can further aid volume growth.
RailTel surges nearly 6% after the company gets a work order of around 53 crore rupees from the Uttar Pradesh Police Recruitment and Promotion Board. Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangalam Malu. It's a Friday morning. The market's a little bit quiet, Mangalam, to kickstart trade. But the good news is quite a few stocks are in the green, and I think some kind of consolidation would be par for the course.
Consolidation would be par for the course, also because of the big events that everyone's watching out for. Tonight there will be the Fed speech at Jackson Hole and all of that and stuff. Let's see what happens. I'll be watching out for how the IT index pans out, because this entire week the IT index one day has gained, the other day has seen a bit of a decline, then saw a bit of a gain. Yesterday was slightly under pressure. Today is down by almost 0.7% as well. Typically one sees, some long build-up ahead of Fed-related events. So let's see whether there could be some pickup out there or not as well. Good time to get in Manas Jaiswal for a quick technical check on the market. Manas, there's consolidation, but it's consolidation with an upward bias. You could say that, it's good that the market's not falling, but it's not so good that because it's not, rising with that sort of ferocity that we saw last Friday as well. Do you think a bit of a breakout or a breakdown is on the cards?
Good morning, Mangalam. So you're absolutely right that the undertone is definitely bullish, because day by day the support is shifting upwards. Now Nifty has a lot of support near 24,700. So it is almost 100 rupees downside. So on the upside, I think Nifty has potential to test its previous high, which is placed near 25,050 mark. So from current levels, you can see almost 200 points rally. So take a long position here. Keep your stop loss below 24,700 and target would be around 25,050. But I'm more bullish on Bank Nifty, because here Bank Nifty is consolidating above 20-day moving average. And looking at the pattern, I can say that Bank Nifty can test 51,700 in next 2 to 3 trading sessions. So here I think one can go long at current levels, keep the stop loss below 50,700. And target would be around 51,700 and above that 51,700, 500 and 700.
Got it. Okay, all right. Manas, what about individual stocks though?
So good morning, Nigel. So first one is a break call on Indigo, where stock has given a fresh breakout. We have seen great recovery in last 2-3 trading sessions. I think even at current levels, one can create long position. Stop loss should be around 45.40 and target would be around 47.50. Second is a buy call on Coal India. See, we have seen some consolidation, but again, here also the undertone is quite bullish. I think one can take a chance. I think stock is ready to give a fresh breakout. Take a long position in Coal India also. Stop loss should be around 529 and target would be around 550.
All right. Manas, you are long on the airline, which is Interglobe Aviation. Do you have a view on the airport? Because GMR Airports too has risen from the lows, currently moving towards the high point of today's trading session so far. It's done well in the past, but this month it's consolidated a little. It's moving higher.
So yes, GMR Infra is looking strong for very short term. I think for trading, one can take a long position. Stop loss should be around 95.50 and target would be around 102. But again, if you're talking about little bit long term, medium to long term, I think GMR has potential to test 120. It may take time. It may take 6 to 8 months time. But again, here the trend is quite positive on the medium to long term charts also.
Okay, all right. Thanks a lot for that, Manas. Well, time to shift focus to our special segment. We get a few ideas for profit from Money Control Pro. Khushbu Rai Gupta of moneycontrol.com joins us to talk about a stock that she's tracking closely. Khushbu?
In today's idea for profit, we have LIC Housing Finance. The company has a long track record of steady performance spanning across more than 3 decades. Although the recent growth was impacted by a seasonally weak quarter, and extended elections, the management remained confident of achieving double-digit growth in portfolio in FY25, led by retail and project finance book. Also, the management believed that the net interest margin has bottomed out and are expected to grow and sustained in the range of 2.7 to 2.9%, led by change in the disbursement mix. There are some positive development which indicate that some big ticket loans which were under the NCLT provision is expected to pay off in the coming quarters. Moreover, during the June quarter, the company received fresh term loan sanction of Rs 12,500 crore from various banks which are expected to be disbursed in the coming quarters. Also, if we look at the valuation, the stock is trading below its FY26 estimated book value and is available at a discount to most peers. We recommend investors to add the stock at current level with a long-term view.
All right, with that, what we'll do is take a short break, but a lot of stocks are buzzing around. What we'll do is, on the other side, we'll focus on all those buzzing stocks. Stay with us.
To be with everyone this evening in this hall and everyone at home. This is going to be a great week. And I want to kick us off by celebrating our incredible President Joe Biden, who will be speaking later tonight. Joe, thank you for your historic leadership, for your lifetime of service to our nation, and for all you will continue to do. We are forever grateful to you. Looking out at everyone tonight, I see the beauty of our great nation. People from every corner of our country and every walk of life are here, united by our shared vision for the future of our country. And this November, we will come together and declare with one voice, as one people, we are moving forward. With optimism, hope, and faith, so guided by our love of country, knowing we all have so much more in common than what separates us. Let us fight for the ideals.
What is this travel space, travel and tourism, which is a buzz right now? We spoke about Interglobe Aviation moments ago. We spoke about the up move that we saw on GMR airports as well. Look at some of these travel platforms. So Ixigo, which is Le Travenue's tech, that's moved higher. That's moved to the high point of trade. Indian Hotels did well in yesterday's trading session, so consolidating right now. So Le Travenue's tech comes up for you. The other one, the recent listing, we have Yatra as well. So both these platforms are doing extremely well. Should come up for you on the screen at some point. So keep an eye out on all these stocks. Alongside that, we're also seeing some traction in a bunch of other stocks. So that's Yatra Online, that's moved higher. Le Travenue's tech comes up as well. And then we did see some gains on Zomato. Yesterday, after the news came by, maybe it was, buy and rumor, sell on news sort of thing, profit booking taking place. But now the street's taking note of that acquisition once again. Zomato's moved higher by about 4.5%. Additionally, overnight, they also announced the closure of their Legends business, which is not too much in terms of revenue or cost, etc. It's just the focus that the company has on its core and willingness to go ahead beyond businesses which are not working and move forward is something that the street likes. So that explains why Zomato has moved once again to a fresh record high. But on the NSE index constituent changes, they are on the cards and maybe announced as soon as this evening itself, with changes likely both in the Nifty and the Nifty Bank. Vivek joins in to tell us what could be shuffled around and the impact it could have on the flows. Vivek.
Well, good morning. That's right. So most likely, by the end of today evening, we will be hearing from the NSE Index Subcommittee. So what is it that they will be doing? They will be looking at all of the indices, and they will be looking at which are the constituents they could add and which are the constituents they could delete from the indices. All of the NSE indices, in fact, will be in focus. The ones that we will be tracking are the ones where there will be passive fund flow interest, and there could be some impact. Now, the first index that we're looking at is the Nifty itself. The Nifty itself, IFL estimates that there could be 2 entries into the Nifty. The first entry that is likely is trend, and if it comes in, on the back of this particular inclusion into the Nifty, trend could see inflows of close to $422 million. The other, likely candidate that could enter the Nifty is BEL, that is Bharat Electronics. That could see flows of close to $400 million. Now, remember, all of these calculations and the, the constituents that could make the entry as far as the Nifty is concerned are based on the fact that there will be no new fresh FNO constituents that will be approved. So in case that happens, there could be a change, but at this point of time, going in with the same list of FNO constituents. So who could make way for Trent as well as BL? LTI Mighty, that is the one that could see outflows of close to $177 million. Divis Laboratory, that could see outflows of close to $220 million. Now coming to Nifty Bank, one inclusion, making way will be Bandhan Bank, that could see an exit of close to $40 million. What could come in is Canara Bank, and that could see flows of close to $79 million. Today evening is when this particular announcement is expected. It will be interesting to see what is the final outcome from this particular index review.
Okay, all right. Thanks a lot for that, Vivek. Well, Reliance as well is in focus on the back of a bullish note that's coming in from Bernstein. Rima's here to tell us more on that. Rima?
Thanks so much for that. So ahead of the AGM next week, Bernstein has raised the target price on Reliance Industries to 3,440. This is after the company has analyzed the annual report of Reliance Industries. They're saying the growth engine is now Reliance Jio. They've raised the target multiple for Reliance Jio, that's the telecom business, because now the focus of the company is monetizing Jio. Remember, Reliance Industries led the way in terms of tariff hikes, and for them, their 5G rollout has been completed. So they're anticipating that Bernstein anticipates a 16% top-line growth for the telecom business and a 20% EBITDA growth over the next 3 years. They expect market share gains to continue, and according to them, the market share gains will continue as Jio reaches 47% market share by the end of FY25. CLSA too is bullish on Reliance Industries. Their target price stands at 3,300. They're saying the next leg of growth will come from 5G monetization and broadband ramp-up.
Okay. All right, Rima, thanks a lot for that, but we can't let you go so fast. What about Railtel? That's buzzing in trade. Post that order win. Tell us more.
Well, it's about a 52 crore order win that the company has won from Uttar Pradesh Police Recruitment and Promotion Board, which is an order for live CCTV surveillance service, impersonation control through Aadhaar-based biometric service, digital fingerprint and facial recognition. So it's got the street excited. It's a 52 crore order win, so not that sizable, but the stock is now up 50% year to date, 200% in the last 1 year, and over the last 3 years, it's given a more than 50% stock return CAGR. Came out with the numbers a while back. In terms of top-line growth, they managed to hold on to about an 18-19% year-on-year revenue growth. Margins are up on a quarter-on-quarter basis, and they've also expanded by about 250 basis points on a year-on-year basis. Back to you.
Right, Rima, thanks a lot for that. The EdTech space is actually buzzing around this morning. We've been talking about NIIT through the morning, up around 9% decent volumes as well. On a 10-day basis, the kind of volumes that the stock does today in the first hour itself, it's done 10 times of that. So maybe we'll keep an eye out on any disclosures that may come by as well. It's a big volume mover today. But, looking at that, we've also seen Aptech. Aptech's seen a bit of a rub-off out there as well. So the intraday of Aptech comes up for you as well. Both these stocks, mind you, have been big underperformers. They're down around 20-25% from the 52-week highs as well in an otherwise strong market. Aptech has now moved to the high point of trade as well. But Nigel, a couple of days ago, we were talking, I was here, you were at the Motilal Oswal conference, you were having a conversation with the CFO of Ambuja Cements. That stock's higher today after a large trade.
Well, that's right. No, we quizzed the CFO and he said that it's up to the family office whether or not they want to sell. But that's the big news that took place earlier today. There was that long anticipated block, not too long actually, but the last few days there's been that speculation that the promoter entity of Ambuja Cements could come in and sell some stake. And it appears, according to sources, that could have been the case. Let's run you through the details. There were close to 6.8 crore shares that changed hands today. Total deal worth was close to around 4,200 crores odd. And the price was around 625.5 rupees per share. The base price was at around 600 rupees. So the expectation was maybe, in fact, the stock starts lower. But the deal got done in the block window. And because of that, the shorts have had to run for cover, which explains why the stock is higher. Sources indicate that the promoter entity is likely to be the seller. And just to give a revision with regard to what went on, the promoter entity in October 2022, they went ahead and they issued shares worth around 20,000 crores to themselves at a base price of around 419 rupees. And over the last few quarters, they have been converting these warrants. So that's why the promoter stake in the company went from around 63% to around 70%. Now, post this 2.8% sale, it'll come back down to roughly around 67.5 to around 68% or thereabouts. So that's the news today. Promoter looking at deleveraging themselves at the parent level, according to sources. And that block took place, but it took place in the block window, which has squeezed out, the shots.
All right, Nigel, that explains the kind of move that we're seeing on Ambuja Cement. Meanwhile, just keep an eye out on a couple of these other stocks as well. We've been talking about, how the way the briefs stocks have done extremely well. So Lux Industries has moved to the high point of trade. And this week, actually, it did belong to Rupa. Earlier in the week, we did speak with the management. They indicated that demand is picking up. Exports is a decent opportunity as well, even as they maintain their margins in low double digits. That's about today. That's on Rupa, up around 1.6%. But just look at this week. It's up 18% for this week itself. And Lux Industries, of course, for the last couple of months has been a big mover. So keep an eye out on all of that. Speaking about demand and the outlook of that itself, on the other side, we'll have the management of Anand Agarwal, the CFO of V-Mart Retail.
And let us always remember, when we fight, we win. God bless you. God bless the United States of America. Good night, everyone.
Again, what her appearance is just a preview of coming attractions of Thursday night. You can feel the electricity. It's a 13 on a scale of 10. It's one of the most electrifying political environments ever been created because it's all about the future and she embodies it.
Oh, I think it's great. People really get excited when something happens they didn't expect and it makes them happy. So we're a happy group.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are 2 other factors. One is technology. a 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you are seeing not only one pandemic.
Welcome back. Just take a look at a few of these stocks that are moving around and moving around in style. Interglobe Aviation, the stock is up 3.5%. You talk about valuations not being very, very cheap, but they are a dominant force here in the aviation market. And the market is willing to give them that premium. The stock is flying away up close to 3.7%. Pyramid Enterprises is another one. The promoter entity came in and they did some creeping acquisition. That stock is at the high point of the day. It's had a good week. You know, for the week, it's up close to 12%. So big up move is what you're seeing on Pyramid Enterprises. On the flip side, you have stocks like Vascon Engineering. You know, sharp downtick is what you're seeing on that name. It did see a bit of a rally in the last few sessions, and now it's given all of them up. So big downtick over there. Avenue Supermarts as well has moved into the red, so that's down close to 1.7%. And another stock that has an element of EV in it is Precision Camshaft. You pull it up week to date, the stock is up close to around 20%. So big up move is what we are seeing. They had their con call earlier this week. Today it's up close to 3%. Volumes much higher than normal. And week to date chart as well will tell you it's moved very, very swiftly. Mangla, what else are you tracking?
I'm looking at Greaves Cotton, Nigel.
The other one with an EV play.
The other one with an EV play. So that's moved around 3.5–4% from the lows right now. TBO Tech is the other one which I'm looking at as well. Not sure what exactly is the news out here, but the stock is up around 10% this week. Volumes piling up as well. At the start of this month, it was slightly lower, but remember, it's a recent listing, so we're seeing these moves on that one. So Greaves Cotton, of course, the EV play, and TBO Tech is the one that I'm looking at, which has moved higher as well. But let's talk about the retail space. After several quarters of muted consumer sentiment, value fashion retailer V-Mart is starting to see some betterment, but sales per square feet is still not close to pre-COVID levels. The CFO of the company, Anand Agarwal, told our colleague Shilpa in an exclusive conversation on the sidelines of the Ray Retail CFO Summit. Listen in.
Definitely, there are some betterment which are happening, and especially in the tier 2, tier 3 segments where we sort of specialize in. And this particular segment had definitely been slightly subdued for the last 3 years post-COVID due to a variety of factors. But more than that, I would like to stress that we have taken a lot of actions in the last 1 year, a lot of projects that we've been working on in terms of improving the product profile, in terms of improving the pricing, in terms of also improving the look and feel of the stores. So there's a lot of work which has actually gone in terms of what we wanted to change, and some part of that has now started to bear fruit for us. So the improvement that we see is not just coming in from the macro getting better, but also a lot of it coming from what we have been able to turn around within the organization.
Right. But from a macro point of view, if I'm to talk about, do you feel that it will take a few more quarters before demand sort of really returns? What is your expectation?
No, definitely. It's going to be a slow recovery. It's going to be a slow growth, but definitely my sense is we are, getting better, and every month is getting better. In terms of performance, in terms of sales per square feet, we're still not as close to what we used to do before COVID. So definitely we still have a lot to catch on. But yes, the progress seems strong and the growth is visible. So yes, it might take a couple of more quarters to get back to where we really want to be.
Fair enough. And your sales per square foot this quarter was the highest, I think, in about 4 years, if I'm not wrong. Do you think that sort of growth right now will be sustainable for you with a sort of hope for revival going forward? And what's the trajectory that you have in mind when it comes to same store sales growth also? How do you see that sort of going for this fiscal?
No, definitely we are working towards betterment, and all indicators are there that we should be able to get where we want.
Where is that?
We first want to get back to pre-COVID levels, and that's the first target. So that's the entire organization is working towards that. In terms of same-store sales growth, definitely I think mid to high single-digit same-store sales growth should be possible, and that is what definitely seems visible right now.
And finally, I wanted to understand with respect to store expansion. The last couple of quarters, in fact, generally retail players we've seen a slowdown in the store expansion plans. A lot of store rationalization also has taken place. Do you think, given the slowdown that we've seen in the past couple of quarters, that going forward for you also, are you slowing down on your store expansion or looking more, sort of doing store rationalization? Will you be focusing on closing down more stores? Sort of what's the strategy there?
So I think weaning out any loss-making stores or any part of the organization is absolutely a hygiene, and it's not about a slowdown or a aggressive growth strategy. As a strategy, we always look on growth, and we will keep opening stores, and we will keep opening more and more number of stores every year. There's no question around that. But having said that, yes, we have also, cleaned up some part of our network. In the last 2 years, we would have closed at least 30-35 stores. So these are, standard or regular exercises that you keep on doing, depending on how the macro or the environment is looking like, and particularly for the locations that you were not successful or so successful in. But yes, going forward, we are very, gung-ho about the future, and we are very, ambitiously looking at growth coming in from new store expansion.
All right, with that, what we'll do is wrap up on this edition of Chartbusters with the news that the Midcap index is mildly in the red, the Nifty Bank again in the red, but the other indices are mildly in the green. It's basically flitting between red and green, just around the flat line, as a Friday morning should be. Take a short break, come back, the team of Trading Hour comes up for you.
Already reached, we are the number 3rd country in the world to probably have obesity, but we are number 2 in terms of diabetes. And diabetes is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours, and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Good morning. Welcome to Trading Hour. It's a Friday morning. I'm Reema Tendulkar. With me is Sonal Bhutra, and things are quiet. Markets are moving. The indices are moving absolutely sideways. Midcap index too is not outperforming. We've seen it outperform over the last couple of days, but today it's absolutely flat. But then you've got pockets of strength like auto. So the auto names are revved up.
Oh, they are, and no, not feeling so much like a Friday morning though. It's been very quiet, but that is something that the global markets
Well, you've got a holiday coming up,
yes.
So you've got to have that, Friday feeling or holiday.
That I've been getting for a while now, I think. So definitely holiday is something we look forward to. But yes, for the markets, global markets, they were lower overnight, and despite that, we are managing to be in the green. The Nifty has perked up a little bit in last couple of minutes, 26 points higher. Mid caps have been, they have been in that range so far. So right now at the flat line, Bank Nifty is underperforming, but as Reema pointed out, there are pockets which are doing well. There's Nifty Auto which is doing well, and we do have some sectoral moves coming in from energy, the CPSE index. Although we do have some cuts in IT space today, so that index is down around 0.6%. In the broader markets, we have some of these stocks which are surging. Packaging companies, these stocks have been doing well ever since these companies indicated that the supply-demand situation is balancing a little bit. Something like a Cosmo First or Uflex, both these stocks are up around 9 to 10% right now. EPL also absolutely flat, but the other ones, Cosmo First, up 7%. We have Uflex, which is higher in trade, 11% higher there. So a lot of move. Office is the other name that should come up for you on the screen. That is a recent listing, and today as well, the stock is higher in trade. So that continues its up move and has continuously been doing very well as well. So a lot is happening, Reema, and despite no earnings, stock moves have been quite broad.
Indeed. And it's a vibrant screen when it comes to individual stock movers. So you've got a Realtel, which is moving up 6% on the back of a 52 crore order win. So it's not a sizable order win, but the gains continue for something like a Realtel. Nykaa, where we've seen a block deal, one of the investors has partly sold its stake, but the street is moving on, and the stock is now up 6% at the day's high. Power names have been higher, so GMR Power is up 5%, and this week it's seen a gain of close to about 15%. But top honors go to the two-wheeler stocks, so whether it's TVS Motors, Bajaj Auto, or even a Hero MotoCorp. So JP Morgan believes the two-wheelers in the entire auto space is perhaps best placed right now. Nimesh is joining in our special segment, Standout Brokerage. Nimesh.
Hi, Reema. So as you rightly pointed out, that the two-wheelers are buzzing in trade on the back of that JP Morgan note. They have today upgraded TVS Motors to overweight from neutral, and they have a target price of 3050. Interestingly, even UBS has today raised the target price on TVS Motors to 3200, and they seems to be the most aggressive as far as target price is concerned. On Bajaj Auto, while JP Morgan has an overweight stance, they have raised the target price further to 11,225. However, they have downgraded Hero Motors to neutral, target price of 50 to 30, and they have a cautious view on Eicher Motor as well. They have a neutral rating with a target price of 45.10. Now, for the auto industry, within the auto industry, JP Morgan believes that the two-wheelers are more attractive at this point in time. They expect the growth to be much higher in two-wheelers compared to the four-wheelers, while electrification is gaining traction, but it's at a very gradual pace, which means that they do not expect any impact on the margins for the incumbents, at least in the near term. For TVS, market share gain has been the big talking point for TVS Motors, and on back of that, JP Morgan has raised the APS estimates by 5 to 18% for FY26 and FY27. For Bajaj Auto, JP Morgan says that it's a potent combination of ability and intent, and on back of that, they've raised the APS estimates on Bajaj as well by 3 to 5%. So JP Morgan sees big growth for two-wheelers compared to the PVs, and hence a big upgrade on TVS Motors to buy now, and they've also raised the target price on Bajaj Auto.
Okay, all right. So that is about the auto space. Thank you so much, Nimesh, for joining in with all those details. Let's stay with the two-wheeler space. Divis Motor Company has rolled out the new Jupiter 110cc scooter, which will replace the old model. The new scooter is priced at over 73,000 rupees ex-showroom and will be available in 4 variants. The scooter will be competing in the ICE category with the likes of Honda Active and Hero Pleasure Plus. Parikshit Luthra caught up with the CEO, K.N. Radhakrishnan, on the new launch and what TVS expects from the festive season.
This year, the rural for the first time is ahead of urban. Okay, and we are extremely happy that the industry is doing well. This festival season, I am of the view that you will see much better growth rate than whatever the 13% what you are seeing, because the sentiments are positive. We are expecting a normal monsoon this year, and we will do much better with especially this product launch. I'm expecting much better growth than the industry. If the industry is going to grow minimum more, see, so far we have seen 13%. I'm expecting much better growth rate, maybe 15%.
Okay, that is TVS Motor. The stock is high by 3%. With that, let's do one thing. Let's move on and have some market conversation. The Nifty today, it is range bound, 31 points higher, but the markets of late have been in focus for a number of reasons. Geopolitical tensions, we've been talking about Indian earnings and the global backdrop as well. Hemant Kanawala from Kotak Mahindra Life Insurance is joining us now to discuss market fundamentals and his top sectoral picks. Hemant, good morning. Thank you so much for joining in. Well, you know, the big event in terms of earnings is behind us now. You say that valuations are not the real reason why you would look at any sector or specific bet. So in terms of earnings, anything that stood out for you, something that you discovered would continue in terms of growth going forward as well?
I think so. The surprise of this earnings season has been on the IT side, where we entered the season with somewhat muted expectation. But the companies have, delivered better than that. And going forward, on the back of expectation of rate cut in USA and also soft landing in USA, we believe that IT demand should pick up. They've gone through a good, consolidation phase in the last 2 years, where the demand has been muted, and so companies have done a lot of restructuring at their end also and become more efficient. Organically. And so we believe IT sector can continue to do well going forward also. So that is, I think, so one sector which stood out in our view.
Is that an overweight in your portfolio? And in the IT stocks, large caps, mid caps, which ones would you bet on and why? Because there's also that ER&D services where names like KPIT Tech have had a runaway rally.
Yeah, so we are evenly poised on both the segment, because large companies have an advantage of better valuations, and they will also benefit from the segment, because what is happening is that the expectations are that the BFSI segment should pick up in USA on the back of more regulatory spending by the banking companies there, and if there is a rate cut, that also helps the banking sector in USA. So if that happens, then most of the Indian companies are reasonably exposed to BFSI segment. And so it will help most of the companies in India. So we are playing both large caps and mid caps. With regards to ER&D space, obviously it's a very attractive opportunity. We don't have any large presence there, but yeah, that offers a good opportunity for the Indian companies focused on that segment.
Okay. The other theme that you are positive is on some of these emerging themes, renewables, be it new energy. This is, of course, the big theme that we are talking about going forward. But do you think this is something which will play out in the immediate future, say 4 to 5 years down the line? Or is it a longer term story that an investor should look at?
So I think so. That theme is playing out in phases, so that every phase a set of companies may benefit, or as the company progresses, then they may continue to benefit from it. So like if you go to electronic manufacturing, as a theme, then it started with just assembling of mobile phones in India, and there are a set of companies who benefited out of it. Now the government is looking at whether we can get into semiconductor or the components part of it, and they are rolling out incentive plans for that. Now either a new set of companies will benefit from it, or the existing companies can also start tying up and get into that space also. Like in a mobile, 50% is component and 50% is semiconductor. And government is rolling out incentive plan for both the things. So now there are different set of companies which will benefit from that move in this thing. So there are companies who have applied for incentive plans on the semiconductor side, and they will start playing out. Similarly on the renewable, it started initially with wind, solar. There is a lot of action happening, and government is trying to move into backward integration everywhere. And at every stage, either the same set of companies may benefit, or there will be new set of companies who have been working on it and will benefit out of it. So it's an evolving space, but two things are happening. One is the globally the environment is changing. People are focusing on renewables, electric battery, vehicles. So all those things changes are not only in India but happening globally. And today India has an advantage that we are at the forefront in this technology change. So normally what used to happen is that traditionally India will participate, say like mobile phones were introduced as a technology in early 90s globally, but it came to India only in late 90s, and we were late in adopting. So we were never able to benefit from that ecosystem. But today, as the things are changing globally, we are also able to participate. So there will be companies which will come from India and who can have a very exponential growth as they participate. So it's a both import substitution story as well as an export opportunity which comes for India.
Okay. The other thing that you like is the generic pharma space. What's working out here for you? What do you think could be the next trigger of growth for the pharma space in general? Because we have been talking about some of these companies getting warning letters, US FDA inspection. There's a lot happening in the space.
Yes, so last 10 years has been very difficult for pharma sector, where a lot of regulatory action happened on Indian companies. Maybe there were some lapses in their processes, and which they worked upon. And I think so they have evolved much better and stronger in those changes. But going forward, there are shortages of drugs in USA, and I think so USA is looking forward to beef up the generic supply there. So they are having a favorable outlook, and the generic drug pricing is improving overall. So that will benefit the Indian company. But more importantly, what is happening is that in USA in the current year, they will pass Biosecure Act, which efficiently means that you have to diversify your APIs supply base away from China. So there is a big time frame of around 8 to 10 years to do that. But we believe that incrementally, every US company will start looking at alternate sources away from China, and India should be a big beneficiary of it. So I think that will be a large theme which will play out, and the Indian companies again who have been working on it for years, particularly in the API space, will benefit out of it in a significant way. And so that we believe it's a large opportunity to look at it.
Banks, out of I think the last 4 or 5 years, they've given return in I think 1 or 2 years only, and it's frustrated a lot of investors because you see relative value in it. And they've gone through a Goldilocks period where growth was high, asset quality was under control, and yet the stocks didn't outperform the market. Where do you stand on banks right now, and what would be the best approach?
So, against the contrary view, against the popular view on the market, we are somewhat cautious on the banks because we believe that the regulators want the growth to slow down. So it's not that the growth is going to collapse, but credit growth at the margin, which was north of 15% for last 2 years, will come down because the regulators want them to work on the deposit side. So they want credit deposit ratio to improve, and that's where credit growth will slow down, and they will have to mobilize more deposits. And deposits are hard to come by, and so they may have to pay higher price for it. So you have a slowing credit growth. NIMs may at the margin come under pressure because you are having historically high NIMs. And so there is will be a tendency to give up a bit on margin to shore up the deposit because that is what the regulator wants. And even on the asset quality side, we had the best of the cycle. So we are having one of the historical lowest asset quality today. There are no immediate signs of worry, but it is normal to assume that credit cost will increase over the time as the economy and the current book starts maturing. So we believe that, against the banking, nothing wrong, and maybe on an absolute basis, they will generate returns. But on a relative basis, banking sector may, like the other, exciting and interesting things happening in the market, in the economy.
Okay, all right. Take that point, Hemant. Very interesting chat and some of the new sectors that you spoke about that could be in focus going forward as well. Thanks a lot for tuning in. That was all about market fundamentals. But for now, we'll step into a break. When we come back, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines. 25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18, weeknights at 7 p.m.
Welcome back. You're still tuned into Trading Hour. Well, the government has slashed the import duty on gold and silver from 15% to just 6% in the union budget. However, what has surprised the industry is that the government has forgotten the duty drawback rates. Manisha is here with more on that. Manisha, what does this mean?
Oh, well, yes, it does mean that the government is incurring losses here, but the jewelry as a sector clearly seems to be laughing its way to the bank right now. As you mentioned that during the budget, we did see the government slash the import duty on gold, silver and platinum. So for gold and silver, it was slashed from 15% to 6%. And usually what it happens with duty drawback is that it is usually aligned with the import duty. That's how it happens in various sectors as well. But here, we do not have a new updated notification. So it still continues with duty drawback at around 15%. So, for both gold and silver for that matter. So you have a higher duty drawback on one side, but you have lower import duty on the other side. I have worked out a couple of case study scenarios with IBJA, taking in account on what exactly works out in sense of numbers here. That should explain the matter to you more easily. So when you look at gold, while the import duty stands at 6% now, so that accounts to 390 rupees per gram. If you are exporting exporting gold jewelry, the duty drawback at around 15%, you stand to earn almost 704 rupees onto this. So you can see that difference on what you are paying as an import duty, on what you are getting back as a duty drawback. It's a similar scenario for silver as well. Here as well, because the import duty is at a 6%, you have to pay 5,100 to import 1 kg of silver. But when you are exporting silver artifacts or jewelry, etc., the duty drawback that you get back is 8,949. So not just that the government is losing in sense of import duty because they cut it so sharply, but they also are losing in sense of duty drawback because that is what the jewelers are asking for. This is as per the notification that there is. The expectation is that this is something that perhaps is a miss. Government perhaps forgot to do this, and this could be done pretty soon. But at this point in time, in a matter of last 1 month, this is how the gold and silver industry really have performed.
Thank you very much for that. Let's get to another important corporate story. Adani Power gets the NCLT nod for acquisition of Lanco Amarkantak Power. Lata is here with more details to decode which banks could gain from this. Lata.
Well, it became an NPA in 2017 and 2019 entered NCLT. Now, Adani Power says that it has won the bid. The NCLT has passed the order declaring Adani as the winning bid for payment of 4,101 crore in exchange of the Lanco Amarkantak Power project. This is positive for Adani Power itself first because the original files, claims filed was as much as 14,631 crore. And Adani Power is only paying 4,101 crore. And they say in the exchange filing that in the last 3 years, the revenues of the company have been around 1,330 crores per year. So, the last 3 years' revenues itself equal the amount that they are paying. Now, how is this 4,101 crore likely to be shared between the various loanees, creditors to the company? PFC is the biggest lender with 20.1% of the claims, so they should be getting around 800 crore. REC also has about 20% of the loans given, and so out of 4,101, they get 800 crores. IDBI, which has 10% of the exposure, gets 400 crores, just doing the math. IOB, 8.4%, 344 crores is what it will get. Axis, 8.3%, and that gets 340 crore. Union Bank, 8.1% of the total exposure, gets 332 crores by arithmetic. And PNB, 7% of the loans, gets 287 crore. LIC, 6.8%, gets 287 crore out of the 4,101. Bank of India, 4.4% of the exposure, should get 180 crore out of that 4,101. Then there are minor gainers like Edelweiss, ARC, Canara Bank, Indian Bank, etc., who have less than 1% of the exposure. The important point for the banks is most of them had declared it NPA way back in 2017. So it's almost entirely written off. This 100 to 400 crores that the various banks are getting will directly go to the profit.
All right, so that is the update as far as Lanco's Adani's acquisition is concerned. Thank you so much, Lata, for joining us with those important details. We'll do one thing. We'll take a short break. Rohit Katyal from Capacity Infra Projects will join us next to discuss their business outlook and more.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Well, the script is out. What is that? After 2 months of speculation, reportage, and the company is talking about being in touch with each other. Zomato's acquisition of Paytm's ticketing business for a little over 2,000 crore is their new bet on the going out business itself. Remember, they've announced a foray into that through their third app, which is District, which could launch anytime in the next few weeks, as per Deepinder Goyal itself. This will be their third app after, of course, the roaring success of both Zomato as well as Blinkit. So to understand what Zomato's game plan here is, how big can this be from a shareholder value creation standpoint, let's take a look at a couple of numbers. You know, the business that they've acquired from Paytm, they had a gross merchandise value of close to 2,000 odd crores. They had a revenue of 297 crores as of FY24 with EBITDA of close to 29 crores itself. Now, these numbers imply at 2,048 crore, the deal was done at a one-time GMV and 7 times sales business, which has an implied take rate of 15% and margins of 1.5% of GMV. What does Zomato plan to do post-acquisition? They intend to transition customer traffic from Paytm Insider, Ticket New, all these apps to District, and also incentivize customers to move to District. So you and I as customers could brace for a lot of offers as well. They're targeting FY26 GOV at over 10,000 crore rupees with rapid growth, which implies a 40% CAGR as well. They also see medium to long-term margin potential of anywhere between 4 to 5% as a percentage of GOV. Additionally, they say further scale will depend on newer use cases beyond just ticketing like shopping, staycations, travel, etc. Now, assuming all of this holds true and using conservative estimates versus the company's own guidance and projections, FY27, the GOV could actually be over 20,000 crore with an EBITDA percentage of 3% of GMV, telling you the absolute EBITDA could be close to around 600 crores. Now, if you just juxtapose the current deal multiples to that itself, which means...
Welcome back. Some stocks catch your attention. Power Mech, where the board has approved a 1:1 bonus. That stock is flying now, up close to about 12%. Shriram Properties has been a big mover this entire week. Today it's added 5%, taking its week-to-date rally to 35%. Another stock, pull up a one-week chart of Morpen Laboratories, 4% for the day, 34% for the entire week. So many of these stocks continue to attract a lot of interest. These are small and mid-cap, stocks. Leica Laboratories, you've got Sadbhav Engineering. So big moves in, even in Merck Electronics, pretty large volumes, and the stock is in an upper circuit of about 5%. But let's talk about Capacity Infrastructure. Now, this is a company which, it's quiet today, the stock, but this week it's up close to about 14%. They've reported a strong set of Q1 numbers. The net profit is up 180%. The revenue growth has come in 32% on a year-on-year basis. And the company has said that they're expecting a 25% revenue growth for the full year. Rohit Katyal, Executive Director at Capacity Infrastructure Infra Projects, is now with us on the show. Mr. Katyal, thank you very much for joining in. First, if you could elaborate how you plan to achieve this 25% top-line growth for the full year. And is there a possibility you will do better? Because Q1 has been stronger at 32%.
Yeah, good morning. So the entire order book at the moment is close to 9,800 crores. And the 25% growth is the minimum requirement what we need to deliver in the current financial year to the clients. Therefore, while Q2, due to monsoons, though being the best quarter, second quarter in the history of the company looks at substantial growth in Q3 and Q4. And therefore, we have given this projection of 25%. If we achieve what we have set ourselves internally to do, then definitely your idea of a better growth than the given 25% number, it will surely be achieved.
Okay. Mr. Katyal, you mentioned that there were some issues in Q2 with respect to heavy rainfall, and despite that, it has been a strong quarter, and the second half would be better. You had earlier indicated that the order inflows could be to the tune of 3,000 crore rupees in FY25. It's at 250 crores in Q1. So will the last 3 quarters make up for the weakness that we saw? Because it would be essentially over 2,700 crore rupees. Is that something that you'll be able to achieve as well?
So let me clarify. Our order book does not include about 4,000 crores of orders of MADA project, which we are executing in joint venture with Tata Projects Limited. So in the first quarter, we have actually added another 1,000 crores from that order book into our executable order book. And therefore, the total inflow into the executable order book in the current fiscal is close to 1250 crores. Having said that, we carry some L1 positions, and given the traction both in the state governments and central governments for PMAY and healthcare projects, that is hospitals, we are more than confident of achieving 3,000 crores, excluding the orders which would get added into the executable order book from MARA project. So 3,000 crores.
So 3,000 crore of order inflow guidance is intact, and this is X of the MARA BDD project that you're executing, which was about 1,000 crore in terms of the increase in the order book in the current quarter. X of that, you're confident. You spoke about L1. What is the number?
We are close to about 1,000 crores. You know that in private sector, we work with practically all the top clients. And in private sector, it is not a bidding and the L1 situation. It's always on more of invitation and negotiation basis. So we are very close to closing some of those orders. And in the government side, we have already submitted our bids. And we do believe that some of those bids will get converted into orders in September of the current financial year.
Okay. You know, the other big event that Maharashtra will be seeing is elections in Q3. How does that impact order activity in general? And also wanted to understand the competitive industry. We have a lot of players entering the Mumbai market. There are a lot of real estate projects. The supply is increasing. Is that impacting take rates in any way?
So, yes, you're right that elections, once they are announced, hopefully by October end or November, whenever they happen, 40 days prior to that, you will see code of conduct being imposed. And that will be basically a blackout or silent period if the market knows that. So there will not be any bidding in the public sector space in that period. However, having said that, private sector works and bidding and order placements will continue. Further, whatever projects are being bid for CPWD, central government funded projects, that will continue unabated because the state elections will not impact that. So that's the part number one. Point number two, you must have read in the Economic Times yesterday that there is shortage of quality contractors for private developers. Rightfully so, the launches are at record high. The projects, ideally, which are coming in Mumbai MMR area, also in Hyderabad, are easily classified under super high rises. So there is a good opportunity for deserving contractors like ours to build up decent order books. However, we also believe that there will be certain uptick in the pricing parity as opposed to what we were getting in the prior years. This is simply a demand-supply mismatch. And the contractors, I believe, who are better placed will stand to gain from this.
So is there any indication how much would that pricing go higher by? Would it continue this year and go across to next year as well? Because as you've been pointing out, we are getting a lot of quality developers, but quality contractors, that, as you said, is in lesser supply. So will this continue, this price increase phenomenon?
Madam, I wouldn't like to speculate because we work in a non-speculative environment. We do not speculate on commodities. We have a pass-through clause. But I do believe that we are into nearly now 4 to 4 years of bull market in the real estate side. And given the registrations, which are at record high, with apartments in excess of 5 crores, also seeing about 150% increase last financial year, I do believe the momentum will maintain. However, to what extent, that is for everyone to see, and I wouldn't like to stick my neck out and guess on that. But given the private and the public sector impetus on the building segment, we do believe that there is a good opportunity of all contractors of repute in this segment.
Do you think you can push higher on margins given the pricing power that you could enjoy now going forward? Can margins go up to 20%, sustain there, hold there?
Ma'am, if you see the last quarter of the last fiscal, we were at 8.51% margin. That was a 200 basis point increase over the fiscal 31/3/23. So basically, you already have seen a 200 basis uptick in the net profit. Similarly, an uptick in the EBITDA and EBIT margins. The order book, which we are sitting on at the moment in time, that is for sure to maintain this momentum. And as we increase our revenues per quarter beyond 650 crores, there will be an uptick of obviously another 50 basis points because of lower fixed cost as a percentage to sales. So answer is yes, these are sustainable. The order book currently what we have has to be executed over the next 3 years or so. And apart from whatever fresh order inflow which will happen, and therefore we will see a momentum built up on all fronts, whether it is revenue, whether it is EBIT, EBITDA and PAT.
Okay, all right, Mr. Katiyar, we take that point. Thank you so much for joining in today with your plans and the business outlook going forward. That's the word coming in from Capacity Infra Projects, sounding very confident on achieving the guidance that they had given earlier and also about the newer projects that they are L1 on. With that, let's talk about Shyam Metallics and Energy. It's surging in trade after UBS initiated coverage with a buy call and target price of 1,200 rupees a share. The brokerage says the company is on track for high profit growth and forecast and EBITDA CAGR of 39% over FY24 to FY27. Earlier today, we spoke to company's Vice Chairman and Managing Director Brij Bhushan Agrawal. Listen in to what he had to say.
In the time to come, in next 3 to 4 years, we expect that we should be able to cross more than 70 to 75%. And most of the investment is on the downstream side, on the value addition side, and also going backward on the cost side. Whatever margins we are doing today, it has to enhance because, you are seeing all the downstream projects will add more value forward, and the investment backward is also reducing the cost. So definitely the margin should improve around close to 4 to 5% in the time to come. Yeah, because if you see all the downstreams are not very heavy capex and it's all value add, little different. So definitely the ROC has to go up further because it's majorly on the downstream is creating more margins, and the capacity what had to be added on the upstream side has already been added, and most of the downstream, 70-80% of the raw material, we will be consuming. As Shyam Metallic is always a very investor and stakeholder friendly company, we would like to abide whatever is in the interest of the company, we would like to go on that.
Okay, get into a break. On the other side, we'll put the spotlight on Ambuja Cement, Reliance Industries and Go Digit to find out why they're buzzing in trade.
Itself by over 20,000 crores. That's a 10 to 12 times jump over the 2,000 crore that they've paid for this business, and this does not even account for newer use cases or further synergies and live event IP valuations, etc. as well. Now, for normal deals, a 10 to 12 times jump in 2 years seems extremely high, but for Zomato, it's par for course. We've seen that with Blinkit as well. From the price that Zomato paid for Blinkit in 2022, the valuation of Blinkit itself has rallied by over 20 times, with brokerages citing further upside for quick commerce as well. So the short point, the bottom line is that the street expects at least 10 to 12 times valuation extraction from District, which the management has earlier said will be their third major value driver in the B2C space.
Wonderfully magical is in the air, isn't it? Yeah. We're feeling it here in this arena, but it's spreading all across this country we love. A familiar feeling that's been buried too deep for far too long. You know what I'm talking about. It's the contagious power of hope. America, hope is making a comeback. Yeah. is more than ready for this moment. She is one of the most qualified people ever to seek the office of the presidency. And she is one of the most dignified. A tribute to her mother, to my mother, and to your mother too. The embodiment of the stories we tell ourselves about.
Welcome back. You're still tuned into Trading Hour. Well, we've been talking about a lot of stocks in the broader markets. Just take a look at CDSL. It goes ex-bonus today. 1:1 was the ratio. And adjusting for that, the stock is higher by 10% right now. So watch out for that one. It is at the day's high. Big surge on CDSL that we are seeing right now. And the other stock on our radar is Ambuja on the back of a block deal. Nigel is joining us with all those details. Nigel.
Well, that's right. Ambuja Cements is the one in focus after 6.8 crore shares did change hands, raising close to around 4,250 crore rupees. And the price at which this deal was done was around 625 rupees per share. The deal was done in the block window, and that's why those that were short on the market, they got trapped out because the expectation was that the stock will start off lower since the base price was fixed at around 600 rupees per share. Now, sources indicate that the promoter entity is likely to be the seller in this particular large trade. To give you a quick update, and revise your memory, in October 2022, we saw that the promoter entity, well, they issued close to around 20,000 crores worth of shares to themselves at a conversion price of around 419 rupees per share. Now, gradually in the last few quarters, this conversion has been taking place because earlier they paid only 25%, but gradually they were, honoring the commitment, and that's why the promoter holding moved from around 63% to around 70%. Post this large trade, it will again be in the vicinity of around 67.5 to around 68% or thereabouts. The street is reading it positively because they believe now at the promoter level, there will be some deleveraging that will take place, which will make the promoter group even stronger. And as it is, the preference for large cap in comparison to mid and small cap has been something that the street has been working with. So explains why Ambuja Cements is a stock in focus today.
Okay, another stock in focus today is Reliance Industries. This is after their annual report was out and ahead of the AGM, which is scheduled on the 29th of this month. That's later next week. Bernstein has an outperformed rating and they've gone ahead and increased the target price to 3,440. And the key reason is they believe Jio is going to now emerge as a big growth driver, with Jio looking to monetize its business. Remember, Jio was the first one to go ahead and raise tariffs about a month back. They've completed their 5G rollout, so the cash flow outlook will look better. According to Bernstein, the revenue growth should be 16%, while the EBITDA growth should be 20% over the next 3 years. Their market share gains will continue as they hit more than 500 million subscribers. And according to Bernstein, their revenue market share could stand at 47% by FY25. CLSA too is bullish on Reliance Industries. The current market price is 3,000, but according to CLSA, the target price should be 3,300. That's the fair value. And again, for them, the next level of growth will come in from Jio with 5G monetization, and even the broadband services that they offer will ramp up, adding to that upside.
Okay, so Reliance Industries in focus at that 3,000 mark right now. Moving on, insurance stocks, Go Digit, Star Health and ICICI Lombard are in focus on the back of fresh brokerage notes. Yash is joining us with more details on this. Yash.
Well, it's a very interesting report which Jefferies has released, not just on Go Digit, but the entire general insurance industry. They've clearly taken sides between the two large segments of general insurance sector, that is motor and health. What they are saying is that motor is expected to fire full throttle, whereas health is expected to remain under some pressure for the coming time. What they've done on Go Digit is that they've initiated their coverage with a buy rating target price of 420 rupees per share. They say that product diversification and operating leverage can improve the combined ratio for Go Digit to about 103%. They also expect the EPS CAGR of 73% and ROE expansion to about 16% for Go Digit General Insurance. On Star Health Insurance, they've come out with a hold rating. Target price has been reduced to 550 rupees per share. What they are saying on Star Health Insurance is that industry headwinds can keep profitability under pressure. Also, they see elevated combined ratio of 97 to 98% over FY25 to 27 estimates with range-bound ROE ROEs of 11 to 13%. Interestingly, on ICICI Lombard, they've retained the buy rating, but they've increased the target price to 2,600 rupees versus 2,180 rupees. They expect the combined ratio to improve by about 370 basis points to 100% by FY27 estimates. Also, EPS estimates have been raised anywhere between 6 to 16%. PB Fintech is another top pick for Jefferies. They expect the turn of cycle and blanket price hike to lead stronger growth for PB Fintech. Also, they say that the launch of its claims management business can strengthen the customer ownership and improve the renewal ratios for PB Fintech. Largely, to summarize their take on the health insurance and the motor insurance industry, they say that large private insurers will gain from multi-year upcycle in the motor insurance industry. Motor upcycle will be led by premiumization of underlying auto mix, and second thing, moderating competitive intensity. On the health side, they've said that that particular segment can see some pressure going forward, and that pressure will be led by rising claims frequency and elevated competition amongst the players.
Thank you very much for that. That's PB Fintech up 0.5%, but Go Digit is moving up. Get into a break. We'll come back and discuss market technicals. Mitesh Thakkar joins in with his top trading bets.
Her story is your story. It's my story. It's the story of the vast majority of Americans trying to build a better life.
See Barack Hussein Obama last night? Take little shots. He was taking shots at your president. And so was Michelle. You know, they always say, sure, please stick to policy, don't get personal. And yet they're getting personal all night long, these people. Do I still have to stick to policy? The Harris-Biden administration has been caught fraudulently manipulating job statistics to hide the true extent of the economic ruin that they've inflicted on America. The new data from the Bureau of Labor Statistics shows that the administration padded the numbers with an extra, listen to this one, 818,000 jobs that don't exist. So they said they existed, and they never did exist. They built them up so that they could say what a wonderful job they're doing. No, we've never had numbers like this. They don't exist.
Dr. Deshpande, you know, the crux of our problem is probably our diets.
Welcome back. Mitesh is now with us for a quick technical check on the markets. Mitesh, the first half of the trading session hasn't yielded much by way of price action. Do you anticipate some momentum coming in the second half of the trading session, or is it going to be one of those quiet, sideways, lackluster moves with investors waiting on the sidelines ahead of that Jackson Hole meeting? What have you made of the morning, and any stocks which catch your attention? Oops. Okay, we'll try and reconnect with Mitesh, but this has turned out to be a very, very quiet, sleepy kind of a trading session. You know, for the last couple of days also, markets have been moving in a tight band.
Yeah.
We've been inching up, slowly and steadily taking those baby steps and inching up. But today, it's absolutely unchanged on the benchmark indices.
Markets are taking a rest. They are also in the Friday mode. They're like, okay, we don't want to do much.
Yeah, looks like, but investors are waiting for the dash,
Yes,
the
of
retest
course.
of that 25,000 mark on the Nifty. For now, it's 24,800 on the Nifty, Sensex above 81,000. Mitesh is now back with us. Mitesh, we were asking you whether we should anticipate some momentum in the markets in the second half of the trading session.
No, I would go with that. There's a chance of that happening. The Bank Nifty has started picking up. Both the indices have come into the green from the red. And the Bank Nifty actually made a high of 51,117. And I've been saying that, once we see a hourly or a 2-hourly close above 51,100, there could be some momentum. So I would still bet on that there's a stronger chance of us going higher. And that's why I have 2 buy calls. In fact, one of them is a banking name, which is ICICI Bank. Keep a stop at about 1184 here. Look for targets of 1230. And the other one is Hindalco. It's already been showing some momentum. Today is seeing good continuation. So buy here with a stop at 684 for targets of 715.
Okay, all right, Mitesh, thank you so much for joining us and have a great weekend ahead. That is some technical check on the markets. By the way, from the broader market, some of these stocks that should be on your radar. GMR Airports, that stock is up 2.5% right now. We also have BEL, which is higher in trade as we speak, so 0.8% higher over there. Coal India from the Nifty pack is doing well, so that stock is up around 1.5%. So these are some of the movers in the F&O pack which are moving on high volumes as well. So some of those stocks that we wanted to focus on. But it's time for a short break. When we come back, we'll get you more on the markets and some market opinion on the other side as well. Stay tuned.
%51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
Welcome back. You're still tuned into Trading Hour. Absolutely flat for the markets, but we do have a lot of stocks moving around in the broader markets. The Nifty has fallen actually from the highs. It's a steep fall that we've seen. 11 points out on the Nifty, but yes, some fall coming in the Midcap index as well, which is now down 74 points. And if you look at the Nifty constituents, which are leading to this fall from the highs, some of these names like L&T, Reliance Industries, TCS, Tata Consumer, Infosys. So IT Pack is the one which is leading to the fall that we are seeing from the highs as well on the Nifty. But we'll do one thing. We'll wrap on this edition of Trading Hour. As we do that, let's listen into Andrew Holland, the Chief Executive Officer at Avendus Alternate Strategies, talking about his views on the interest rate cut, his preferred themes in the market, as well as the EV space.
I think we all kind of working on the basis now that an interest rate cut in September is coming. I think they should front run the kind of interest rate cycle. I think they should do 50 basis points, albeit that our base case is 25. I think that would give the market that kind of extra fillip that the Fed is ahead of the curve this time. And I think that's the key. The market continues to worry about whether the Fed is behind the curve. Obviously, the way we think about it is that, we continue to play on the themes that we think will, play out over a longer period, because that's where you're going to continue to see the earnings momentum, not just for the next 2 quarters or 3 quarters, but for the next 2 to 3 years. So again, that falls under that defense, renewables, CapEx spending kind of scenarios. So if the interest rate cycle is now starting to fall, it should be good for our banking sector in India if the RBI follows suit. And of course, we'll all be thinking about October at that next interest rate policy meeting. I think if you're playing this, you play the whole sector in the short term, and then see which ones have outperformed, and then do your kind of reallocation between private and PSU banks. I think the next catalyst, as I mentioned previously, will now be the awarding of more contracts. And I expect that will happen from probably kind of next month onwards to the end of the year. And I think that's going to be the next leg. My concern is always is execution, and that's maybe down the road. But, we move around within the themes. Obviously, if you're feeling that some of the themes are not have taken a back seat compared to others, then you can shift across. So hospitality is probably where we're a little bit more excited at the moment. I think in terms of Ola's listing, I think we're all surprised at where the share price is. But it's obviously kind of, highlighted some of the undervaluations of the other two-wheeler companies in this sector who also have, exposure in the EV sectors.
In 1972, a fearless black congresswoman named Shirley Chisholm she ran for president, and her determination let me and millions of others dream bigger, not just because of who she was, but because of who she fought for. Working parents, poor children, the last, the least, and the lost. In 1984, I brought my daughter to see Geraldine Ferraro, the first woman nominated for vice president. If we can do this, Jerry said, we can do anything. And then there was 2016, when it was the honor of my life to accept our party's nomination for president. wish my mother and Kamala's mother could see us. They would say, keep going. Shirley and Jerry would say, keep going. We're saying, keep going. Together, we put a lot of cracks in the highest, hardest glass ceiling. On the other side of that glass ceiling is Kamala Harris raising her hand and taking the oath of office as our 47th President of the United States. My friends, when a barrier falls for one of us, it falls and clears the way for all of us.
Stocks trade range ahead of the Fed Chair Jerome Powell's speech at the Jackson Hole Symposium later this evening. Auto and capital goods stocks gain while realty and consumer durables sulk. Midcaps underperform.
Over 2.7% of Ambuja Cement's equity changes hands in the block window, with promoters being the likely seller. Nykaa too sees a 1.4% equity change hands on likely selling by a prominent pre-IPO investor.
Union Defence Minister Rajnath Singh is likely to take up the issue of engine supplies by GE to HAL in his US visit. Any positive movement on this can be a big fillip for the defence major.
It's time again for the half-yearly review of the NSE indices, with analysts expecting a shuffle in the constituents. The Nifty and the Nifty Bank are the key indices in focus. Hello and welcome to Halftime Report. I'm Ekta Batra. With me is Mangalam Malu. Well, it is turning out to be a quiet day, so we're just about biding time at this point in time. And obviously, all eyes will be on what happens with regards to the Fed. The Fed minutes were quite bullish. So let's see whether Jerome Powell will resonate that sentiment in today's speech at Jackson Hole. But besides that, it's a stock-specific week, Mangalam, definitely for our markets. So despite the indices being quiet, if you look at it on a week-to-date basis, there's some smart movers which are there. So, for example, in the broader markets, IFL Securities is up 28% this week. Nykaa is up around 16% this week. Sequence Scientific has rallied around 17%. Interglobe Aviation is up around 9%. So really a stock-specific, stock pickers market, you'd have to say. So, the opportunities continue to be there despite the indices just about consolidating.
Absolutely. And look at some of the stocks which are flying around today. Case in point, literally Interglobe Aviation, which is up around 4%. If you're not flying, you're landing at GMR Airport. That stock up around 2.5% as well. Dixon Tech, TVS Motors, a bunch of stocks, all of them in focus. But interesting, moves in today's trading session from an advanced decline standpoint. All through this week, the first 4 trading sessions, if you look at it, the advanced decline lines were far apart from each other, but now they're getting slightly closer. So today, the difference is just about 300 stocks as against the 500, 600, 1200 stocks that it would be over the last 3 or 4 trading sessions. And in that, the mid-cap index is a slight underperformer. So that's something we need to keep an eye out on, even as the Nifty is moving higher, just about 150 points away from that 25,000 mark as well. The question is whether we, see some bit of a fatigue after the rally that we've seen, or should we consolidate before the next up move? The answer to that would obviously come from the global markets and more specifically the Fed Chair's speech at Jackson Hole today. But speaking about a lot of individual stocks, Ambuja Cements, that's the one that's trading in green after a big block deal where nearly 2.7% equity changed hands. Nigel joins in with some more details. Nigel.
Well, that's right. This deal was something that we here at CNBC TV18 had hinted about. Nimesh had spoken about it at D-Street Chatter, and my colleague Sudarshan as well had briefly spoken about it. So this deal was anticipated, and early this morning, around 6.8 crore shares did change hands, and that's where the promoter entity could raise a few thousand crores. Now, the base size of this deal was fixed at around 600 rupees, but the deal got closed at around 625 rupees per share. Some part of the street was short on the stock because of that discount in comparison to yesterday's close, but the deal took place in block window, and that's why those shorts are scrambling for cover. Just to put in a couple of alerts, in October 2022, the promoter entity went ahead and they issued shares worth close to around 20,000 crores to themselves at a convertible price of around 419 rupees per share. And in the last 3 quarters or so, that entire conversion has taken place, which made the promoter entity's stake move from around 63% all the way to around 70%. Now, post this deal, well, the promoter entity stake will come down to around 67.5% or thereabouts. The reason the stock is higher is because the trade took place in the block window, so all those shorts had to scramble for cover. And also, there is a preference for larger cap names in comparison to mid and small cap, given the kind of inorganic growth that we're seeing. Back to you.
Okay, all right, Nigel, thanks very much for that. So that's on Abuja Cement. But two-wheeler stocks are in focus. This is on the back of a fresh brokerage note from JP Morgan. Nimesh is here with the details on our special segment, Standout Brokerage Reports. Nimesh, over to you.
Thanks, Ekta. So all the two-wheeler stocks are buzzing in trade on the back of that JP Morgan note. They've actually upgraded a few stocks. The first name is TVS Motors. They upgraded the stock to overweight from neutral. They've raised the target price to 30.50. Interestingly, even UBS has put out a note on TVS Motors today. They further raised the target price to 3,200. This seems to be the most aggressive as far as target price is concerned on TVS Motors. The other name is Bajaj Auto. Even that is buzzing on trade. While JP Morgan maintains an overweight stance, there they've raised the target price to 11,225 on Bajaj Auto. On the other side, they've downgraded Hero Motor to neutral, target price of 50 to 30, and they remain cautious on Eicher Motors with a neutral rating and a target price of 40 or 45.10. Now, in the auto sector, JP Morgan believes that the two-wheelers are in a sweeter spot compared to the four-wheelers. They expect the growth in the two-wheelers to be much higher than four-wheelers, at least in the near term. Even the electrification in the two-wheeler space has picked up, but again, it's at a very gradual space. So on back of it, they do not expect any margin pressures for the incumbent players, at least in the near term, in the two-wheeler space. For TVS Motor, JP Morgan believes that the market share gain is quite resilient, and hence they've raised the EPS estimates for FY26, FY27 by nearly 5 to 18%. On Bajaj Auto, JP Morgan says that it's a potent combination of ability and intent. So on back of that, they've raised the EPS estimates for Bajaj as well between 3 to 5%. So on back of this, a big upgrades coming in, both on TVS Motors as far as the rating is concerned, and on Bajaj Auto, they've raised the target price now to 11,225.
Incredible, Nimesh. Thanks a lot for pointing that out. Both those stocks among the top gainers in today's trading session. Speaking about the TVS motor space or the two-wheeler space itself, TVS Motors has rolled out their new Jupiter 110cc scooter, which will replace the old model. The new scooter is priced at over 73,000 rupees. Ex-showroom will be available in 4 variants. The scooter will be competing in the ICE category, which is the internal combustion engine, with the likes of Honda Activa and Hero Pleasure Plus as well. Parikshit Luthra caught up with the CEO K.N. Radhakrishnan on the new launch and what TVS expects from this festive season as well. Insightful discussion that. Hear that out. All right, we'll just try and get Parikshit's conversation with the management out there as well. But that looks like an interesting bike available in 4 variants, 4 different colors. Any of them you fancy? 73,000 rupees, not particularly. I don't know how that would compare with all the others there.
I would just get scared of the Mumbai roads riding them, but nonetheless, the colors look so attractive. I'm sure they're getting that female audience through with these exciting colors that you can see.
And the metrosexual men as well who love these
yes,
colors.
I wonder if they have
ads.
like a pink scooter as well.
They do actually. In fact, it matches exactly with your outfit and my tie. One of those will come up for you. I saw the blue one. I saw something in rose gold, and the third one was pink in color. If I remember, the visual keeps playing once again.
So they're really expanding their audience base or their base of customers with regards to this. So definitely looks really exciting at this point in time. But let's get to something else which is not probably that exciting as a scooter. It's Paints, but it's as colourful.
It's as colourful, in fact, much more than scooters. So let's talk about that itself. What's interesting about the sector of paints is that everyone is on the sidelines. They're slightly either hold or sell on the leaders, largely because of the big disruption that has taken place over the last couple of years with new entrants coming in, and the major one being Birla Opus. In that, Nuvama has actually come out of the note saying that they have an anti-consensus buy on the three key paint players. Who are the three key paint players? It's Asian Paints, Berger, as well as Kansai Nerolac, and Indigo as well. They like Pidilite as well, which is looked at a proxy to the paint companies as well. Why is that? Because if you look at, three particular things. One, the outlook is improving when it comes to demand. Secondly, the raw material factor is playing out as well, which will aid their margins. But thirdly, most importantly, now people are, not as scared of competition as they would be earlier itself. So let's break all of that down. Nuvama says paint players expect double-digit volume growth for FY25. Volumes will be aided by rural uptake. Paint companies have taken 1 to 2% price hikes as well. And as a result of which, their earnings would be, margins would be maintained. Crude oil and other raw material costs are near 1 year low itself. That's as far as the overall macros of the industry are concerned. On competition, a lot of them were a little circumspect about 6-7 months ago. But now, as conference calls have happened and commentary has come by, Asian Paints have said that the new launch seems to have underperformed expectations. Berger Paints on competition has said initial enthusiasm of the new entrant appears to be fading away, including among dealers. Kansai Nerolac has said higher confidence versus what they had 6 months ago in their ability to compete with the new entrants. And Indigo Paints as well, they're the 5th or 6th largest player in the country. They are saying they've observed no changes in the competitive landscape or in pricing pressures as well. So competitive fears are abating while the demand macros are improving. With all of this, are the valuations reasonable? That's what Nuvama believes. Why is that? Because Asian Paints trades at 49 times 1 year, 2 year forward earnings. Berger Paints are around 47 times as well. Indigo Paints is 35 times. So valuations are normalizing as against the excesses that we saw a couple of years ago. The only thing that I would be tracking going forward is that up until now, all the commentary on competition has happened in a time when the competition is, one, scaling up. Secondly, we haven't seen a full festive season. So how Birla Opus scales up in the festive season is something that I'll be watching out for. For the industry itself, how is the overall festive demand? And raw material cost environment is something that we're looking for. Because these companies have taken price hikes, even as crude oil prices have declined. Will they stay lower here, or will there be a lot more volatility is something that we'll eye. So these three things will determine what happens to the paint stocks over the next 6 months.
Okay, all right, Mangalam, thanks very much for that. So those are paint stocks in focus, but let's move forward. The NSE index constituent changes are on the cards and may be announced this evening itself. It changes likely in the Nifty 50 and Nifty Bank indices. Vivek is here to tell us which are the stocks which could be shuffled around and the impact it could have on flows as well. Vivek.
Well, that's right. So, most likely today evening you will get to hear from the Index Maintenance Subcommittee of the NSE indices. Remember, they will review all of the NSE indices, and across all of the indices, the NSE 50, the Nifty 50, the Nifty Bank, the Nifty Next 50, along with the whole of the other sectoral indices, they will look at the constituents and decide whether there needs to be any additions or deletions. The ones that we are tracking closely are the ones most likely where you will see changes in and where there will be passive flow impact. So the first one that we are looking at is the Nifty 50 itself. Now, as per IIFL, two likely inclusions that could come in. The first one is trend, and if it does come in, IIFL estimates that there could be inflows of close to $422 million into the stock. Bharat Electronics is the other one that they believe can make the cut this time around. Almost $400 million of inflows Bharat Dynamics could see, and they would be coming in at the expense of LTI Mindtree that could see outflows of close to $177 million, and Divis Laboratories that could see outflows of close to $219 million. One thing to remember is that these calculations are made taking into account that there will be no fresh F&O inclusion stocks. In that case, there could be changes. The other set that we're looking at quite closely is the Nifty Bank Index. So Canara Bank is a likely inclusion, close to $80 million of inflows. It could come in at the expense of Bandhan Bank that could see outflows of close to $40 million.
Okay, all right, Vivek. Thanks very much for that. So that's what the index constituent rejig could look like. There's some important news which is coming for Lupin, which should flash on your screen soon. They have received Health Canada approval for their biosimilar pegfilgrastim. Now, that's generally important because they're making inroads within the biosimilar space. they've got approval from Health Canada. It's not as big a market as the US, but it's generally always a precursor that if in case you do get approval in the Canadian markets, then you would probably get approval more easily in the US markets as well. So nonetheless, important from that perspective that they are making inroads into their biosimilar segment. They've received approval for pegfilgrastim, and that is the Health Canada approval. So maybe that should come up for you soon. We'll take a short break. Once we get back, we'll get you an exclusive conversation with Anand Agarwal, who's the CFO of V-Mart Retail. Stay tuned. Welcome back. Well, Star Health Insurance is in focus. Sources tell CNBC TV18 the insurer is exploring a foray into motor insurance markets. Yash has exclusive details on this. Yash.
Well, Ekta, it's a very interesting and a large development if it materializes for Star Health Insurance. Right now, Star Health Insurance only operates in the health insurance market. But as we know, that a composite insurance license is in the process of receiving a clearance from the government. And subject to that clearance, what we've been given to understand from our sources is that Star Health Insurance is also exploring and planning for a foray into motor insurance insurance segment. What we've been given to understand from our sources is that very recently Star Health Insurance conducted a survey amongst its distributors, amongst its partners, its underwriting team, and the response to the idea of entering a motor insurance through a composite insurance license is something that Star finds really attractive at this point of time. In the past, Star has of course publicly expressed intention to enter the life insurance segment, where they want to look at selling protection life insurance products through composite insurance license. So of course that is one market which would be getting added provided composite insurance license does get approved, and this is a new business segment which we've been given to understand from our sources that Star plans to enter. As far as the motor insurance market is concerned, it's one of the two largest segments for general insurance companies. In FY24 itself, all general insurance companies collected about 1 lakh crore in premium when it comes to the motor insurance vertical, and Star does have a fair chance of making it big in that segment because of its distribution network. It has about 7.1 lakh agents employed with itself for the distribution of its products. It has about 887 branch networks. So of course on the distribution side, it does complement Star's plans to enter the motor insurance segment, and that will be one very important trigger going forward if indeed a composite insurance license does come in, and then Star positively moves ahead with that particular intention of entering motor insurance segment.
All right, Yash, thanks a lot for that. That's a decline of almost 1.5% that we're seeing on Star. Remember, the management was fairly positive on its FY28 outlook in the conversation that it had with us from the sidelines of the Motilal Oswal conference. The stock was higher in yesterday's trading session as well. But let's talk about the consumer sentiment. After several quarters of muted consumer sentiment, value fashion retailer V-Mart is starting to see some betterment, but sales per square feet still not close to pre-COVID levels. The company's CFO Anand Agarwal told Shilpa Ranipeta in an exclusive conversation on the sidelines of the RAI Retail CFO Summit.
Definitely, there are some betterment which are happening, and especially in the tier 2, tier 3 segments where we sort of specialize in. And this particular segment had definitely been slightly subdued for the last 3 years post-COVID due to a variety of factors. But more than that, I would like to stress that we have taken a lot of actions in the last 1 year, a lot of projects that we've been working on in terms of improving the product profile, in terms of improving the pricing, in terms of also improving the look and feel of the stores. So there's a lot of work which has actually gone in terms of what we wanted to change, and some part of that has now started to bear fruit for us. So the improvement that we see is not just coming in from the macro getting better, but also a lot of it coming from what we have been able to turn around within the organization.
Right. But from a macro point of view, if I'm to talk about, do you feel that it will take a few more quarters before demand sort of really returns? What is your expectation?
No, definitely. It's going to be a slow recovery. It's going to be a slow growth, but definitely my sense is we are, getting better, and every month is getting better. In terms of performance, in terms of sales per square feet, we're still not as close to what we used to do before COVID. Right. So definitely we still have a lot to catch on. But yes, the progress seems strong and the growth is visible. So yes, it might take a couple of more quarters to get back to where we really want to be.
Fair enough. And, your sales per square foot this quarter was the highest, I think, in about 4 years, if I'm not wrong. Do you think that sort of growth right now will be sustainable for you with a sort of hope for revival going forward? And what's the trajectory that you have in mind when it comes to same-store sales growth also? How do you see that sort of going for this fiscal?
No, definitely we are working towards betterment, and all indicators are there that we should be able to get where we want.
Where is that?
We first want to get back to pre-COVID levels, and that's the first target. So that's the entire organization is working towards that. In terms of same-store sales growth, definitely I think mid to high single-digit same-store sales growth should be possible, and that is what definitely seems visible right now.
And finally, I wanted to understand with respect to store expansion, the last couple of quarters, in fact, generally retail players we've seen a slowdown in the store expansion plans. A lot of store rationalization also has taken place. Do you think, given the slowdown that we've seen in the past couple of quarters, that going forward for you also, are you slowing down on your store expansion or looking more, sort of doing store rationalization? Will you be focusing on closing down more stores? Sort of what's the strategy there?
So I think weaning out any loss-making stores or any part of the organization is absolutely a hygiene, and it's not about a slowdown or a aggressive growth strategy. As a strategy, we always look on growth, and we will keep opening stores, and we will keep opening more and more number of stores every year. There's no question around that. But having said that, yes, we have also, cleaned up some part of our network. In the last 2 years, we would have closed at least 30-35 stores. So these are, standard or regular exercises that you keep on doing, depending on how the macro or the environment is looking like, and particularly for the locations that you were not successful or so successful in. But yes, going forward, we are very, gung-ho about the future, and we are very, ambitiously looking at growth coming in from new store expansion.
All right, that's slightly optimistic commentary coming in after months of subdued consumer sentiment from the management of V-Mart Retail, a value retailer, mostly in the northern part of the country, now increasingly in the southern with the unlimited stores as well. Take a short break, come back. On the other side, we have Mr. Rajani of HDFC Securities joining in with some trading strategies.
To be with everyone this evening in this hall and everyone at home. This is going to be a great week. And I want to kick us off by celebrating our incredible President Joe Biden, who will be speaking later tonight. Joe, thank you for your historic leadership, for your lifetime of service to our nation, and for all you will continue to do. We are forever grateful to you. Looking out at everyone tonight, I see the beauty of our great nation. People from every corner of our country and every walk of life are here, united by our shared vision for the future of our country. And this November, we will come together and declare with one voice, as one people, we are moving forward. With optimism, hope, and faith, so guided by our love of country, knowing we all have so much more in common than what separates us. Let us fight for the ideals we hold dear, and let us always remember, when we fight, we win. God bless you. God bless the United States of America. Good night, everyone.
Again, what her appearance is just a preview of coming attractions of Thursday night. You can feel the electricity. It's a 13 on a scale of 10. It's one of the most electrifying political environments ever been created because it's all about the future, and she embodies it.
Oh, I think it's great. People really get excited when something happens they didn't expect, and it makes them happy. So we're a happy group.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is
Welcome back. Let's get you an update on a bunch of these buzzing stocks. Just keep an eye out on Interglobe Aviation, up 5%. Dixon Tech is doing extremely well. We're looking at MCX as well. That one's seen some traction over the last few minutes or so, moving to the high point of trade. Precision Camshafts definitely stands out as one of the broader market movers this week, up nearly 35% just this week itself. And PC Jeweler, we did put the spotlight on the jewelry sector in yesterday's value plus segment on our show here, and that stock continues to do well. In this year itself, it's rallied about 145%. A bit of a turnaround candidate, but again, it's fraught with a fair amount of risk, so we'll keep an eye out on that one as well. This year, up 144% on PC Jeweler. With the frontline indices just flitting between red and green, perfect time to get you some updates from the F&O pack as well. If you look at the Nifty as well as the Nifty Bank, yesterday's FII index futures action tells you that they went long on Nifty Bank and they sold some of their Nifty futures. So let's see how the Nifty Bank pans out and behaves post 51,000, because at the lower level around 50,700 there is the 20-day moving average, which is a support, but on the way up closer to 51,400 is the 50-day moving average, which needs to be crossed comprehensively for the Nifty to go past that 24,800 to 24,850 sort of resistance hump as well. The other important index to track today will be the IT pack. The IT pack has also been alternating between gains and losses all through this week, and now is currently sitting with a cut of almost 1%. And ahead of the Fed event, usually the street likes to go long into the Fed event, and if that were to happen, the first signs of that would be visible on the IT index itself. Advanced decline. We spoke about how over the last 4 trading sessions the number of stocks which were advancing were a lot more than the number of stocks which are declining. Now those lines are coming closer, more so in the last 15 minutes or so itself, with the this split being right down in the middle itself. So with this sort of up move that we've seen already and consolidation, the street is bracing itself for a bit of a range on the frontline index. What is that range? 24,800 is the fulcrum. So the 24,800 put is fairly active, telling you around 24,700 there would be some sort of support. But even so, on the 24,800 call, we've seen some positions being built, telling you between 24,800 to 25,000 could be some of the resistance markers for our indices. One stock which will be in focus is Balrampur Chini, enters F&O, most likely to enter F&O ban in today's trading session after exiting it from yesterday's trading session as well. So keep an eye out on that.
Okay, all right. So that's the F&O update coming in. We have Vinay Rajani of HDFC Securities who joins in to discuss what he's tracking today. Vinay, hi, welcome to the show. Well, the markets are definitely quiet in terms of the indices, but the action is definitely beneath the surface today. So tell us stock specific. Let's start with that. What are you tracking?
Yeah, so basically Nifty has been rising for 7 trading session, and this move has been very gradual and slow. If you were to look at the broader market, as you said, that the broader markets are much doing better, and the Nifty micro cap index has hit an all-time high in today's session itself. Small cap is not that far from its all-time high. So in a way, mid caps are showing strength. So as of now, sector-specific and stock-specific bullishness is there, and some FMCG, IT, and pharma. These are the 3 defensive sectors which are continuously doing good. So I think many large-cap FMCG is still giving good breakouts, like Hindustan Unilever, Dabur. There is a breakout on those charts, so those can be tracked. Some pharma stocks to be like a Torrent Pharma, that is also looking good. Some telecom stocks like Bharti or Airtel is also looking very strong. And today, after long consolidation, this auto index started performing well. So the two-wheeler space, especially Bajaj Auto and Hero MotoCorp, have started performing. So overall, sector rotation is going on. I am expecting that the markets to remain bullish only. On the higher side, there is a resistance between 24,850 to 24,950 zone. But overall, the long should be held, and I think the stop loss for the long position should be kept at 24,650 and keep on trailing basis so that we can ride the rally. So overall trend of the market is bullish, and I'm expecting that Nifty will hit a new all-time high about 25,100, and the sectors which have not performed now can do well, like Bank Nifty is yet to perform in this market. So sector rotation will be there. And right now, no doubt in a consolidation market, we are getting a lot of opportunities. I think FMCG index is I like the most for 1 to 2 days trades.
All right, 1 to 2 days trade, FMCG is what you like the most. Do you have any stock-specific recommendations here?
Yeah, so I like Hindustan Unilever, which is a large cap FMCG stock, which has just given a breakout from the long consolidation. So Hindustan Unilever looks very strong at 2800. Stop loss for the traders can be kept at 2750, and I'm expecting a target of 2900. So 100 rupees upside could be there, and 50 rupees stop loss should be there.
Okay, all right. Vinay, we're going to leave it on that note. Thanks very much for joining in and speaking with us and giving us all of those strategies. Well, for the markets, it's extremely quiet, but like we've mentioned, there are a lot of specific stocks. The other one which stands out is Wockhardt, which has gained around 139% this year. And the reason for the move that we've seen in Wockhardt is really on the back of their research arm and what they could be doing with one of their key molecules, WCK5222, which is basically being studied for anti-infectives, or basically an antibiotic, and combat superbugs. So basically, that's the reason why you're seeing this continued traction come into Wockhardt. That stock at over 1,000 odd rupees at this point. Well, we take a short break. More on the markets once we're back. Stay tuned.
Cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are two other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you're seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we're even number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last...
Welcome back. The stock of the moment definitely is Nykaa. It's had a very, very strong week backed by good volumes, etc. as well. Remember, in the previous week, it reported its first quarter numbers and they did indicate strength in some of their core sectors in an otherwise muted consumer environment. This morning, the stock was in focus also because one of its earlier investors paid about 1.5% stake in the company. That supply has been taken into and has been absorbed, and as a result of which the up move on the counter continues. So just keep an eye out on that one, along with a bunch of others as well. Yatra Online, for instance, has been making highs since the morning and currently has trended further higher with a gain of almost 5%. So Yatra Online is the intraday chart that comes up for you. Well, yesterday we also had the minutes of the RBI Monetary Policy Committee meeting of August 8, which were disclosed. And the key takeaway is the deep division in the MPC about how strong growth is and how bad is food inflation. Lata joins in with that schism.
The minutes clearly show a very deep division in the MPC, with 1/3 of the members clearly believing there was a rate cut space and the majority, 2/3, not agreeing. But we must remember that we were already aware of this. The voting was known. The two members who disagreed, Dr. Verma and Dr. Ashima Goyal, spoke to CNBC TV18. And the minutes also indicate that they believe India's potential growth is actually much stronger. It should be 8% plus. And by keeping the interest rates as high as 6.5%, the RBI is restricting, or the MPC is restricting the economy from achieving that growth. What they would target is the real rate, that is 6.5% repo rate minus the actual inflation. The year-ahead inflation, according to RBI, is 4.4. So Verma says 2.1% difference, the real rate, is too high. 1.5% is enough, and that will help India achieve. The important point that both of them make, and more Verma strongly, is that actually the Indian economy is slowing. The corporate results of the first quarter saw more downgrades of earnings. The profits came in lower than expected, and they're also pointing to the fact that core inflation is only at 3%, which means there is not enough demand in the economy. So they're very strongly arguing something which the other four members are not buying, and that's more important because the three RBI members and one external member, Dr. Bide, including the governor actually, strongly believe that growth is good. And when growth is good, it gives the MPC the space, the elbow room, to chase down inflation all the way to 4%. And the fact that food inflation is very high persistently, and very important ones, as Patra points out, pulses, cereals, etc., indicates that there can be a spillover into a generalized inflation, and therefore the MPC should not leave out its vigil. The important point to note is that this is the last MPC meeting for the three external members, Verma, Goyal and Bide. Their 4-year term ends, and in October we will have a fresh set of three external members. If the governor's term indeed ends in December, then there will be a fourth new member, and if Deputy Governor Patra's term ends in Jan, as it is supposed to, they all can get extensions, governor and deputy governor. But going by the current term, 5 members will be new by the time we come to the February policy.
Okay, all right, Lata, thanks very much for that. Let's also listen in to what the external members of the MPC had to say on this.
A very high real rate makes capex unattractive to the corporate. And if demand is inadequate, that also does that. And restrictive monetary policy is one of the things driving demand as well. If we think that demand is deficient, that the economy requires very large fiscal support because private demand, the private consumption expenditure is not growing, then we have to ask, what have you done? Is monetary policy part of the problem?
The budget deficit is conservative. It's on the fiscal consolidation part. So the excess demand stimulus from government is going down. And so there's space for monetary policy to support demand more. And we're not using that space. So we are restraining growth.
It's not the supply side alone. I think that is important, looking at the growth rate. In that context, 7% growth rate appears to be fairly strong growth at this point. So I think, if we need to raise this 7% growth to 8%, I don't think the present demand conditions support that. Inflation on the major components of the basket of consumption is moderate.
All right, with that, we'll slip into a short break, come back, get you more on the markets, also put focus on a couple of buzzing stocks, the likes of Lupin and Shaw Metallics.
CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown.
Welcome back. Well, Shyam Metallics and Energy is surging in trade after UBS has initiated coverage with a buy call and a target price of around 1,200. The brokerage says the company is on track for higher profit growth and forecasts an EBITDA CAGR of 39% over FY 24 to 27. In fact, earlier today, we did speak with the company's vice chairman and managing director, Brij Bhushan Agarwal. Listen in to what he had to say.
The time to come in next 3 to 4 years, we expect that we should be able to cross more than 70 to 75%. And most of the investment is on the downstream side, on the value addition side, and also going backward on the cost side. Whatever margins we are doing today, it has to enhance because, you are seeing all the downstream projects will add more value forward, and the investment backward is also reducing the cost. So definitely the margin should improve around close to 4 to 5% in the time to come. Yeah, because if you see all the downstreams are not very heavy capex and it's all value added, little different. So definitely the ROC has to go up further because it's majorly on the downstream is creating more margins, and the capacity what had to be added on the upstream side has already been added, and most of the downstream, 70-80% of the raw material, we will be consuming. As Shyam Metallic is always a very investor and stakeholder friendly company, we would like to abide whatever is in the interest of the company, we would like to go on that.
All right, that's about Shyam Metallics. Some profit taking today after a big rally yesterday. UBS has a target price of 1,200. The management speaks about a bright future for the company as well. But Lupin, that's the stock on our radar. An approval coming in from Health Canada, Ekta?
Well, yes, not just any approval, but an approval for biosimilars, which are definitely much more complex to make and probably has more of a market for Indian companies to probably get into. Remember that Biocon became the first company to get approval for pegfilgrastim and trastuzumab in the US. So that's basically, to give you an idea in terms of the familiar ground that biosimilars has for Indian companies as well as the entire pharmaceutical space. But nonetheless, so Lupin now has received Health Canada approval for the biosimilar pegfilgrastim. The product will be marketed as under the name Arm-Lupeg. Now, it will be manufactured at Lupin's biotech facility in Pune. And it is going to be, it's basically a drug or a biosimilar which is used for cancer. It increases the production of white blood cells. Now, the overall impact is positive for Lupin simply because it is the second biosimilar approval that they've received in Canada. So hence they are, building their base in terms of biosimilars in other markets. For the US, when it comes to pegfilgrastim, interestingly, Mangalam, the application is being processed in the US. They've completed remediation for the biotech facility, which they had received observations for, and they've now submitted it to the US FDA. So once they get that particular plant approved by the US FDA, once they're happy with the remediation, that's when they believe that they'll get approval for pegfilgrastim.
All right, so that's about Lupin. Just before we slip into that short break, pull up the intraday chart of PCBL, the erstwhile Philips Carbon Black Limited. What a move it's had. There is the investor day of the RPSG group, which is currently underway. But remember, at the earlier part of this month itself, the management did speak to Shireen and did speak about its optimism, in particular about the Philips Carbon Black business itself. The stock continues to rally since then. This week, it's up around 15%, moved to the high point now. But this month itself, it's seen a rally of nearly 42%. So, this month chart comes up for you. The last 7 days, 24%. This month, 42%. And if you look at it from the start of this year itself, the stock has nearly doubled. 85% up move is what we've seen on PCBL from the start of 2024. This is the last 30 days, where it's a 64% up move that has come by. Management's positive. The street likes it, and seems like there are positive comments which are being made right now in the investor day, which is currently underway too. Take a short break. Come back. Focus on all things commodities. This time, the jewelry space. C.K. Venkatraman, the MD of Titan, joins in.
And ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Well, the script is out. What is that? After 2 months of speculation, reportage, and the company is talking about being in touch with each other. Zomato's acquisition of Paytm's ticketing business for a little over 2,000 crore is their new bet on the going out business itself. Remember, they've announced a foray into that through their third app, which is District, which could launch anytime in the next few weeks, as per Deepinder Goyal itself. This will be their third app after, of course, the roaring success of both Zomato as well as Blinkit. So to understand what Zomato's game plan here is, how big can this be?
Welcome back, and joining us on the show now is Mr. C.K. Venkatraman. He's MD Titan Companies. Titan has actually opened its 11th Zoya store, and this time in Chennai. And joining us now is Mr. Venkatraman himself to talk about that. Mr. Venkatraman, hi. Thank you for joining us. Well, the luxury segment in India has continued to grow. We've seen that in various sectors. Would you say that there is maturity and pickup in the segment, especially when it comes to the jewelry as a sector also?
Yeah, very much. I think it's also a new type of customer who is becoming, wealthy, who is very discerning, knows the value of finer things in life, realizes that the wealth and the income is actually for enjoying as opposed to just saving, and also becoming confident about herself, including confident about Indian brands and carrying off Indian brands, believing in Indian brands. So within the overall luxury explosion, there is also an increasing opportunity for brands of Indian heritage, like Zoya.
Well, when it comes to Titan, you have Zoya and Nebula positioned just right for all of that. What is your sense now going forward for these luxury brands within the house of Titan? How are you positioning them, and what are the expansion plans going forward?
Yeah, so, we have been very, very particular about the manner in which, Zoya should be presented, and we have actually really sharpened every aspect of it over the last many years. And we have reached a stage now where we are very satisfied with all the aspects of Zoya. And in a way, it's been at the right time, I would say, the state that Zoya has reached today. And we're looking at a growth rate of in excess of 40% CAGR for the next decade, I would say, perhaps, certainly next 5 years. Opening between 3 and 5 stores of Zoya, because we are particular about which city, which neighborhood, taking into account the kind of customers we cater to. So 3 to 5 stores every year, 40 to 50% growth CAGR. That's the kind of ambition we have for Zoya.
All right, 3 to 5 stores every year and 40% CAGR of growth as well in the next 5 years. How are you also looking at this festival season in terms of cues and trends? And would you say that the duty rate cut does do the support?
I think the duty cut has given a fabulous psychological input to customers of jewelry in India, and I'm sure, and it started showing up as soon as the cut happened, and I'm sure it'll continue. And the overall outlook for the jewelry industry for the festive season is very strong. It's also been confirmed by the kind of business that happened in the India International Jewelry Fair, which ended just. The orders have been very, very strong. People are very bullish, and we are, very confident in any case, given that we have strong brands in every category of the jewelry industry. Between Tanishq and Mia and CaratLane and Zoya, we're pretty confident and bullish and excited about the next many months.
Oh, well, absolutely. So while, of course, gold seems to be doing quite well, Mr. Venkatraman, and the duty cut has been supportive, when you look at within the company, how would you look at gold jewelry and the studded ratios as of now? Has there been any improvement?
See, the jewelry market is so large. The wedding market is so large, and Titan's participation, the share of Tanishq in the wedding market, in a way, trails its share of total market, and therefore the upside sitting in the gold business for Tanishq is very, very large, and Tanishq will continue to maximize that independent of the growth rate in the diamond jewelry side, the studded side. So the share is not an end in itself. The share is a result. The growth rate in diamond jewelry is what we are focused on. And the growth opportunity in the gold jewelry is very large because we were intrinsically a leader in the diamond jewelry for a long time till we started focusing on gold. So the share may fall, it may grow. I don't know that. It's a result. The growth rate is what we chase. But as far as Zoya is concerned, Zoya is in a very different space. Even things like gold rate don't really have a bearing so much on the Zoya business because the customers of Zoya are a little removed from all that, I dare say. And so the Zoya brand plays in a different space. Tanishq and its Mia and Carrot Lane play in a much, much larger space, which is influenced by these factors a little more. But the share of diamond jewelry is not an end in itself. It's a result.
All right, we hear that, Mr. Venkatraman. Thank you so much for joining us. Well, that's Titan management, of course, ahead of the festival season, saying that they're opening more stores, and Tanishq does the wedding business. You have Zoya for luxury, and then, of course, Carrot Lane in between there. And all of those segments seem to be really picking up ahead of the festival and the wedding season. But with that, we're absolutely out of time on this show. Business Lunch will take all the action ahead.
Value creation standpoint, let's take a look at a couple of numbers. You know, the business that they've acquired from Paytm, they had a gross merchandise value of close to 2,000 odd crores. They had a revenue of 297 crores as of FY24 with EBITDA of close to 29 crores itself. Now, these numbers imply at 2,048 crore, the deal was done at a one-time GMV and 7 times sales business, which has an implied take rate of 15% and margins of 1.5% of GMV. What does Zomato plan to do post-acquisition? They intend to transition customer traffic from Paytm Insider, Ticket New, all these apps to District, and also incentivize customers to move to District. So you and I as customers could brace for a lot of offers as well. They're targeting FY26 GOV at over 10,000 crore rupees with rapid growth, which implies a 40% CAGR as well. They also see medium to long-term margin potential of anywhere between 4 to 5% as a percentage of GOV. Additionally, they say further scale will depend on newer use cases beyond just ticketing like shopping, staycations, travel, etc. Now, assuming all of this holds true and using conservative estimates versus the company's own guidance and projections, FY27, the GOV could actually be over 20,000 crore with an EBITDA percentage of 3% of GMV, telling you the absolute EBITDA could be close to around 600 crores. Now, if you just juxtapose the current deal multiples to that itself, which means the business could value itself by over 20,000 crores. That's a 10 to 12 times jump over the 2,000 crore that they've paid for this business. And this does not even account for newer use cases or further synergies and, live event IP valuations, etc. as well. Now, for normal, deals, a 10 to 12 times jump in 2 years seems extremely high. But for Zomato, it's par for course. We've seen that with Blinkit as well. From the price that Zomato paid for Blinkit in 2022, the valuation of Blinkit itself has rallied by over 20 times, with brokerages citing further upside for quick commerce as well. So the short point, the bottom line is that the street expects at least 10 to 12 times valuation extraction from District, which the management has earlier said will be their third major value driver in the B2C space.
Wonderfully magical is in the air.
Stocks trade ranged ahead of the Fed Chair Jerome Powell's speech at the Jackson Hole Symposium later this evening. Auto and capital goods gain, while real estate and consumer durables sulk in trade. Mid-caps underperformed today.
Over 2.7% of Ambuja Cement's equity changes hands in the block window, with promoters being the likely sellers. Nykaa too sees 1.4% equity change hands on a likely selling by a prominent pre-IPO investor.
Union Defence Minister Rajnath Singh is likely to take up the issue of engine supplies by GE to HAL in his US visit. Any positive movement on this can be a big fillip for the defence major.
And it's time again for the half-yearly review of the NSE indices, with analysts expecting a shuffle in the constituents of the Nifty 50 as well as the Nifty Bank.
Hello and welcome to Business Lunch. I'm Nisha, and with me as always is Hormaz. So Hormaz, looks like a Friday mood this afternoon for the markets. Absolutely flat, losing steam from the entire week. Let's take stock of the market at lunch hour today on Friday afternoon. And Nifty 50 at 24,800 levels. So maintaining that, but absolutely fat in trade with a green bias. And so is the case with Sensex, which is trading at 81,100 levels. When we talk about Bank Nifty, exactly in line with the other key indices and in the flat zone, while the mid-caps are showing a slight bit of negative bias. So overall, market looking absolutely listless right now. Advance decline ratio, that's still in favor of the advances with the broader market participation. And when we look at the gainers on Nifty 50, well, that is more towards the auto space. So auto looks like in full gear today.
It's almost, yeah, as you said, Friday mood, right? It's now all over to Mr. Powell in the evening. Everybody is waiting for that. What is he going to say? I guess it's almost anticipating a little too much from him. He also must be wondering why. But yeah, the Fed commentary is going to be very important this evening. And the indices are showing that absolutely no move whatsoever on the index. Is trading in a very, very narrow range, as it has been doing since yesterday as well. It traded in an 80-point range yesterday. The auto index is the only outperformer in today's session, because the rest of the indices are absolutely flat. The realty index, though, is the top sectoral loser, is down 2%, seeing a bit of profit booking in today's session. Is the Nifty Realty, as we speak, that down to the lowest point of the day. Some selling coming in shares like Macrotech, Prestige Estates, and almost all the constituents of the Nifty Realty Index are trading with losses in today's session. But there is plenty of action in the broader markets. There are plenty of other stocks that are reacting to news flow. Pull up CDSL, that is trading ex bonus in today's trading session and is up 13%, continuing from where it had left off. Now at the high point of the day, 1650 is CDSL. Pull up Nykaa as well, the block deal that took place in the stock, and that has had a positive reaction on that as well. Almost 7% higher is Nykaa after the block deal that took place in the stock. They're almost 8% now at the high point of the day, 228 now on Nykaa. But the other deal that took place this morning is Ambuja Cements, and that is also the deal. It's the second deal other than Nykaa that took place this morning. Nigel is now joining in with more details on that. Nigel.
Well, that's right. The large trade that we here at CNBC TV18 had hinted about a couple of days ago, that took place early this morning. So around 6.8 crore shares of Ambuja Cements did change hands earlier today at a price of around 625 rupees per share. The total amount of that particular large trade was around 4,200 crores odd. Now, sources to CNBC TV18 indicate that the promoter entity could be the likely seller out here. The reason that the stock is higher is because the flow price of this particular deal was fixed at around 600 rupees. So there were some shorts that built into the system. But this deal got closed out in the pre-open or the block window. And because of that, the shorts, they had to run for cover. So the street's message is clear. They believe that, in fact, better to play larger cap than play mid and small cap companies, unless it's an inorganic growth, target. And that's why, in fact, the stock is seeing some bit of buying in today's trading session. Just to recap for our viewers, in October 2022, the promoter entity, they issued shares worth around 20,000 crores to themselves. And over the last 6 or 8 months, they have been converting this, which explains why the promoter holding in the company moved from around 63% to around 70%. Now, post this large trade, it's likely to be in that vicinity of around 67.5 to around 68%. The reason, though, the stock is higher is because the shorts are getting squeezed out. Back to you.
All right. Thanks so much, Nigel, for getting us all those details. It's a day of block deals because Nykaa also climbs in trade after 1.43% equity changes hands in block deals window on this particular counter. The stock is holding up close to 8% gain. But if you really take a look at its 7-day chart or the 1-week chart, it has gained in the last 5 trading sessions about 16% So the momentum has been carrying on. Our colleague Vivek Iyer joins in to tell us more on this large trade. Tell us, Vivek.
Well, you're absolutely right. Given the kind of momentum the stock has seen, not in the last 5 days, and along with that, how the stock has moved in the last year and a half. Clearly, pre-IPO investors are taking this opportunity to go ahead and make part exits or to book some profits. So in today, what we understand, and we accessed the term sheet last evening, is that Harinder Pal Singh and associates likely sold close to 1.4% stake in the company. Remember, this particular deal happened in the block deal window, indicating that the deal happened at a less than 1% discount to yesterday's closing price. On the back of that, this basically indicates that the demand was very strong, and on the back of that, what you've actually seen is quite a sharp recovery post this particular block deal. Now remember, Harinder Pal Singh held close to 6.4% stake at the end of Q1, and there will be a lock-in period of close to 45 days on further sale of shares. The total size of the block, at the floor price was a little over 800 crore, but like you mentioned, the stock has recovered quite sharply in the session today.
Shows in the price as well. It was up almost 10% the day before the deal was announced last evening. Vivek, thanks for that update. But stay on, because the NSE index constituent changes are on the cards, and they may be announced later this evening, with changes likely in the Nifty 50 and the Nifty Bank. Now tell us which stocks are likely to be the latest entrants in the Nifty 50.
Well, that's right. So, the index subcommittee will most likely be meeting today evening, and you will get to know, what will be the new outlook or the look of the Nifty as well as the Nifty Bank. So the first thing, number one, we are looking at the Nifty, and IFL estimates that you could see 2 entrants coming into the Nifty. You could see Trent as well as Bharat Electronics coming into the Nifty. Trent could see inflows of a little over $420 million. Bharat Electronics could see inflows of close to $400 million. Now remember, these calculations and these estimates have been made on the basis that there will be no new stocks that will be added into the F&O space. So who will make way for Trent as well as Bharat Electronics in case they're added? LTI, Mindtree and Divis Laboratories could be the one that could make way. Now coming to the Nifty Bank Index, Canara Bank could come in. It could see inflows of close to $80 million, and Bandhan Bank could pave the way or could make way for Canara Bank, and that could see outflows of a little over $40 million.
Thanks so much, Vivek. It's a very important, change that could really come about, and it will impact the stocks, and they will impact the index as well. So very, very much watched out for. With that, we'll slip into a short breather on Business Lunch. But when we return, remember, government's bans the banned 156 fixed dose combination drugs on concerns over risks of users. So we get you more details after a very short break.
We're feeling it here in this arena, but it's spreading all across this country we love. A familiar feeling that's been buried too deep for far too long. You know what I'm talking about. It's the contagious power of hope. America, hope is making a comeback. Kamala Harris is more than ready for this moment. She is one of the most qualified people ever to seek the office of the presidency. And she is one of the most dignified. A tribute to her mother, to my mother, and to your mother too. the embodiment of the stories we tell ourselves about this country. Her story is your story. It's my story. It's the story of the vast majority of Americans trying to build a better life.
See Barack Hussein Obama last night take little shots? He was taking shots at your president. And so was Michelle. You know, they always say, sure, please stick to policy, don't get personal. And yet they're getting personal all night long, these people. Do I still have to stick to policy? The Harris-Biden administration has been caught fraud.
Welcome back to Business Lunch. Let's get you some news on the Anil Dhirubhai Ambani Group in the probe on fraudulent loans given out by Reliance Home Finance. Now, the market regulator SEBI's probe has established a fraudulent scheme established by Anil Ambani, who along with key managerial personnel of the company administered a scheme to siphon off funds from the publicly listed company. As per SEBI, the company structured loans to credit-worthy entities and onward borrowers who were promoter-linked entities. Now, this resulted in an erosion of RHFL's finances once the loans were eventually declared an NPA. Consequently, the SEBI has banned RHFL from dealing in the securities markets for 6 months, and Anil Ambani has been banned from securities markets for 5 years and has also been barred from being a director or key managerial personnel of a listed entity or any SEBI intermediary for 5 years. A 25 crore rupees penalty has also been imposed on Anil Ambani.
Now, the government has banned 156 fixed-dose combination drugs with immediate effect on concerns over risks to users and their availability of safer alternatives. Now, Ekta is here to tell us the rationale behind the ban and the impact that it could have on consumer and pharma companies. Ekta.
Thanks for that. Well, yes, in its continued crackdown on fixed-dose combinations or FTC drugs, the government has banned 156 FTCs with immediate effect, citing concerns about their irrationality and potential risks to human health with safer alternatives available. FTCs, remember, combine 2 or more APIs or active pharmaceutical ingredients in fixed ratios in the drug. Now, the latest list of banned drugs covers various therapeutic areas from pain and fever, anti-allergy treatments, antibiotics, medications for acidity and nausea, joints and arthritis treatments, and health supplements. This action, remember, follows previous bans as well. For example, the government banned over 340 combination drugs in March of 2016 and most recently 14 FTCs in June of 2023. Now, one of the reasons for the crackdown on FTCs was due to some state licensing authorities issuing manufacturing licenses for several FTCs without prior clearance from the Central Drug Standard Control Organization or the CDSCO, leading to the availability of untested and potentially unsafe FTC combination drugs. Now, the impact of the latest ban is expected to be limited for large pharmaceutical companies, which have begun being cautious about irrational FTCs since the past few years. But smaller companies, according to analysts, may be more impacted. Larger pharma companies are also less impacted as they can innovate to create different combinations which are not banned, and the overall focus on safety is even more by larger companies.
All right, Ekta, thanks so much for getting us all those important details. Now, moving on, after the World Health Organization declared monkeypox as a public health emergency of international concern, well, the Union Health Ministry has issued directives to prevent the spread of the virus in India. Now, this is going to be an important aspect because the guidelines include the establishment of testing laboratories and also health facilities dedicated to the screening and managing of monkeypox cases. The BMC, as a precautionary measure, has reserved a 14-bed ward in Mumbai Seven Hills Hospital, and the Airport Health Organization has already started screening the passengers from monkeypox affected countries. Now, a health information desk has also been set up at the airport. So these are the various guidelines and the measures taken by the government on monkeypox.
Well, moving on to some news updates then. An Indian passenger bus carrying 40 people on board has plunged into the Mars Yangdi River in the Tanahun district. Now, the Nepal police have confirmed that the bus plunged into the river and is currently lying on the river bank. Now, 14 bodies have been recovered from the site so far.
All right, on that note, we'll slip into a short breather on Business Lunch. But when we return, an important development, all eyes will be on the Federal Reserve's Jerome Powell's speech and Fed Chair speech from Jackson Hole, and that is later today. Are big rate cuts expected in September? That's the big question that the global markets are asking. We'll tell you what's expected on the other side. Stay tuned.
Manipulating job statistics to hide the true extent of the economic ruin that they've inflicted on America. The new data from the Bureau of Labor Statistics shows that the administration padded the numbers with an extra, listen to this one, 818,000 jobs that don't exist. So they said they existed, and they never did exist. They built them up so that they could say what a wonderful job they're doing. No, we've never had numbers like this. They don't exist.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources.
Back with us here on Business Lunch. On to some global news now. Prime Minister Narendra Modi has arrived in Ukraine for talks with Ukrainian President Volodymyr Zelensky in what is the first trip to Ukraine by any Indian Prime Minister since 1991. Now, the visit, which follows the Prime Minister's trip to Moscow in July, is important for the NATO-backed country, which has been trying to nurture diplomatic relations in the global south in its efforts to secure a fair settlement to end the war with Russia.
All right, and more international developments for today. Let's shift focus to United States of America, where Fed Chair Jerome Powell is slated to take center stage later today at the Jackson Hole Symposium. Now, he is expected to give limited guidance on what's ahead for the FOMC, with the market already taking its cues from the latest Fed minutes, which shows a vast majority of members are in favor of a September rate cut. Ahead of the Fed chair's speech, Philadelphia Fed President Patrick Harker shared his opinions on the speculation surrounding Fed rate cut and also softening of the labor market. Listen in.
Well, I think it means this September we need to start a process of moving rates down. The one thing I heard from them, bankers, business leaders, community leaders, is whatever you do, do it methodically and signal it well in advance. Give us time to absorb the change. I mean, they understood why we did what we did to bring rates up very quickly, but they're saying, please don't do that again to us. Now, barring something we don't anticipate in terms of the data, right, we need to start bringing them down methodically. What they say to me is, we don't really care that much whether it's 25 or 50. It's just start the process and keep it moving.
Well, meanwhile, the Kansas City Fed President Jeffrey Schmidt tells CNBC that he believes that these rates are not overtly restrictive. Listening to what he had to say.
From my standpoint, I think rates are restrictive, but they're not overly restrictive. I think there is some room to consider where we go from here, but I frankly think we've got time.
And in more global important developments, U.S. Vice President Kamala Harris has accepted her party's presidential nomination on the final night of the Democratic National Convention in Chicago, now promising the Americans a better future under her rule. Now, she also vows to be a president for all Americans and also becomes the first woman of color to lead major party for the top job. NBC's Bree Jackson gets us up to speed with the developments in the U.S. elections.
Yeah, there's a much different scene than we're seeing here now. They're popping the balloons. They're cleaning up. A few hours ago, this place was filled with people, and there was a lot of excitement. So when Kamala Harris came out, she did have this loud cheers, but this was arguably the most important speech of her life. She's trying to convince voters that she should be the next president. And during her speech, she expressed gratitude for President Biden. She also talked about her unexpected rise to the top of the Democratic ticket and shared her personal story as well as her commitment to serving all people in her effort to move the country forward. History made, with Kamala Harris officially accepting the Democratic Party's nomination for president.
I accept your nomination to be president of the United States of America.
A sea of white honoring women's suffrage and the first woman of color to lead a major party ticket. Harris sharing her personal story, including the powerful influence her mother had on her life.
And I miss her every day, and especially right now. And I know she's looking down smiling.
The self-proclaimed joyful warrior laying out her vision for the country if elected.
I promise to be a president for all Americans. You can always trust me.
Capping off a week filled with stars, singer and passionate activist Pink, speakers highlighting the 59-year-old's professional career as a prosecutor and senator.
Kamala Harris can't be bought, and she can't be bossed around.
supporters taking direct aim at her rival, former President Trump.
Our fallen veterans are not suckers. They are not losers. They are our heroes.
Civil rights leaders highlighting her commitment to helping all people.
We fought hard for LGBTQ loved ones to get out the closet. We won't go back.
Harris says she's ready to lead the country toward a brighter future. The candidate who just recently stepped into the role, seeking the highest office in the land. And the Harris-Walz campaign is looking to take the momentum from the Democratic National Convention back to the campaign trail, where they have just over 70 days to try to convince voters to back their ticket over the Trump-Vance ticket.
Things heating up in the race to the White House. But with that, it's a wrap on this edition of Business Lunch this Friday afternoon. From Nisha, me and the team that put this show together, thank you so much for watching. Midcap Radar comes up next.
Because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
In 1972, a fearless black congresswoman named Shirley Chisholm she ran for president. And her determination let me and millions of others dream bigger, not just because of who she was, but because of who she fought for. Working parents, poor children, the last, the least, and the lost. In 1984, I brought my daughter to see Geraldine Ferraro, the first woman nominated for vice president. If we can do this, Jerry said, we can do anything.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me as always is Vivek Iyer. A very quiet Friday, you have to say, for the benchmarks. Nifty's flat with some positive bias. Midcaps are seeing some profit booking, but it's been very range bound so far, Vivek. But looks like bulls towards the end of the week are like, we need to chill.
That's what we all want to do. The mid-cap index, like you can see, a little choppy and seeing some red over there. So very range-bound, choppy session is how best you could describe it so far. But quite a lot lined up on the show. Let's start off with the top headlines. Stocks trade range-bound ahead of Fed Chair Jerome Powell's speech at the Jackson Hole Symposium later this evening. Autos gain while realty and IT stocks sulk. Mid-caps underperform.
TVS Motors zooms more than 3% after brokerage firm UBS issues a buy call and raises the stock's target price to 3,200 rupees a share, citing new model launches that can further aid volume growth.
Nykaa surges in trade after 1.4% equity changes hands. Prominent pre-IPO investor Harinder Pal Singh, the likely seller, stock up over 8%.
Central Depository Services surges after company announces bonus issue of shares in 1:1 ratio. This has been adjusted for as well. The stock is up over 12%.
Realty surges nearly 6% in trade after the company gets a work order worth over 52 crore rupees from the Uttar Pradesh Police Recruitment and Promotion Board.
Okay, all right, those are the top headlines. It's a very stock-specific market is what you have to say. While on the benchmark, there's not much action. As we've been pointing out, it's been quite flat. 13 points higher on the Nifty, 24,800, above that mark for now. And it's been consolidating around those levels for a while now. Midcaps is where we are seeing some action on the downside. So midcaps are down around 112 points as we speak. Banking index has been under pressure. It's been a laggard versus the Nifty pack, and that continues to be the case today, though it is not falling as much as the midcaps right now. Nifty IT has come in for some pressure. Nifty FMCG also. Nifty Realty is the biggest loser as well, 2% down there. The small cap index is absolutely flat. So yesterday as well, we saw that the small cap index did well, but it has reversed some of those losses today. So again, a very stock specific action. That is something we'll speak about on the show today as well, Vivek.
Absolutely right. Very stock specific. In fact, one segment that's doing quite well actually is the auto pack today. You've seen some brokerage upgrades coming in. So look at names like TVS Motors, look at names like Bajaj Auto. All of them are doing quite well. And there appears to be a sentiment rub-off effect after the Ola electric listing. But a whole host of stocks is what Hormaz has on his radar. Hormaz is standing at the wall. This is a special segment, Midcap Movers, where Hormaz will take us through the midcaps that are buzzing in the session.
Absolutely in snooze mode is the market. Well, very typical of a Friday. Actually, not very typical of a Friday, but going into the Friday weekend is staying light on positions. But midcaps is where the action lies, and CDSL trading X bonus today, continuing from where it left off yesterday as well. 13% higher now as we speak at the high point of the day, as is SEPC, earlier known as Shriram EPC, after the confirmation certificate that it won. 18% higher there as well. Apar Industries and Fortis Healthcare are some of the others that are doing well in today's session. It was a day of block deals yesterday. It's been a day of block deals today as well, and a couple of them that happened in today's session. On seeing opposite moves there, Nykaa is now at the high point of the day, 8% higher. Ambuja started off higher but now has cooled off and has moved to the low point of the day. Is trading almost at the flat line as we speak. Real estate as a sector is under pressure in today's session, while most of the other indices are sluggish. But there's some selling pressure emerging in Macrotech, Phoenix Mills, Prestige Estates, all of them trading at the low point of the day now. 2.5% to 5% are the losses seen in these names. Some other stocks that are doing well on the back of volumes, and Minda Corp is one of them, 9% higher in today's session. Railtel, after the order win, is seeing gains of around 5% on the back of very strong volumes. And lastly, take you through some names that are trading at a 52-week high. In today's session, there are around 20 to 25 stocks that are at a 52-week high today, and Himadri Specialty Chemicals is one of them. It's seen a very sharp spike in the last few minutes of trade, almost 9% higher now. And Dixon Technologies continues to be where it has been at a 52-week high. Back to you guys.
Okay, so some interesting names there. Some are the usual ones actually, but some of them are seeing some new entry as well. Thank you, Hormaz, for joining us as always and taking us through those moves in the broader markets. It's time to get a technical check on the markets done. Rujit Jain of 5paisa.com is joining us for that. Rujit, good afternoon. What explains the mood of the market right now? You think consolidation is the way to go, or maybe last 1 hour could see some action?
Yeah, hi, very good afternoon, Sonal. Very good afternoon, Vivek. Well, the broader trend for the market still remains positive. Last few tradings, in fact, if you look at this entire week, we have seen a slow and gradual up move in the index, but the intraday range has been very narrow throughout the week. So not expecting any significant move for the rest of the day, but the short-term trend still remains positive. And if you look at the F&O data as well, client section has been sitting with a long-short ratio of about 52% right from the start of the week. FIs have long-short ratio of about 52%. So none of the parties are looking to create fresh positions on either side. So I think that's the main reason we are witnessing this intraday range moves on the index. But if we look at some higher time frame charts, the RSI still remains positive, which indicates that the overall trend is still positive. Just on the lower time frame charts, on the hourly charts, we are a bit in the overbought zone, but that overbought reading should get cool off either with some consolidation, which we also call a time-wise correction, or a minor dip towards that 24,650 to 24,700 range, but not expecting any significant down move from current levels. So one should continue to trade with a positive bias. If one is looking to trade in the index, then I think any dip towards that 24,700 if comes should be a good opportunity to buy again. But for now, one should take a stock-specific approach and look for trading ideas on the long side.
Good to hear that. Richard, which are your top picks for the day?
Yeah, so we have a couple of recommendations on the buy side. First, it would be a buy call in Coal India, where after this consolidation, the stock is on the verge of a breakout of its previous swing high resistance. So it could resume the uptrend from current levels. Traders can go long with stock below 525 for potential targets of 560. And Tata Consumer is my second pick, which too has gone through some corrective phase in the last few days. But the 40 DMA has acted as a very good support in this correction. So expecting it to resume its uptrend from current levels. With stop below 1170, traders can go long for potential short-term targets around 1260.
Okay, all right. Richard, thank you so much for joining us with those technical bets and the outlook on charts as well. We'll slip into a short break. When we come back, we'll talk about a lot of these stocks which are buzzing in trade. Realty specifically, that's buzzing in trade as well. So stay tuned for that.
And then there was 2016, when it was the honor of my life to accept our party's nomination for president. I wish my mother and Kamala's mother could see us. They would say, keep going. Shirley and Jerry would say, keep going. Women fighting for reproductive health care are saying, keep going. Together, we put a lot of cracks in the highest, hardest glass ceiling. On the other side of that glass ceiling is Kamala Harris raising her hand and taking the oath of office as our 47th President of the United States. My friends, when a barrier falls for one of us, it falls and clears the way for all of us.
Welcome back to Midcap Radar. One particular stock that's just seen a very large trade take place is Tata Technology, a relatively recent listing. This particular stock has seen a little over 2% of equity change hands just some time ago, and post which the stock has recovered, now trading 1.7% higher. The next stock on our radar is Realty. The stock is buzzing in trade on the back of a very large order win. Rima joins us to tell us more.
Thanks so much for that. So it's about a 52.5 crore order that Realtel has won from the Uttar Pradesh Police Recruitment and Promotion Board. And the order is for live CCTV surveillance service, impersonation control through Aadhaar-based biometric service, digital fingerprint and facial recognition. So it's got the stock excited. The stock has anyway been doing well. It's up 50% so far this year, 200% gain in the last 1 year. And in the last 3 years, it's given you a CAGR return of more than 50%. Company came out with their numbers just a couple of days back. Q1 steady top line growth of about 18 to 19%, similar to what they did in the March quarter. Margins, though, have picked up quarter on quarter and on a year-on-year basis to 18.5%. So sequentially, it's an improvement of 450 basis points in margins, and on a year-on-year basis, margins went up by 250 basis points. Back to you.
Okay, all right. Thank you so much, Rima, for joining us with all those details. That's Realtel in focus. Moving on, let's get in some more management commentary now. We spoke to a whole host of them. The second half of FY25 will be very strong, says Metro Brand CFO Kaushal Parekh, despite a year of muted consumer demand. In a conversation with our colleague Shilpa Ranipeta on the sidelines of the RAI Retail CFO Summit, he added that their target is to touch or exceed 100 stores in FY25. Listen in.
We guided in our earnings call, we have seen overall customer sentiment sort of, coming back. In fact, for us, even in Q1, products above 3,000 rupees, which we classify as premium, we saw the percentage of that increasing from 49% to 54%. So that undercurrent in terms of customer shopping behavior is there. We strongly feel H2 would be very strong for this financial year, and that's how for the year as a whole, we should hit that 12 to 15% overall sales CAGR. We opened 15 stores in Q1. We have guided for 225 stores over next 2 financial years, excluding any new stores that we open for Fila. We feel extremely comfortable and confident of achieving that numbers. For this financial year, our target would be to touch or exceed 100 stores. And as I said, right, 225 for next 2 financial years. So logically, for next year, we would target somewhere around 125 stores. As we had defined, FY24 was the year of liquidation. Right. FY25 was the year when we want to reset the brand in India, and we plan to predominantly do that by placing Fila within our MBOs and eventually Foot Locker, which we hope to come in H2 of this financial year.
Well, that was management of Metro Brands, but the next company in focus is Shyam Metallics. UBS yesterday initiated coverage on the stock with a buy call and a target price of close to 1,200 rupees a share. The brokerage says the company is on track for high profit growth and forecasts an EBITDA CAGR of 39% over FY24 to FY27. Earlier today, we spoke to the company's Vice Chairman and Managing Director, Brij Bhushan Agarwal. Listen in.
In the time to come, in next 3 to 4 years, we expect that we should be able to cross more than 70 to 75%. And most of the investment is on the downstream side, on the value addition side, and also going backward on the cost side. Whatever margins we are doing today, it has to enhance because, you are seeing all the downstream projects will add more value forward, and the investment backward is also reducing the cost. So definitely the margin should improve around close to 4 to 5% in the time to come. Yeah, because if you see, all the downstreams are not very heavy capex, and it's all value add, little different. So definitely the ROC has to go up further because it's majorly on the downstream is creating more margins, and the capacity what had to be added on the upstream side has already been added, and most of the downstream, 70-80% of the raw material, we will be consuming. As Shyam Metallic is always a very investor and stakeholder friendly company, we would like to abide whatever is in the interest of the company, we would like to go on that.
All right, so those are a couple of management comments coming in that we have had through the course of the day. For now, we'll slip into a break. When we come back, we'll get you more on the markets and stock-specific action. Stay tuned for that.
be with everyone this evening in this hall and everyone at home. This is going to be a great week. And I want to kick us off by celebrating our incredible President Joe Biden, who will be speaking later tonight. Joe, thank you for your historic leadership, for your lifetime of service to our nation, and for all you will continue to do. We are forever grateful to you. Looking out at everyone tonight, I see the beauty of our great nation. People from every corner of our country and every walk of life are here, united by our shared vision for the future of our country. And this November, we will
There's a definite recovery that is underway. The Midcap index, which has done more than 100 points, has recovered, is down to 64 as we speak. We also have the Bank Nifty, which has turned green right now, so watch out for that one. Bank Nifty is absolutely flat with some positive bias, so there is some recovery, but the important question is whether that stays or not. That's the bigger question. In the mid-cap side, we have PCBL. That stock has been surging ever since the management on CNBC TV18 indicated the big plans that he has for that particular business, looking at 5 times the profit growth in next 5 years. The capex that will mostly be done in the group will go to PCBL. They're looking at new segments in terms of chemicals as well. The electric vehicle segment, that continues its up move. Minda Corp is the other one which is higher right now, 8% higher on that stock. JN Irrigation is one more stock which should be on your radar because that stock surged. It's up around 13% right now. So a couple of these names that have been surging off late. But with that, let's move on. On track to achieve 25% top-line growth in FY25, says Rohit Katyal, the Executive Director of Capacity Infra Projects. Speaking to CNBC TV18, he also added that they aim to achieve 3,000 crore rupees of order inflows in FY25. Listen in.
Order book at the moment is close to 9,800 crores. And the 25% growth is the minimum requirement what we need to deliver in the current financial year to the clients. Therefore, while Q2, due to monsoons, though being the best quarter, second quarter in the history of the company looks at substantial growth in Q3 and Q4. And therefore, we have given this projection of 25%. If we achieve what we have set ourselves internally to do, then definitely your idea of a better growth than the given 25% number, it will surely be achieved. Our order book does not include about 4,000 crores of orders of MADA project, which we are executing in joint venture with Tata Projects Limited. So in the first quarter, we have actually added another 1,000 crores from that order book into our executable order book. And therefore, the total inflow into the executable order book in the current fiscal is close to 1,250 crores. Having said that, we carry some L1 positions. And given the traction, both in the state governments and central governments for PMAY and healthcare projects, that is hospitals, we are more than confident of achieving 3,000 crores, excluding the orders which would get added into the executable order book from MADA project. Last quarter of the last fiscal, we were at 8.51% margin. That was a 200 basis point increase over the fiscal 31/3/23. So basically, you already have seen a 200 basis uptick in the net profit. Similarly, an uptick in the EBITDA and EBIT margins. The order book, which we are sitting on at the moment in time, that is for sure to maintain this momentum. And as we increase our revenues per quarter beyond 650 crores, there will be an uptick of obviously another 50 basis points because of lower fixed cost as a percentage to sales.
Well, very important commentary coming in from Capacity Infra, where the company has gone ahead and given a guidance of a 25% top-line growth for FY25. The next company on our radar is PDS. The company has launched a QIP to raise funds. Upasana is here with more details on the company's FY25 guidance and more details on the QIP.
Well, that's correct. Board has approved fundraising via QIP route, and according to sources, the indicative issue size is 430 crores with an indicative issue price of 536 per share. Mind you, SEBI has set the floor price around 563 per share, which is at a 3% discount to yesterday's closing price. Now, looking at the guidance given by the company for FY25, it says that the capex will range between $4 to $5 billion for FY25. And EBITDA will range between $55 to $60 million. And company is well poised to meet its profit guidance for the entire year. Now, coming to company's Q1 FY25 financials, the company has logged a top-line growth of 24% and a PAT growth of 35% on a YoY basis, while the margins dipped by 40 basis points at 2.8%. Company's order book stands strong with a growth of 24% on a YoY basis. Well, the management has highlighted that the recent unrest in Bangladesh has had a very minor impact on its operations, and the stability is expected shortly. Mind you that the company's main competitor is Shein in this place. So overall, PDS Limited remains in focus.
Okay, Upasana, thank you so much for joining us with these details. And as we wrap on this edition of Midcap Radar, let's listen into Andrew Holland, the Chief Executive Officer at a Vendors Alternate Strategies, talking about his views on the interest rate cut, his preferred themes in the Indian market.
I think we all kind of working on the basis now that an interest rate cut in September is coming. I think they should front run the kind of interest rate cycle. I think they should do 50 basis points, albeit that our base case is 25. I think that would give the market that kind of extra fillip that the Fed is ahead of the curve this time. And I think that's the key. The market continues to worry about whether the Fed is behind the curve. Obviously, the way we think about it is that, we continue to play on the themes that we think will, play out over a longer period, because that's where you're going to continue to see the earnings momentum, not just for the next 2 quarters or 3 quarters, but for the next 2 to 3 years. So again, that falls under that defense, renewables, capex spending kind of scenarios. So if the interest rate cycle is now starting to fall, it should be good for our banking sector in India if the RBI follows suit. And of course, we'll all be thinking about October at that next interest rate policy meeting. I think if you're playing this, you play the whole sector in the short term, and then see which ones have outperformed, and then do your kind of reallocation between private and PSU banks.
And declare with one voice, as one people, we are moving forward. With optimism, hope, and faith, so guided by our love of country, knowing we all have so much more in common than what separates us, let us fight for the ideals we hold dear, and let us always remember, when we fight, we win. God bless you. God bless the United States of America. Good night, everyone.
Again, what her appearance is just a preview of coming attractions of Thursday night. You could feel the electricity. It's a 13 on a scale of 10. It's one of the most electrifying political environments ever been created, because it's all about the future, and she embodies it.
Oh, I think it's great. People really get excited when something happens they didn't expect, and it makes them happy. So we're a happy group.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming me on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are two other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a day which is quite quiet for the markets, so the indices are just about consolidating, but a lot of specific stocks are in focus and a lot of queries as well, so we will be discussing that in the course of the next 30-odd minutes. Joining us today, we have Shaina Mukaddam as well as Ashish Kyal of Wave Strategy to answer all of your stock queries. Shaina as well as Ashish, welcome to the show. Well, Ashish, let's start by just giving a sense in terms of what your strategy would be on a day where, the markets are just about consolidating and the stock-specific action continues. So sectors that you might like today to take a call on and your call on the Nifty as a whole.
Hi, afternoon to you and all the viewers. If you look at Nifty, I think post a good run-up that we saw over past few days, since 2 days Nifty is consolidating. And I'm optimistic that's a positive sign. We can expect Nifty to possibly reach towards the psychological 25,000 mark. And I'm optimistic it will also touch the lifetime high levels. So the overall trend is bullish. We can expect it to go towards the level of 25,190 on the upside. And on the downside, the support for the index is going to be around 24,690 levels. So as long as 24,690 is concerned, any dips can be used as a buying opportunity for 25,000 followed by 25,190 levels. And Bank Nifty especially should take the lead. So the sector that I'm going to focus on is Bank Nifty because Bank Nifty is still substantially away from the lifetime high levels. It is yet to fill up the gap. And it shows some resilience yesterday. And I think Bank Nifty, there is a potential for it to reach towards the level of 51,900 on the upside. So Bank Nifty should take the charge and the stocks within the banking space and the IT space. So these are the two sectors that can perform well.
Okay, all right. Well, we do have a couple of queries now. So let's get to that. We have Harshit, who writes to us from Kolkata, holds 42 shares of Paytm, which is bought at an average price of 575. So he's just about sitting on a loss on this one. He wants to know whether to hold or sell. Well, Paytm has seen some amount of recovery. That stock rallied yesterday. The stock was in focus yesterday on account of that big transaction that took place on account of its ticketing business. So it's going to garner around 2,000 odd crores. Vijay Shekhar Sharma has expressed confidence in terms of the turnaround that they want to see in the company as well. Shaina, let's start with you. What would your call be in terms of a long-term perspective on Paytm?
See, I would suggest it could be a good switch from here. The transaction was a good deal for Paytm, 7 times revenues was not bad. At the same time, and the impact also on the profitability, EBITDA levels is going to be about 5-6%. So in terms of overall impact, it's not going to make much difference to Paytm because, it's already running into losses. So I don't think it's going to make too much of difference in terms of profitability. And also the funds that they have raised will be utilized, in my view, to actually build one of the apps that they are talking about, or some technical development in terms of seamless transfer in GIFT City. So yes, that's a positive for the longer term, but we really cannot quantify what it will impact as of now on terms of numbers and balance sheets. What I would prefer is that, the investor can switch. I don't see too much upside. In fact, even a switch to Zomato would look better in my view, because the utilization of funds by Zomato looks to be pretty good. They have surplus funds on the balance sheet, so I would prefer a switch.
Okay, you would prefer a switch. What about the technicals? Ashish, what would you recommend in terms of the technicals for Paytm?
See, if you look at Paytm, I think the stock has not even filled in the big gap that was created. There is absolutely no attempt for it to even go closer to that. So there is a lot of hurdle around 600, 610 levels, and there is no upside potential for the stock that I can see here. There will be a lot of damage minimization that these people will have to do what has happened over the past 1 year, and retailers and then the traders will have that memory in mind. So I'm not optimistic about Paytm. It's better to be out of this stock. This is a good level where you can exit because that's the gap area and that's also the prior pivot low. So better to be out from here, and maybe the stock can again show a dip towards 450 or maybe lower levels.
Okay, all right. Now we have Vijay Kirti, who writes to us from Mumbai, holds 250 shares of Concor, which is bought at around 1042. Wants to know what to do, whether to hold or to average his particular holding in Concor. So he's sitting on a loss at this point in time. Currently, the current market price is 994. In terms of the technicals, Ashish, let's toss this over to you. Do you think that there's a further upside that could come through for Concor? Do you think it could reach the buy price or maybe even exceeded any target price and stop loss there?
Yes, if you look at Concor, we can clearly see there has been correction on the downside, but that's an overlapping correction. Overlapping means that there is no intensity of the fall. It has been slowly and steadily moving down, which shows that the major trend or the medium-term trend is still intact on the upside. So I'm optimistic the stock can move towards the level of 1100 above the buy price and much higher from there. So continue to hold on to the stock. On the downside, maintain a stop loss of around 950. As long as 950 is intact, expecting a targets of around 1100 or higher.
Okay, all right. And the fundamentals, Shaina, the net profit rose around 5% in the previous quarter. Or I think around thereabout. I think it was better than that, over 10% Overall, how did you view the Q1 numbers and what would your call be on the stock?
Yes, Ekta, the growth was about 9%, which is pretty sluggish. At the same time, I would agree with the technical view that, while, the stock is consolidating, it would be better to continue to hold as of now. Valuations, about 25 times P, not too expensive for 1 year forward. So I would continue to hold. In terms of business, they are growing. The overall PSU sector is actually seeing some bit of profit booking. But if you're a long-term investor, it makes sense to hold. It's got a decent market share in its own size of business. It's improving its margin potential by streamlining its operations. So it would be a good hold for the longer-term investor.
Okay, all right. Well, the next query is from Ashok Khanna, who writes to us from Noida, who holds 3,200 shares of NetWeb Technologies, which he's bought at around 2,299 odd rupees. He's sitting on a profit on that one. He wants to know what to do, whether to hold or sell this particular counter. Well, NetWeb has been a listing which a lot of people who probably invested in terms of the IPOs and haven't sold are sitting on phenomenal gains at this point in time. What was the issue price? Around 500 rupees per share. So it's given multi-bagger returns just in a couple of months from the time it listed, around July, August last year. So give us a sense, Ashish, do you have enough to chart the technicals on this one?
Yes, of course, because we have almost a year's of data and that shows the uptrend as of now. The stock went and made a low of around 2,200, from where it showed a very strong bounce back again. So overall, hold on to the stock, maintain a stop loss of around 2,400 on the downside, and expect a target of around 2,850.
Okay, all right. Target of around 2,850. And when is that target probably going to be achieved?
We can expect over the period of around 3 to 4 months. So it's not going to be one way, right? There is going to be some kind of a consolidation, some kind of a pattern formation we can expect. But within 3 to 4 months, we can expect that to be achieved.
Okay, all right. And what about you, Shaina, on the fundamentals? Do you think that a lot of the good news is priced in for Netweb Technologies, or does it have more to go from here?
See, for the shorter term, it is looking very expensive. The original investor, you were correct, at 500 rupees if they've invested, it's 5 times that. At the level of 2,200, where it has actually seen that, couple of months back, 1 or 2 months back, those are the levels where a lot of mutual funds actually entered into the stock. This is after the 1-year cooling period exhausted. So at current levels, what I believe is there is going to be some time-wise correction. But given that, I believe that the stock, the company is in a very interesting area. It has got this tie-up with NVIDIA for manufacturing of chips. Now, all this is in the future. And in terms of current valuations, it's extremely expensive. If you look at it, on a turnover of about 750 crores, that is last year, the market cap today is about 14,000 crores. So, fundamentally, it looks too expensive, but it's in a good space. If it's a long-term investor, you hold, and if it corrects, you can average your cost.
Okay, all right. If it corrects, you can add or average your cost. But definitely a multi-bagger there. Netweb Technologies, as you can see in the past 12 months, has given returns of over 200%. But we have Porsche Silvan Durai, who writes to us from Mumbai, holds 100 shares of Aadhar Housing Finance, which is bought at around 445 odd rupees. He wants to know the target price to sell this counter. He's sitting on a loss right now. Shaina, over to you on this one first.
Yeah, I would say you can sell. Basically, Blackstone is the big investor over here, and they have actually more than 75% stake even now. So they will be offloading bit of that stake going forward. So this stock is likely to see time-wise correction. It's given a good return from the recent listing. It's up 25%. So I believe there is going to be this stock will be volatile. It's in low-cost housing, Uttar Pradesh, in a large way. I would suggest you can exit.
Okay. And what about the technicals on this one, Ashish?
There is not much of a data, I think, but as far as I can see, the stock after touching 480 levels has been forming lower high, lower lows. That shows that the overall trend for the stock is on the sell side, and as per a simple Dow theory. So it's better to be out from here, from the stock, and invest in some other stocks, something like housing finance, LIC housing finance, something like that is looking much better than being invested into this one.
Okay, all right. So that's on Aadhar Housing Finance. You prefer LIC Housing Finance over it. Well, on that note, we need to take a quick break with the news that the markets are extremely quiet at this point in time. It's a wait and watch ahead of the Jackson Hole meeting. So that's what's taking place at this point. Take a break and be back.
And that including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you are seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we even number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com.
markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
Welcome back. Well, a couple of stocks which are managing to see some amount of traction on a week-to-date basis is something like a Godfrey Phillips. It's down today. It's down 3.5% today, but it's gained around 20% this week. Even All Cargo Terminal, that stock is up around 1.3% today, but it's given returns of 15% this week. And even Edelweiss Financial, that stock is at around 98 odd rupees. It's up 15% this week. Poly Medicure, which had a QIP this week, is up around 2 odd percent and gained around 12.5 odd percent for the entire week. So there are a couple of these buzzing counters which one needs to take a note of at this point. But we still have with us Shaina Mukaddam and Ashish Kyal to answer all of your stock queries. Well, we have Kaushik Datta, who writes to us from Mumbai, holds 1,000 shares of Mascon Docks, which he's bought at around 382. He's sitting on a fantastic figure there, and he wants to know what to do, whether to hold or sell. You know, this is one of the reasons why the real estate market is also doing well, Shaina, as well as Ashish this year. The kind of gains that people are sitting on specific stocks. Can you give us a sense, Shaina, that, you know, on Mascon Docks, it's been in focus on account of a lot of news pieces this week. But as a long-term perspective, what would your call be? And do you think that the investor should probably take some profits? Kaushik should probably take some profits off the table?
Yeah, Ekta, I believe he can take some profits off the table. A couple of reasons. One is because he's got a bit of quality. The price actually is getting a very good appreciation. And also in terms of, if you look at the medium term or maybe a year or year and a half, valuations are expensive. It's about 25 times if you look at it in terms of P 1 year forward, 35 times, and price to book 16 times. But the main reason why I'm giving as a part book of profits is because the government holds 86%. So the chance of coming with an FPO in the medium term is there. You can book part profits now because it is expensive, and then look to re-enter, you know, at some later stage.
Okay, all right. And what about you, Ashish? What's your view on this particular counter?
I completely agree that he has made some substantial return on the stock, and I think nearly 10 times he entered at 352 and the stock is around 4,500 odd levels, and that's tremendous. So I would like to congratulate him for sitting so tight on the stock all the way on the upside. Book partial profit, and I completely agree with you also that that's the reason why the real estate space is also seeing the buzz, because a lot of investments and the profits that you make out of the stock market do get into those real estate properties, and that's why we are seeing the elevated levels over there as well. So overall, in a nutshell, it's better that book partial profits, hold on for the remaining positions, maybe 50% of it, and hold on with a stop loss of around 3,800. As long as the support is intact, we can expect the stock to again edge towards the 6,000 levels on the upside.
Oh, okay, all right. 6,000 levels is your target price, Ashish. By when?
We can expect the stock to move toward the 6,000 level maybe by around 6 months of time. Some kind of a consolidation over here is possible, and post that we should be heading on those levels.
Okay, and since you are talking about real estate, you mentioned that anything that you like on the technicals?
On the technical side, you can clearly see DLF has been a strong outperformer in this entire space. We can clearly see that the stock has rallied sharply on the upside. We can clearly see it is consolidating up over past 6 months, but I think the breakout should come on the upside. We can see around a lot of buzz happening actually in Mumbai as well. So I'm optimistic overall. The real estate space should do well. Something like Oberoi Realty can also be a good pick at these levels. You can look for that Mahindra Life space. So these are a few counters you can look forward to. But the ELF stands out, and I think if it manages to break above 900, we can expect it to go towards the level of around 1,200 odd levels over next 6 months to 8 months time.
Okay, all right. Well, now we have Parag, who writes to us from Mumbai, holds 250 shares of Chambal Fertilizers at an average rate of 251. He wants to know whether to hold or sell this particular counter. So Chambal Fertilizers, he's also sitting on a profit at this point in time. Shaina?
I believe we can continue to hold at current levels. The valuations are pretty reasonable. It's about 2.8 times price to book, and the P is below industry average. Monsoons being good, you're likely to see decent numbers coming in for the full year. First quarter also we saw, but turnover was lower, but that is more on account of lower subsidies, and lower raw material costs. But this is resulting in better EBITDA margins and better EBITDA levels, as well as better profitability. So this is likely to continue on for the full year. I think it's a good hold.
Okay, all right. And technicals, it's done very well, Ashish. It's up over 90% just in the past 1 year. So what would your call be on Chambal Fertilizers?
Yes, absolutely. On technical side, if you look at it, the good part is stock, after having a very sharp run up from around 360 levels to 560, is consolidating in a very tight range. It's not trying to correct price-wise, but there is more of a time correction, which shows the strength in the inherent strength in the stock. And if it manages to break above 540, I think the pattern target on the upside can be around 590 odd level. So everything looks on the charts to me, and continue to hold on, maintain a stop loss of around 480, the lower end of the range, and expecting a target of around 590 level, maybe in 2 months of time.
Okay, 590 odd levels is in the next 2 months odd is what you're recommending, or what you're envisaging. And now we have another query. We have Lalit Kumar, who writes to us from New Delhi. He has 100 shares of Landmark Cars, which he's bought at around 735. So he's sitting on a loss here. And he wants to know what to do, whether he should hold or sell this particular counter. Not done much, Ashish, in the past 1 year odd, it's, sold off around 16% of its market cap. So what would your opinion be on Landmark Cars? Do you see further upside? Do you expect it to get back to above those 700 odd levels?
See, if you look at Landmark Cars, the stock has absolutely not shown any kind of recovery. In fact, the momentum on the downside has only increased post breaking the 740 support, and it formed a low around 545. 30 odd levels, and the volumes are also huge enough with the fall. So that's not a positive sign. The upside volumes are less, but the downside volumes are increasing. Indicates there is a distribution still ongoing. So I would recommend to be out of this stock. Any kind of a pullback, if you can get around 640, 650, use that as an opportunity to be out of this, and maybe invest somewhere else.
Okay, all right. Well, we now have, actually, let's get your opinion as well on Landmark China. The very poor Q4, quarterly numbers also, which have been reported by the company. So what's your sense?
I totally agree with Ashish. In my view, also, it's an exit at current levels. That is, profits were lower. There's not too much a niche that the company has. So I would say exit.
Okay, you would say exit. Well, we now have Rama, who writes to us from Andhra Pradesh, holds 1,000 shares of RT Industries, which is bought at 750. Wants to know what to do, sitting on a loss on this one as well. Shaina, any view on RT Industries?
No, the valuations are very expensive at current levels also. If you look at EV by EBITDA, 27 times. So management has come up with aggressive guidance for the current year. Even if they were able to meet their guidance, which they're talking of about 1,450 to 1,700 crores, I still think the stock is expensive. While the problems are sort of subsiding in terms of pricing, I think this year again is not going to be a great year. So it is better to, switch from this expensive stock into some other stock.
Okay, all right. So switch from this stock to another stock. And what would your view be on this one, Ashish?
I completely agree with Shaina. The stock on the chart has shown a very sharp decline from that around 740 level. It went to 600 in just 1 day or 2 days of time, and post that it's just trying to consolidate. So that's really the consolidation after such a sharp fall indicates continuation pattern, and then the breakdown should continue. So I would be very, very stringent when keeping a stop loss of around 590 levels. If 590 is taken out, then much lower levels around 520 can be also seen. So 590, use that as a stop loss, get a pullback towards that 660 resistance level and get out of this stock.
Okay, all right. So that's on Aarti Industries. Well, that's the last query that we have for the day. So Ashish as well as Shaina, thank you very much for joining in and taking us through all of those queries. Well, for the market, it is turning out to be a lively session for a lot of stocks. Nykaa seems to be the real stock of the week from the broader markets, up around 18% this week itself. 30% is what it's picked up this year in terms of market cap. But following it closely is even Spark, which is up around 5.5%. It's gained around 6.5% this week. Fortis is doing well. Remember that they will be buying out the PEs in their diagnostic business, Agilus. So Fortis is up around 5% in that particular counter. It's gained around over 30% this year. Interglobe Aviation, Walkhart, Skipper, Easy Trip, all of these stocks are seeing some amount of buying on the upside. So up anywhere between 3 to 5%. So Matto up 2% today, not done much this week. But remember, it's sitting on gains of over 100% on a year-to-date basis. MCure Pharma, which is a recent listing, is at around 390 odd rupees, is gaining around 2 odd % in today's trade. Overall, very quiet day. So the indices, the Nifty is just about higher by around 28 odd points. Sensex is up over 60 odd points. Bank Nifty just about 11 points higher, and the Midcap Index flat as well. That's all the time we have in the show. Do remember, you can email us your questions. We'll address them with the experts. Closing them up next.
To SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. The Taiwanese index, it's down 140 points.
Well, the minutes clearly show a very deep division in the MPC. Lanco Amarkantak was in the NCLT, and Adani Power bid has been declared the winner.
JP Morgan has also raised the target price in Bajaj Auto to 11,225.
Within the first take, I mean, there's a bit of a sell-off as well. The Nifty is now up only about 9 to 10 points.
Margins we are doing today, it has to enhance because, you know, you are seeing all the downstream projects will add more value.
Things are quiet, markets are moving, the indices are moving absolutely sideways.
So it still continues with duty drawback at around 15%.
That a composite insurance license is in the process of receiving.
A very quiet Friday, you have to say, for the benchmarks.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV18 Motilal Oswal Studios in Mumbai.
Well, that was the day so far. Hello and welcome to Closing Bell, live from the CNBC TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Nigel D'Souza. And looks like another ranged trading session is coming to a close. 1 hour to go to wrap up the day and the week. But the positive bias in the markets continues, and the Nifty and the Sensex higher for the 7th day in a row. Not by a whole lot, but it's a green tick.
Well, that's right, Reema. Winning streak. You know, all through the week, in fact, we've been building on that tally in terms of the number of sessions that we're winning. And for the final hour of trade, I think the Nifty Bank is the one that could move things around. It's virtually unmoved as of now. It's pat. You know, if you saw it in the morning, saw it now. In fact, you'll say it's not moved at all. But the Nifty Bank is the one that's holding closer on the 51,000 odd mark. If it can get closer to on the 51,300 mark, that's closer to the 50 DMA, and that's a technical resistance zone. But otherwise, Reema, a quiet session, but plenty of winners from the broader markets.
Indeed, the Nifty once again is moving in just about a 90-point range. Europe too is not doing too much, but holding on to that positive bias. So frontline European indices are up between 0.2 to 0.3%, I guess, on the sidelines ahead of that all-important Jackson Hole meeting. And, you know, Fed Chair Jerome Powell will be speaking at 10 a.m. Eastern time. But for the Indians, if you want to tune into that speech, the time for you is 7:30 p.m. Beyond the headline index, it's realty and IT, which is lagging. The Nifty Realty Index is down over 2%. The IT Index, with all the large cap IT names, is down nearly 1%. And on the way up, it's autos, which are, revving up. It's particularly the two-wheeler auto names, and we'll discuss that in greater detail.
Well, that's right, Reema. Just a few stocks, I wanted to highlight from the broader markets that are moving around. First Source, that one's been in a world of its own. It was down lower. Now, in fact, it's spiked up. So big uptick is what we're seeing on that one. On the flip side, a few stocks have come in for profit taking. RPL Bank has been having periodic bursts. That stock has come in for some profit taking. You have, NBCC as well as now moved to the low point of the day. So some of these stocks in a world of their own. Let's see how the final 60 minutes of trade does pan out. Mitesh Thakkar is back with us. Hi, Mitesh. What do you make of today's trading session? 7 straight session that we're going to be ending higher in all probability if we get through the next 59 minutes. Your view on the Nifty, where are we headed, and particularly the Nifty Bank as well, quieter than what the Nifty is doing?
So, Nigel, actually, the market isn't showing that momentum or the breakout. So, Nifty has been very sideways. It's gone down a few points, it's come back again a few points. I think, as I said, the Bank Nifty needs to get past 51,100. I think once that happens, some kind of traction can come on the upside. Till then, I don't want to, really look at the index because then there's no directional or a big move happening. You're not playing for 30, 40 points here and there, and then you will not get the exact highs and lows. I don't think trading the index makes much of sense right now. So avoid it for the time being. Trade the stock-specific batches. I think that's the way we are approaching it.
Yes, so then if it's going to be about stocks, what would you recommend, Mitesh?
I have a buy on PEL with a stop at about, or Piramal Enterprises with a stop at about 1,040. For targets of 1,100. I think that's the first call. And Petronet, after a long time, is looking like it'll, give some profit-booking kind of a setup. So sell here with a stop at 376 for targets of 360.
Thank you very much for that. Let's get to another important story where sources tell CNBC Awaaz that Alpha Holdings has sold its entire stake in Tata Tech in today's block deal. Yatin joins in with details on this. Yatin.
So Rima, what we gather from sources is that Alpha TC, which is a private equity firm and was a pre-IPO investor in Tata Technologies, has sold their entire shares in a block transaction today. Obviously, the block transaction happened on the exchanges in the 1,010, 1,020 odd levels. And Alpha TC in the last shareholding held nearly 1.5 crore shares, but the residual 70-80 lakh shares were sold today. And with this, I think they've cleaned out their entire investment in Tata Technologies. And remember, at a valuation of 1,000 crores, they had invested along with TPG in Tata Technologies. And today, the market cap of the company is more than 40,000 crores. So yes, the private equity investor making an exit in Tata Technologies in trade today.
Thank you very much for that. So Tata Tech came out with their IPO at 500 rupees.
Right.
So from that level, it's done very well. But it had listed at 1,200.
Exactly.
And after listing, I think it's not done anything. It went up to levels of 1,400. It's gone down to levels of 1,000. But it's traded very, very range bound after listing.
Yeah, I think, but Rima, this was a bit of an overhang. So at least one of those factors are out of the way. So it appears that block trade overhang at least is out of the way. Let's see how the stock moves from here. But as Rima said, on the day of listing itself, it had a blockbuster listing. And from there on, it's been quite actually, last 3 months actually virtually unmoved even after today's pop.
And between, so both Tata Tech and KPIT Tech are ER&D players.
Yeah.
KPIT is solely into automotive. Tata Tech gets a lot of their revenues from auto because of their anchor clients, Tata Motors and JLR. But between the two, KPIT has been showing much faster growth. And Tata Tech's revenues, I think the current quarter had even declined. So just comparing the two, KPIT is literally stolen a march.
And KPIT, Rima, I remember various brokerage notes being cautious at 900,000, 1,200, 1,300. Now the stock is at 1,800 odd. So it appears that they seem to be doing something right. And the growth is something that they like. And they've also guided that the margins can even improve from these levels after seeing such a swift, improvement in the last few years. Dilip Bhatt from Pedigree Advisory joins us on the show. Hi, Dilip. Good afternoon and good to see you in. Dilip, what do you make of this one? Tata Tech, as Rima mentioned, when it listed, blockbuster listing, from then on it's been quiet. And between the two, Tata Tech as well as KPIT, what's your preference?
Good afternoon, Nigel. I think this entire space, if you see, Tata Technologies, KPIT, I would say to some extent Tata Elxsi and even Tata Communication. I think there are a fair amount of things which are overlapping, especially in terms of the growth areas. So I think that, having said that, I think the clarity given by KPIT gives much more confidence. But otherwise, I would say that the three Tata companies, especially Tata Elxsi and Tata Technologies, are very well placed in the niche area and continuing to capture a very good amount of market, especially in the Europe. But what I would say is, from the current levels, Tata Technology also appears to be fairly reasonably valued. I don't think that there is anything which can really drive the stock up immediately. Maybe as what I just heard you telling that a part of the overhang is removed, and rightly so. But otherwise, I would not be in a hurry to buy Tata Technologies. KPIT also, despite a good clarity given by the management and the guidance, I would still wait and watch, not be in a hurry to buy them.
Fair enough. That's the view coming in on KPIT Tech and Tata Tech. Let's move on to another important story, because shares of Reliance Infrastructure and Reliance Power, that's belonging to the Anil Dhirubhai Ambani Group, ADAG Group as we call it, have fallen 14%. And this is after the market regulator SEBI has taken punitive action against Anil Ambani and some of the key managerial personnel at Reliance Home Finance. Vivek is joining in with the details. Vivek, I believe this is the final order from SEBI, and what does it say?
Well, that's right. Like you mentioned, all shares of the ADAG group listed universe are under pressure today. There's an important development. SEBI has gone ahead and issued a directive order where they have given the findings as well as, given an order as to what exactly will be the actions taken on Anil Ambani as well as some of the associates related to RHFL. Now, Reliance Home Finance fraud case is what we're talking about. The findings of SEBI established that there has been a fraudulent scheme that was orchestrated by Anil Ambani. This scheme was administered by the KMPs of RHFL to siphon off funds from the public listed entity. The actual modus operandi was that RHFL, that is Reliance Home Finance, structured loans to credit unworthy conduits as well as onward borrowers, and these onward borrowers were actually promoter-linked entities. What actually happened was that the loans resulted in erosion of the company's finances on eventually being declared as NPAs. Remember, these loans were given as general purpose working capital loans to the lenders. Now, talking about what exactly is the action being taken by SEBI, number one, they've barred RHFL as well as Anil Ambani from the capital markets. RHFL has been barred from dealing in securities market for 6 months. Anil Ambani has been barred from dealings in the securities market for a period of 5 years. Along with that, he's also been barred from associating with any listed entity as director or as a key managerial person for a period of 5 years. Anil Ambani has been barred from associating with any SEBI intermediary as well for a period of 5 years. Along with that, there has also been a monetary penalty that has been imposed on Anil Ambani and other notices.
Okay, all right. Thanks a lot for that, Vivek. Dilip, I don't know whether you want to comment on this group of companies, anything on that front, or any other idea from the broader markets that you're looking at, which you believe deserves some attention and maybe some allocation even at these levels?
Sure, Nigel. I think on a broader basis from the markets, I think DLF looks still pretty interesting. One thing which I have noted, if you have seen what is happening in the real estate, is a lot of companies have really started talking about in the real estate, talking about the pre-sales, talking about the cash flows instead about the profits. So I think especially DLF, if you see when they're talking about generating about a $1 billion at the group level, that means quite a bit. So I think that also gives a lot of confidence in the real estate sector, and particularly more so companies like DLF. And I think one should look at this particular sector. I think this is a sector which can really still do pretty well in the coming times over the next 2 to 3 years. So DLF looks pretty good and interesting for us. I think Calcutta Electric Supply, CSC, looks very strong in terms of the growth. And especially if you see the typical thermal and the renewable energy both, particularly the renewable energy will be something which will generate a lot of growth in the coming years. So I think we should look at this particular aspect in CSC, and CSC will certainly register strong growth in terms of top line as well as bottom line. We all know the kind of cash flows that they generate. So CSC looks pretty interesting from the current levels.
Okay, next Thursday, by the way, the 29th of August, we'll have the August series expiry and plus the 47th annual general meeting of Reliance Industries. And this is a highly anticipated, keenly watched event by all investors, because periodically Mukesh Ambani has used this platform of the AGM to make big announcements. So whether it was their telecom venture, Reliance Jio, or the new energy investments, talking about a 75,000 capex. And now this time, the big question is going to be whether he will announce a timeline for the IPOs of the telecom and the retail business. This is something that investors have been waiting, shareholders have been waiting, but will he use the platform to make that announcement? 29th is the AGM. But ahead of that, we've got some, increases in target price, some bullish bets by brokerages. Dilip, come in on Reliance Industries. Bernstein today has put a target price of 3,440. CLSA has put the target price at 3,300. Do you think this time in the AGM we will hear more on the IPO plans for at least the two entities, telecom and the retail venture?
Sure, very much. I think everyone is eagerly looking forward for the IPO that is expected from both the companies, whether it's the Jio or the retail venture also. And I think the valuations also will be pretty interesting to see, because both have done reasonably quite well of late. And the way they have capitalized both the companies, that also gives a lot of confidence. Yes, I think Reliance Industries, maybe on a SOP basis, sum of part basis, will look pretty good and interesting in the longer run, especially as these two entities get listed and the market capitalization gets discovered and hopefully it will still go northwards.
Okay, all right. Got that, Dilip ji. Just to hold our thought, two-wheeler stocks, they're in focus. There's a brokerage note coming in from JP Morgan. Nimesh joins us to fill us in with all of those details in our special segment, Standard Brokerage Reports. Nimesh, take it away.
Hi, Nigel. Big moves on the two-wheeler names here on the back of that JP Morgan note. Today, actually, JP Morgan has upgraded TVS Motors to outperform from neutral, and they've raised the target price on the stock to 3050. Interestingly, even UBS has today raised the target price on TVS Motors to 3200, and this seems to be the most aggressive in terms of target price on TVS. On Bajaj Auto, while JPM has retained the overweight stance, they've raised the target price there to 11,225. On the other side, they've downgraded Hero MotoCorp to neutral now. They have a target price of 50 to 30 there. And they maintain a cautious view on Eicher Motors with a neutral rating and a target price of close to 45.10. Now, for the two-wheeler sector, JP Morgan believes that that segment is more attractive in the entire auto basket for them. They expect and they forecast two-wheeler growth to outpace the passenger vehicle growth in the near future. Electrification, yes, it's going up, but the pace has been quite gradual, and hence they do not expect any margin pressures on the incumbent players, at least in the near term. For TVS, JP Morgan says that the market gain is quite resilient for TVS Motors, and hence they've raised the EPS estimates by 6 to 18% for FY26 and FY27. For Bajaj Auto, JP Morgan says that it's a potent combination of ability and intent. And on back of that, even for Bajaj Auto, they've raised the EPS estimates by 3 to 5%. So back of all this, a big upgrade coming in on TVS Motors, upgrade to an overweight. However, on Bajaj Auto, JPM has sharply raised the target price now to 11,225.
Thank you very much for that. Just earlier this week, TVS Motors also rolled out the new Jupiter 110cc scooter, which will replace the old model. It's priced at 73,000 rupees ex-showroom. It will be available in 4 variants, and it will compete with the likes of Honda Activa and Hero Pleasure Plus. Parikshit caught up with the CEO, K.N. Radhakrishnan, on the new launch and what TVS Motors expects from the festive season this time.
This year, the rural for the first time is ahead of urban. Okay, and we are extremely happy that the industry is doing well. This festival season, I am of the view that you will see much better growth rate than whatever the 13% what you are seeing, because the sentiments are positive. We are expecting a normal monsoon this year, and we will do much better with especially this product launch. I'm expecting much better growth than the industry. If the industry is going to grow minimum more, see, so far we have seen 13%. I'm expecting much better growth rate, maybe 15%.
That's TVS Motors for you. It's been a big mover, a near 40% rally since the beginning of the year. Dilip, in the two-wheeler space, do you think Ola Electric is going to challenge the hegemony of these incumbent players? Because they're fighting back. They've got deep pockets. They've got EV plans, aggressive EV plans. How do you expect the entire two-wheeler space to play out from here, and which one would be your top bet?
Sure. I think for the two-wheeler, there are two, I think, parts which are really making it a lot more interesting. Of course, apart from the traditional one, the second one, of course, is the EV. But coming to the regular ones, I think what we have seen in the last, except for last year, 3 to 4 years before that, we saw that the rural sales were pretty weak across for the entire two-wheeler, and we saw a very muted growth. But now I think as the things are changing out over there, I'm sure what we think is that all the three players, whether it's Hero Motors, whether it's Bajaj or whether it's TVS, all of them should do well. And then regarding the EV, as what you very rightly said, with the kind of money and especially the cash that they have in the books, they'll be in a much better position to introduce better products, compete very intensively. So, and of course, they will be gaining market share. So I think on all the three fronts, they look pretty good and interesting. Maybe I think they have run up quite a bit. Maybe I would say that Bajaj from here can go up by another 15%. TVS, I'm not so sure that I'm so very bullish on that. And Hero Motors also, if I have it, I will just hold on. I will not make a fresh commitment to that.
All right, Dilip, final question before we let you go. What about cement? You know, Orient Cement in the last few minutes has suddenly made an up move. I spoke to Ambuja Cements earlier this week, and they said that pricing, they're not very confident on pushing through, but they are focusing on the cost side measures. Your preference on the cement pack? Part of the street wants the large cap names because the large are going to get larger. But some of these candidates, possibly an Orient, possibly a Novoco, they could get taken over. So there is a valuation argument to there as well. Where are you placed?
So certainly, I think what we have seen in cement over the last couple of years is that in spite and despite the fact that the GDP has done so well, the infra companies have done so well, real estate companies have done so well, we have not seen a real serious uptake in the cement demand. And consequently, also the prices have not gone anywhere. I think the cost advantage is coming to them because of the natural conditions which are prevailing. Maybe the lower petroleum prices, some of these things and the lower inflation will help them play out. But on the supply side and on the price side, they seem to be a little more stressed at the moment. So I would say that cement is something where, as what a few of these cement names which you have taken, I think there's a corporate event that may trigger some of the cement stocks. But by and large, cement as an industry, still I think one can wait and watch, need not be in a hurry to buy.
Dilip, great conversation. Thank you for joining us this Friday afternoon. You have a great weekend. We need to slip into a short break. But on the other side, we'll chat with Mohit Khanna from Purnartha Investment Advisors. So stay tuned.
Most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Well, the script is out. What is that? After 2 months of speculation, reportage, and the companies talking about being in touch with each other, Zomato's acquisition of Paytm's ticketing business for a little over 2,000 crore is their new bet on the going out business itself. Remember, they've announced a foray into that through their third app, which is District, which could launch anytime in the next few weeks, as per Deepinder Goyal itself. This will be their third app after, of course, the roaring success of both Zomato as well as Blinkit. So to understand what Zomato's game plan here is, how big can this be from a shareholder value creation standpoint, let's take a look at a couple of numbers. The business that they've acquired from Paytm, they had a gross merchandise value of close to 2,000 odd crores. They had a revenue
investing.
Welcome back. Well, let's get chatting with Mohit Khanna, fund manager at Purnartha Investment Advisors, who joins us on the show. Hi, Mohit. Good afternoon and good to have you on the show, Mohit. Well, I wanted to understand what's your strategy, and one factor that I'm looking at is the contra call that you're taking. Everyone's bullish on financials, but you believe that in fact, that's not a space that you're looking to load up on. And on the flip side, the chemical space, there's a debate whether or not it's bottomed out. You believe so? I think you're bullish out there. So run us through this contra call first.
Right. Good afternoon, Nigel, and good afternoon to your viewers. Yes, for financials, we are a little bit of on an underweight position. We really don't understand or like that the deposit mobilization issues that the industry has been facing has bottomed out. We think there are more legs on that. On the other hand, if we see the provisioning that has increased in the first quarter year-over-year basis, we think that provisioning is going to being set at the new normal, which is going to be at higher levels. So yes, that will be creating a little bit of NIM pressure for these guys. So, and on the other hand, on the unsecured side, RBI has been very active and pointing out issues with multiple lenders. Fintechs have taken their fair share in the lower strata of the financing. So overall, we see that the road for financials is still looking difficult over the next few quarters. On the chemical side, you have to be very selective. So yes, we are seeing some traction on the margins in a couple of companies because margins bottomed out around December. So we do like the base impact that we will see, right? The positive base impact that we will see in the chemical companies. However, in FY 25-26, there are a lot of capacities are coming on stream. So we need to be really watchful on the utilization of those capacities and the pricing. So we are purely bottoms up on that front because the sub-segments within chemicals can get really tricky and they have their own market and demand share.
Okay, Goldman Sachs, by the way, has lowered the GDP growth forecast for India for CY24. That's the current calendar year that we're in, not fiscal year, calendar year. They've lowered the GDP forecast by 20 basis points to 6.7%. So that's below consensus expectations, which is closer to 7%. And even for next year, CY25, GDP estimates have been brought down by 20 basis points to 6.4%, again, below what the consensus expectation is. But will this spur the Reserve Bank of India to go ahead and cut policy rates? Anyway, dissenting voices have been have gone up as the policy minutes showed. Mohit, afternoon. This is Rima here. Thanks so much for joining in. So if you could take us through what would be the way you would construct your portfolio, what would be the top bets that you have right now?
Right. Thank you, Rima. Good afternoon. So I won't go stock specific, but on the sector side, we are overweight capital goods. We continue to like pharma. We are building our positions or increasing our weights on the FMCG side. And we are absolutely in love with the two-wheelers. We are overweight over there as well. On the underweight, as Nigel discussed, we are underweight a little bit on financials. We are equal with IT.
So you're overweight capital goods, auto and pharma, and in FMCG, you're building your portfolio right now.
Yes. We continue to like FMCG.
Got it. Mohit, you also run a multi-asset fund, if I got that correct.
Right.
Could you tell us what weights are you, are you allocating to different asset classes, to equity, to debt, to commodities? What is the current mix? And have you changed it in the recent past, given the elevated valuations we have in the equity market?
Right. So I do run a Purnartha multi-asset strategy. We call it Purnartha 1. And in that, I have equity exposure somewhere around 72 to 73% as of now. We recently reduced our equity exposure from 85%. We can oscillate the equity exposure between 70 and 90%. So we are at the bottom end right now. We just got reduced that. On the debt side, we have 12 to 13% allocation as of now. Again, on debt, we can go from 10 to 25%. So again, we are a little bit lower on the debt side as well. On the gold, we are at 5%. That is the commodity bet. But we are sitting a little bit on cash. That is around 10% for us. We hope to find better opportunities, on the equity side, maybe if we do get, or the deployment in debt should increase from here on. This is little unique in the sense because in this Purnartha 1 strategy, we combine the exposure to both equity, direct equity, and mutual funds as well, both on the debt and the equity side.
Right. Mohit, just going by what you're saying on the way you have moved your debt in the equity portfolios, equity is at the lower end of the range and debt is at the higher end of the range, and also you have raised some cash. So are you a little bit cautious at current reckoning on equity markets?
Yes. I do see markets trading, as we can see, trading at all-time highs and even on the valuation side as well. Secondly, as Rima just pointed out, Goldman Sachs. So on the second, Goldman Sachs reducing India's GDP. So yes, we are also of the same viewpoint that the macros or the excitement over improving macros is already captured in the market. We want to tone down our expectations a little bit over here. And lastly, even if you see the sentiment side, so that is also slightly turning to be, being fully captured in the current evaluation. So all three fronts, what we follow, we do get a signal that we should be lowering our equity exposure.
You're sitting on 10% cash. You're hopeful of better opportunities to invest in on the equity side. What's the big picture? Do you anticipate a correction is coming in the market?
Well, if I could know it for real. But yes, we want to be a little bit, on a safer side. On the other hand, there are multiple bottoms up, opportunities that are popping up in different sectors. So we want to capture those without increasing much risk in the portfolio.
Got it. Tell us about this call that you have on railways. Railways as a theme is likely to get a lot of focus, a lot of capex spend as well. But these stocks actually have got the fast train. The valuations seem out of whack. How are you approaching this theme? I think you've had some exposure out there.
Yes, so we do have exposure in railways. We continue to like the story. So if you see last few quarters or maybe a year or so, most of the railways stocks have really performed well on the order inflow news announcements. Now, if you just remove Vande Bharat from the whole picture, the majority of the other order book should get executed over 1 or 2 years. Only Vande Bharat orders are likely to go for next 4 to 5 years. So from here on, the execution becomes much more important. The execution capability will decide the stock returns from here on. Another positive factor for the railways is that the budget has been announced now, and we have seen the increase in the capital expenditure. Now, this expenditure has to be done within the next 6 to 7 months when we will have another budget coming in. So yes, the incremental orders coming in might not move the needle on the sitting order book. Execution will, start to coming into the focus, but the expenditure by the government has been squeezed into 3 quarters. Should give us some respite on that side. So we continue to like railway stocks. We continue to like stocks which have execution capabilities in railways and have a long order book or a long dated order book which gives me revenue visibility.
Where do you stand on real estate, Mohit? We've seen this entire urbanization scheme. The real estate stocks and the growth rates have been very strong for the last 3 or 4 years. So this upcycle has persisted. Now, there are some question marks that have the stocks priced in all the good news, or does the real estate cycle still have some legs to go? What is your own view on real estate? And, would you bet on the pan-India players or would you look at regional players?
Right. So while we don't have any exposure to real estate as of now, Rima, but in my sense, real estate is all about location. So I will be inclined to look at players on the regional side. Having said that, in the Purnartha one strategy, which is the multi-asset strategy, we do have exposure to REITs. And that is where we continue to like those kind of, income earning assets, wherein the lowering of interest rates will help me over a period of time. The second important aspect on that front is the GCCs, which are coming into India in big way. And that is where the REITs, I think, would stand out as a real estate investment option for investors over the next couple of years.
Got it. All right, Mohit, good to have you on the show. Thanks a lot for joining in. So we have got your contra calls, fairly positive on chemicals, underweight on financials, and the way you want to play the real estate theme as well is rather via REITs rather than play any of that. Thanks a lot for joining in. We look forward to chatting up with you in the coming weeks as well. Well, as we had that conversation, actually, the markets have flattened out. So the Nifty, from trading well in the green, well, it's flattened out a little bit. The Nifty Bank has moved into the red, mildly so. Nothing really to worry about, but that seems to be the picture. So let's slip into a short break. As always, on the other side, Nimish is waiting for us. He'll tell us what's going on in D Street Chatter and our technical calls as well lined up.
crores as of FY24 with EBITDA of close to 29 crores itself. Now, these numbers imply at 2,048 crore, the deal was done at a one-time GMV and 7 times sales business, which has an implied take rate of 15% and margins of 1.5% of GMV. What does Zomato plan to do post-acquisition? They intend to transition customer traffic from Paytm Insider, Ticket New, all these apps to District, and also incentivize customers to move to District. So you and I as customers could brace for a lot of offers as well. They're targeting FY26 GOV at over 10,000 crore rupees with rapid growth, which implies a 40% CAGR as well. They also see medium to long-term margin potential of anywhere between 4 to 5% as a percentage of GOV. Additionally, they say further scale will depend on newer use cases beyond just ticketing like shopping, staycations, travel, etc. Now, assuming all of this holds true and using conservative estimates versus the company's own guidance and projections, FY27, the GOV could actually be over 20,000 crore with an EBITDA percentage of 3% of GMV, telling you the absolute EBITDA could be close to around 600 crores. Now, if you just juxtapose the current deal multiples to that itself, which means the business could value itself by over 20,000 crores. That's a 10 to 12 times jump over the 2,000 crore that they've paid for this business. And this does not even account for newer use cases or further synergies and, live event IP valuations, etc. as well. Now, for normal, deals, a 10 to 12 times jump in 2 years seems extremely high. But for Zomato, it's par for course. We've seen that with Blinkit as well. From the price that Zomato paid for Blinkit in 2022, the valuation of Blinkit itself has rallied by over 20 times, with brokerages citing further upside for quick commerce as well. So the short point, the bottom line is that the street expects at least 10 to 12 times valuation extraction from District, which the management has earlier said will be their third major value driver in the B2C space.
Welcome back. Well, any which ways you cut it, it's a quiet session, but let's find out what's going on in D Street Chatter. Nimish joins us to tell us what he's picking up. Nimish, as quiet as can be for a Friday.
Oh yes, Nigel, flat day of trade, but the way to look would be, given the weak global cues, given that our own PCR is at close to 1.4, 14, 15 stocks are in F&O band, we've not given up the gains and we are holding in the green. That's largely because of the institutional buying. Outside of blocks as well, I understand there are buy flows. So today, for a change, there is a mid-cap basket buying is what I understand at a leading FI desk. Within sectors, OMCs are well bid. So is the case with auto names. The two-wheelers I have highlighted because of the JP Morgan note. And also some select PSU banks also are well bid by larger institutions. So as I said, not a bad outcome in today's market, given the global backdrop as what we've been seeing. Technically, today's weekly close above the 24,600 is going to be very crucial, and the sense I'm getting is if that sustains, which looks like it's going to sustain, you might see further rally on the upside and further short covering as well. So net, while blocks have been pretty big, and this week saw large numbers, but even outside of blocks, the momentum in terms of buying by the larger FIs and domestic institutions continue. And for a change today, it's the mid caps which have been well bid.
Okay, and what about in terms of individual stocks? Normally, you always start off with blocks. This is what happened today. This is what's expected next week. What do you have for us?
So let's go with what the Rima said. The couple of blocks which happened today, Tata Technologies and GMR Airports. I'll start with Tata Technologies first. Stock has recovered sharply from the intraday lows after the large block. 1 crore equity got changed hands. As Yatin pointed out, it's a clean out trade from a FI investor. But the street has been talking about a big slippage. That doesn't seem to be the case, is what I understand from bankers. It's a well bid book, both from HNIs as well as from family offices. So this disclosures could be quite interesting. But as Yatin pointed out, it's a clean out trade, and hence we've seen an up move in that particular name. The second stock is GMR Airports. Even there was a large block, nearly 1% equity got changed hands. I understand a domestic mutual fund was a seller, and a large long only fund was a buyer in GMR Airports today. So again, disclosures, if it happens, could be quite interesting in GMR Airports as well. The second stock is Paytm. Been in the news of late, been buzzing as well. There are large volumes in the last couple of days. HNI investors are quite active as well. But now I understand there could be a large block in Paytm very soon. The strategic investor who owns close to 9-10% could be a potential seller there. So watch out for that in days to come. The third stock is Pharma and Labs. Again, small stock, but again, back in limelight of late. They did a QIP as well. Some good funds bought into it. HNIs are quite active as well in Pharma and Labs of late, and hence a big move in the last few days. And the last is both the OMCs, HPCL and IOC in particular. While the stocks have been buzzing slightly, but the volumes are on the higher side, and looks like there is delivery-based buying now, which has come back in the OMC names, and specifically on IOC and HPCL.
Okay, all right. Nimesh, thanks a lot for joining and giving us that list. Well, let's get Mitesh Thakkar back into this conversation. Mitesh, 20 minutes to go for today's session, and then we're off to the weekend. But what are the stocks you have for us?
So I have STBT on Steel Authority or SAIL. Keep a stop at about levels of 133.5 and look for a target of around 127. And About India, slightly, not a very familiar name, but has been flashing for the last 1 hour on this screen. I think that's buying with a stop at 28,800 for targets of 29,750.
Thank you very much for that. We could wrap up trade in the next 20 minutes, but it's going to be an action-packed evening this Friday evening, because NSE index constituent changes could be announced later this evening. So what are the changes in the offering? Vivek is here to tell us more. Vivek.
Well, that's right. So most likely, there will be the scheduled meeting of the index maintenance subcommittee of all of the NSE indices. So you will see inclusions and exclusions across various NSE indices. The ones that we are tracking are the Nifty as well as the Nifty Bank Index, given the fact that this is where most of the passive funds will be active, and there will be flows that will come in on the back of these particular changes. So all of the changes that we are discussing are IIFL estimates. First up, when you're talking about the Nifty 50, 2 inclusions are expected. Trent is one stock that's expected to be included into the Nifty 50. On the back of that, you could see inflows of close to $422 million. The other stock is Bharat Electronics. If that makes the cut, that could see inflow of close to $400 million. Now remember, these inclusions are based on the fact that there may not be any fresh F&O additions as far as the entire F&O list of stocks are concerned. On the other hand, what will make way for these stocks to come in, you will see LTI Mindtree exiting, and there could be sell flows of almost $177 million. Divis Laboratories could see sell flows of almost $220 million. Now coming to the Nifty Bank, you will see an inclusion of Canara Bank that could fetch inflows of close to $80 million, and Bandhan Bank could be excluded from the Nifty Banking Index, and that could see outflows of close to $40 million.
Okay, all right, Vivek, thanks a lot for joining in and giving us that list with all the expectations. But let's get in Hemang Jani into this conversation. Hemang, good afternoon and good to see you in. I wanted to ask you about the Sanjeev Goenka clutch of stocks. Mr. Goenka spoke to Shireen a couple of weeks or so ago, and from there, really, he's been the most valuable player. We'll just take a look at the way some of those stocks have moved. You have PCBL that's done well. FirstSource has done well. CESC as well has done fairly well. And the holding company, that's the RPSG Ventures, which has the little bit of IPL. It has Mohan Bagan as well, and also holds majority stake in FirstSource. That, in fact, has done well. From this entire clutch of stocks, what do you like? I believe a couple of them have an investor conference as well that's going on. Tell us more.
Good afternoon, Nigel. Thanks for having me. Yes, what you said is right, that many of Sanjeev Goenka Group companies have done well. Essentially, what's happening is that across some of the companies, the outlook and the vision that the group has provided has been extremely encouraging. Just to give you a little bit of background about PCBL, they have said that they are looking to grow profit 5x over the next 5 years, and the kind of guidance that they have given for the existing business, Carbon Black, and the specialty chemical company, Aquafarm, is quite encouraging. So there is a massive upgrade that you are seeing in terms of earnings, and we ourselves have upgraded our price target as well as earnings forecast for next 2 years. So we are looking at about a 25% kind of a growth in PCBL. And same is the case with some of the other companies, whether it is CSE, Saregama, and a couple of other companies which are part of the.
By the way, the midcap index is selling off now. The midcap index was also flat when we began the show at 2:30. And now in a span of about 30 minutes, it's given up about 200, 250 points from the top. Pull up that midcap index, now down close to about 0.5%. You can't say that it's flatlining right now. There is a considerable fall seen in the midcap index, and the advanced decline ratio too has turned in favor of the losing side. Hemang, afternoon. Thank you for joining in. The stock which catches your attention today is Nykaa. We've had an investor who sold part of his stake in Nykaa. Now, Traditionally, whenever you had any kind of a stake sale, the markets would fear supply pressure, the stock would end in the red. But look at Nykaa today. I think the last time I checked, it was up 5-6%, and now it's extended its gain to a 7.5% rally. What's the street latching on to?
So clearly, when we see some action across the platform companies, you would see some rub-off for names like Nykaa. Also, typically, when you see the lock-in period getting over and a large, entity gets out of the way, you do see the market reacting to that in a positive way, depending upon who the buyers are and how attractive the stock is. So Nykaa is probably reacting to that development, but within the entire universe, if you see, Nykaa has not been the best performing stock. I think when you look at Zomato, and some of the other platform companies, Nykaa has been a laggard. Also in terms of performance, it's not as if that they are doing anything exciting. Also, because of the way the Reliance Retail is foraying into the similar kind of a space, the overall growth for Nykaa could be a bit challenging. So it might be a tactical, 10-12% kind of an up move, but not looking at a significant re-rating for Nykaa at this point of time.
Okay, all right. Another stock that's buzzing around is Edelweiss Financial Services. Hemang, I think you tracked this counter as well. What's the view? It's now bursting away high volume stock up 6-7%.
It's been a low-profile company for a while, but of late, we have seen some action in Nuvama, where the company has a 14% stake. So when you do a sum of parts across Nuvama, EAAA, their mutual fund business, and ARC, on a sum of part basis, the valuation that we are getting is about 117, 120 kind of a value after considering a 16% holding company discount. And as we all know that, wealth companies are getting a very, good valuation at this point of time. So there is a case for some sort of, re-rating in Edelweiss, unlocking of the value because of, this couple of deals that they are trying to exit.
Stay on, Hemang. That's the view on Edelweiss Financial. Fair value could be seen higher at 117, 120. Get into a break. Minda Corp, by the way, is also spiked up close to about 18%. Just pull up that stock as we get into this short break. And we'll also listen into the opinion views coming in from Andrew Holland, Chief Executive Officer at Avendus Alternate Strategies, talking about his view on the interest rate cut expected in the United States, his preferred themes in the Indian market.
I think we all kind of working on the basis now that an interest rate cut in September is coming. I think they should front run the kind of interest rate cycle. I think they should do 50 basis points, albeit that our base case is 25. I think that would give the market that kind of extra fillip that the Fed is ahead of the curve this time. And I think that's the key. The market continues to worry about whether the Fed is behind the curve. Obviously, the way we think about it is that we continue to play on the themes that we think will play out over a longer period, because that's where you're going to continue to see the earnings momentum. Not just for the next 2 quarters or 3 quarters, but for the next 2 to 3 years. So again, that falls under that defense, renewables, capex spending kind of scenarios. So if the interest rate cycle is now starting to fall, it should be good for our banking sector in India if the RBI follows suit. And of course, we'll all be thinking about October at that next interest rate policy meeting. I think if you're playing this, you play the whole sector in the short term, and then see which ones have outperformed, and then do your kind of reallocation between private and PSU banks. I think the next catalyst, as I mentioned previously, will now be the awarding of more contracts. And I expect that will happen from probably kind of next month onwards to the end of the year. And I think that's going to be the next leg. My concern is always is execution, and that's maybe down the road. But we move around within the themes. Obviously, if you're feeling that some of the themes are not have taken a back seat compared to others, then you can shift across. So hospitality is probably where we're a little bit more excited at the moment. I think in terms of Ola's listing, I think we're all surprised at where the share price is. But it's obviously kind of highlighted some of the undervaluations of the other two-wheeler companies in this sector who also have exposure in the EV sectors.
Wonderfully magical is in the air, isn't it? Yeah. We're feeling it here in this arena, but it's spreading all across this country we love. A familiar feeling that's been buried too deep for far too long. You know what I'm talking about. It's the contagious power of hope. America, hope is making a comeback. Kamala Harris is more than ready for this moment. She is one of the most qualified people ever to seek the office of the presidency. And she is one of the most dignified. A tribute to her mother, to my mother, and to your mother too. The embodiment of the stories we tell ourselves about this country. Her story is your story. It's my story. It's the story of the vast majority of Americans trying to build a better life.
plans.
Welcome back. Well, a couple of stocks are doing quite well right now. You have JTL, that stock has spiked up. It has some valuation comfort and maybe in fact volume pickup and EBITDA per ton as well could look pretty good from here on. It's come off the recent peak, but for the time being, it's regaining some of that lost ground. So JTL should come up for you on the screen currently at the high point of the day. Hemang, I wanted your comment. You know, people have this debate with regard to APL Apollo as well as JTL. Anything you like from the pipe space?
Nigel, when you look at APL Apollo, for last almost about 2 or 3 quarters, their performance has not been that great, both in terms of volume growth, in terms of margins. So though we like that space, I think JTL Industries, the performance has been much better. It's a very small company, hardly about 4,200 crore kind of a market cap. But when I compare between APL, Apollo and JTL, I feel that JTL has done much better when you look at the performance, over the last 3 to 4 quarters.
Okay, all right. Let's talk about a couple of other big volume movers as well. Motherson seems to be moving higher on strong volumes. Do you have any view on this stock? Volumes are high. And as we speak, I think the stock is at the high point of the day.
Nigel, I think the numbers were pretty much in line with consensus. But I think what is driving Motherson for the last few days is that because of the kind of action that we are seeing in the two-wheeler space and the kind of offering that Motherson has, both in terms of the typical engines as well as the EV side. So there is a sense that you might see much better volume growth and margin for Motherson, and post result there is a sense that this company should do much better. So Motherson, we have a price target of about 225 rupees.
Got it. Stay with us, Hemang, for the time being. Let's get in some commentary we got earlier today. Shyam Metallics and Energy, that stock is holding up in the green after UBS initiated coverage with a buy rating. They have a target price of around 1,200 rupees a share. The brokerage says that the company is on track to report its high profit growth as well as forecasted an EBITDA CAGR of around 39% over the next 3 years. Earlier today, I spoke to the company's vice chairman and managing director, Mr. Agarwal. Let's listen in to what he had to say.
In the time to come, in next 3 to 4 years, we expect that we should be able to cross more than 70 to 75%. And most of the investment is on the downstream side, on the value addition side, and also going backward on the cost side. Whatever margins we are doing today, it has to enhance because, you are seeing all the downstream projects will add more value forward, and the investment backward is also reducing the cost. So definitely the margin should improve around close to 4 to 5% in the time to come. Yeah, because if you see all the downstreams are not very heavy capex and it's all value add, little different. So definitely the ROC has to go up further because it's majorly on the downstream is creating more margins, and the capacity what had to be added on the upstream side has already been added, and most of the downstream, 70-80% of the raw material, we will be consuming. As Shyam Metallic is always a very investor and stakeholder friendly company, we would like to abide whatever is in the interest of the company, we would like to go on that.
Okay, got that. Hemang, do you track this one? Shyam Metallics, I recall it came out with an issue at around 300 rupees, but they timed the issue very, very well. The stock very quickly, I think, gave you 20-25% pop-up, but then it corrected, and from there it's more than doubled. At around 800 rupees, what's the view?
So, Nigel, we don't cover the stock as such, so no specific view or comment from my side.
Do you like anything? Vedanta did well, but that one as well has come in for some profit taking today. Some of these stocks actually, Nalco, Tata Steel, almost all of them from the day of that Supreme Court verdict, they got a bit of a knock, but they didn't get knocked out. And that's the point that we made here on CNBC TV18 as well, that this was a negative, but given that they have 12 years to pay those penalties, if at all, then it's good news. How would you view this space?
So, Nigel, when that news came out, there was a knee-jerk reaction across the mining companies, maybe Tata Steel, SAIL, NMDC. But when you look at that order in detail, the actual impact is minuscule, and that too you have to pay it over a period of time. And in terms of the overall impact on the profitability, it's hardly 2 or 3%. So I think given the fact that you have a very high probability of a rate cut in US, you're seeing some stability in the base metal prices, which had corrected, last 2 weeks. So you're seeing a very smart pullback, and within the pack, what we like at this point of time is Vedanta, because you're seeing a much diversified product profile. Debt is not a major concern right now, and it is fairly attractive at this point of time.
All right. Final question, Hemang, before we let you go. We had a large trade on Tata Tech earlier. What's the view out there? When it listed, everyone was rushing in to buy, but if someone who bought on the listing day, I don't think they're making any money since then. And another one that's popped up on my list is Birla Soft. That as well is surging as we speak. It was in the red when we started off the show, but now it's moved into the green. Your view on these two?
Tata Tech has been a laggard for a while. Now that the block has happened at a relatively lower price, you might see a tactical buying opportunity. Fundamentally, don't like the space much, though they are, in the ENRD space, which is growing at a better rate. But in terms of triggers, it's lacking. So maybe 8-10% kind of a tactical opportunity, given the block and the large investor has moved out. So that is my view on Tata Tech, which is the other one that you named.
Birla Soft.
So Nigel, Birla Soft, actually the numbers were not that good. The management guidance was also subdued, but we've seen a good amount of pullback across mid-cap IT companies. So I read this as a catch-up play, but within the mid-cap IT, I would go with the FSL, First Source, which has come out with much better guidance and is still at a discount to Birla Soft and KPIT.
Got it. Hemang, appreciate you joining in. Wishing you a good evening and a rocking weekend ahead as well. Thanks a lot for joining in. Well, it was a quiet day of trade today, but the markets go with some gains. So we maintained that winning streak, 7 in a row. The Nifty held up in the green. The Nifty Bank, that was a relative underperformer, that ended lower in trade today. But the real action was in the broader markets. Minda Corp, the stock goes home with a gain of around 20%. Majority of the moves came in the last hour of trade. In fact, in the last 20 minutes, the stock went from 15 to 20%. SCPC was another stock that was up close to around 18%. So big move is what you're seeing out there. Jain Irrigation, PCBL, both of them were up more than 10% in trade. PCBL as well was up close to around 10% in today's trading session. So good going out there. And a couple of these names moved post large trades, namely Nycam as well as Tata Tech. Both of them did surge up in trade, ending at the high point of the day. JTL Industries, well, that stock suddenly picked up pace in the final 60 minutes of trade. So that stock as well did quite well. So plenty of action from the broader markets. And the Anil Ambani group of stocks actually didn't do well. You had Reliance Infra that was down, Reliance Power that was down. Ola Electric from the two-wheeler space did come in for profit taking. That went home with a cut of around 4%. But you had other names that did well, namely Hero MotoCorp, Bajaj, as well as TVS Motors. All of them went home with gains in today's session. But that's it from myself and the entire team on Closing Bell. We'll have to wrap up on this show, but you don't go anywhere because Editors Roundtable comes up next.
See Barack Hussein Obama last night? Take little shots. He was taking shots at your president. And so was Michelle. You know, they always say, sure, please stick to policy, don't get personal. And yet they're getting personal all night long, these people. Do I still have to stick to policy? The Harris-Biden administration has been caught fraudulently manipulating job statistics to hide the true extent of the economic ruin that they've inflicted on America. The new data from the Bureau of Labor Statistics shows that the administration padded the numbers with an extra, listen to this one, 818,000 jobs that don't exist. So they said they existed, and they never did exist. They built them up so that they could say what a wonderful job they're doing. No, we've never had numbers like this. They don't exist.
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe.
The Lal Street ends higher for the second week in a row. The Nifty and the Sensex rise 1% this week. Midcaps outperform. This week, we take stock of the big block deals seen on the Lal Street. We put the spotlight on India's jewelry sector, and we'll decode the market action. Hello and welcome to another edition of Editor's Roundtable. I'm Reema Tendulkar. With me, we've got Nimesh, Mangalam, and we've got Mihir Vora with us in the newsroom. Hi, boys.
Hello.
Hello. How do you feel this Friday afternoon?
You feel tired after running on a treadmill. That's exactly how you feel. Why is that? Because yes, you've run, but you haven't gotten anywhere.
Yeah.
So that's exactly what happened to the markets as well. So much happened, and yet we're up by just 1% for the entire week. A lot of stocks moved. A lot of stocks moved in either direction. A lot of buyers, a lot of sellers. So much happened, and still we are here on a Friday.
But not a bad outcome, honestly, given the fact that we've rallied pretty hard. We've been outperforming. This week saw some bit of jitters from the global markets as well, at least towards the end of the week. But still, we managed to hold on. The fact is, even if you look at our internal data, the PCR is at almost 1.4, which is not a healthy sign. 14, 15 stocks are in F&O ban, and large blocks were 20,000 crores, and still we are up 1%. So I would read it that way, that the momentum still seems to be with the bulls, despite so much of supply coming in. We are marching ahead. And the fact is that we're ignoring a lot of global as well as local news. So I guess a bit of complacency now in the market. One needs to be watchful. But the moment, it's basically a liquidity market, so you can't complain.
So even after absorbing this kind of supply, the Nifty is up 1% this week. The mid-cap index is up 1.5%, and the small-cap index has a gain of close to about 3%. Mihir, you're also surprised, right? We've seen flows of 5,000 crore of cash in a single day. That happened on Thursday. Both the FIs and DIs purchased, but the markets have not moved up.
Absolutely, which also shows that there is supply coming in at higher levels, and it's no surprise. We have a host of IPOs. We have QIVs almost every day of a couple of companies. You have PE funds selling. You have promoter blocks being offered for sale. So I think at a price, supply does tend to respond to demand,
And this week it's accelerated a bit. But I just want to put on board the HSBC note, Nimesh, that you were highlighting earlier. And they say that Indian equities are hot, undoubtedly. But after 13 out of the 15 years of gains and trading at lofty valuations, they're asking the question, what can go wrong? So they've identified 10 risks which on their own do not pose any kind of an immediate threat, but in aggregate, it could derail the rally. So they continue to stay overweight on the Indian equity markets. They're acknowledging the risks in the Indian market and the 10 risks that they've highlighted. 1, the stress for banks is increasing. 2, banks are struggling to grow deposits. Private sector capex is sluggish. There is weak and concentrated foreign investment. Unequal consumer growth. There are risks to earnings. Q1 earnings has been very, very muted. ESG and sudden changes in the regulations. Mihir, put all this together. Do you think a correction is coming? What's your own gut?
Price correction, I'm not too sure, because I think nobody wants to call the top because of liquidity. The kind of mutual fund and insurance and NPS, etc. flows that are coming in, that financialization theme continues to grow. But yes, I would be worried on a couple of fronts. One is that we've just finished the earnings season now, more or less everything is out in terms of results. And if you look at the top 100, 200 companies aggregate, the numbers are not that great. You've seen single-digit earnings growth in the Nifty. Now you can slice and dice by saying metals, non-metals and all that, but the headline number is a single-digit growth and almost 1% growth only on the Nifty earnings. And this is after probably after 3 or 4 years that we've seen such a low YOY year-on-year growth on the Nifty earnings. So that's one. Second is the US is slowing down. Now, of course, the flip is that because the US is going to slow down, we are going to see rate cuts, so you can be happy about it. But the fact is that the US is slowing down, and the largest economy in the world is not doing that great. China anyway has not been, it's been struggling for a while now. So we do have global headwinds coming in, and with the large cap earnings at least not looking that great, it's time to be a little more choosy, if not cautious.
So how are you choosing your stocks in the portfolio? Because you've just recently launched a multi-cap fund as well. I spoke to a lot of investors, including you, at the couple of conferences, and everybody seems to be a bit cautious, right? And normally, market doesn't favor the consensus. So in that sense, how are you looking to position your portfolio?
So I read a WhatsApp forward somewhere, that fund managers are worried, advisors are cautious, but retail investors are optimistic. So that's what it looks like currently. So it's only been 4 months since we launched our fund, so not great in terms of churn, but actually in the initial portfolio we used to probably have a lot more industrials. Just 4 months ago we were very overweight on industrials and the growth names like defense, all those themes. But fortunately they ran up very sharply. Probably aided by some of the large NFOs in the manufacturing space, defense. So stocks rallied, and actually we started trimming also. So 4 months is really a short time to really trim your position, but the gains were so high that we actually trimmed positions in the industrial space and going more into some of the capital market links themes, the pharma plays, etc.
So Mir, is this going to be the trick now that as fund managers you have to be very aggressive, buying also and selling also, and like churning the portfolio every now and then is going to be the key mantra to have an alpha?
See, active, I wouldn't call it churn, I would call it active management.
Right, sure.
And for us, the churn or the buying or selling decisions come because of either price movements or change in fundamentals, right? If everything else remains same, there's been no earnings upgrade and the stock is up by 50%, then probably you want to sell it, right?
So, on these fundamental related versus price movement itself, there are so many confounding cues. When you started out, you said that US is slowing down, but now the belief is that maybe, because US is slowing down, the Fed will cut rates and that will be positive for us because that will infuse more liquidity. Similar is the case for promoters selling as well, right? One looks at promoters selling as a sign that the promoters are exiting, but a lot of them look at it as increase in free float and thereby perhaps an increase in MSCI weightage, and therefore there would be some more funds coming in. So it's that market where everything is justified to one's original benefit. How does one then maintain their rationality in a situation like that?
Absolutely. So you ultimately you got to stick to the knitting, which is study the valuations, study the growth prospects, take a bigger picture view and act. So as I said, I typically would not like to churn a stock in 4 months, but if a stock is up 60% and nothing has changed, then probably you want to trim it, right? So that's how we work.
Okay, hold that thought, because we want to get your thought in also on the jewelry space. Mangalam, you've done some analysis, and this week we had big moves in Kalyan Jewellers.
Exactly. We were talking about the promoter stake selling, etc. This was the first time that a PE, sold and the promoter bought in a very long time, and that explained why the stock moved higher. So I thought, let's use that as a peg to try and understand what's happening in the jewelry sector itself. So the jewelry sector in India, of course, is comprising of a lot of the others and the leader itself. The leader is Titan. We are talking about that, and we're talking about how the others have panned. So if you look at, Titan's stock price move over the last 6 months, it's actually negative versus Kalyan Jewellers at 57%, Senco at 36% as well. Last 1 year, Titan's up 17%, Kalyan Jewellers up, along with Senco, up nearly 160 to 170% as well. And you expand the time horizon, 2 years, Titan's up 48%, Kalyan Jewellers is up 650%, and from its issue price, Senco Gold is up 250%. So it's over 2 years of underperformance from the leader. What exactly is happening? Well, if you look at the thesis of the industry, not much has changed because the organized sector is still growing at 2 to 2.5 times industry. But it's the disruptors, the newer players who are growing faster due to one, lower base and getting access to a lot more capital by listing or raising funds, etc. Their store expansion through franchises, and obviously the margins improving due to operating leverage as well. The product differentiation in jewelry between two brands has reduced because of BIS, competitive intensity, price parity. Everyone's margins have compressed, and there was a huge valuation gap between Titan and the others. That has become narrow as well. So if you look at Titan's jewelry margins itself, over the last many quarters, it's come down from 14.4% to about 10%, talking about the intensity in competition in the market. And this when the revenue growth has been similar to all the other players on the huge base as well. If you look at all the other players as well, where do they stand? Titan, for the last year, trailing 12 months, revenues were close to around 44,000 crores, Kalyan closer 20,000 crores, Senco and Thangamile between 4 and 5,000 crores. But in margins, Titan is the clear leader at 11%, and which is why it gets the maximum market cap as well at 3,20,000 crores. And with the up move that we've seen, everyone else is at 61,000 crores and below. Titan has 490 stores, Kalyan 277, Senco and Thangamile between 59 and 165. Kalyan has actually increased its stores by a fair amount as well. So what next will happen for the jewelry sector? There is improved consumer sentiment ahead of the festive season, the cut in the budget, store expansion in India and abroad would be the key trigger for every player. Design and brand positioning will be the key differentiators for Titan and the others. We need to watch out for the impact of lab-grown diamonds and how that plays out on margins. And then there are newer formats like Carrot Lane for Titan, Candier for Kalyan, etc. Kalyan is looking to divest its non-core assets. Titan is looking to grow through new categories, balance sheet improvement for players like PC Jewelers who have doubled in this year itself, and leadership transition for Titan sometime in the next year as well. Everything has a price. So let's look at it. 2 years ago, Titan was trading at 64 times, Kalyan 19 times, and Senco 13 times. 2 years later, after the underperformance, Titan is at 60 times, Kalyan is at 50 times, Senco at 29 times. So I guess what I'm saying is that the valuation differential has narrowed quite a bit. With this underperformance, is it time now for the street to remember the Titan?
Okay, interesting data that you've compiled there over Mangalam. Mihir, are you bullish on the jewelry stocks? Gold prices have inched up. Then there is that budget push with the customs duty cut. Consumers are lapping up. There is so much money to spend, right? It's going in real estate, it's going in stocks, and it's also going in jewelry. But he's put up a comparison.
The most interesting data from Mangalam's piece was that Titan's valuations is at 60 times now, whereas the others have caught up very sharply in the last 2 years. Now Kalyan is quoting at 60 times, and Senco is around 40 odd times. So, what would you prefer in the jewelry space in case you have to buy something in that space? Will you stick with the leader?
So, a couple of things from the data that Mangalam presented. One is that it is a growth sector, right? So everybody is growing. It's not like one is growing at the expense of others. There is, as you rightly said, there is enough. The market is big enough and growing at a reasonable. It's a recession-proof industry. That's why it's always traded at a very high premium, because there's a lot of visibility of the top line. But now I think the industry has come to a certain size that there is space for more people, right? So the shift basically is not from one organized person to the another. It's from the unorganized to organized, and I think that will continue. So there is space for a lot of large players. That is one, and second is there is a difference in business models that the different companies are following. So there is a differentiation in terms of business model. While everybody is doing jewelry, everybody is doing studded versus gold, etc. There are certain differences in the way some companies are handling their franchises, some companies are owning their own shop. So I think that's also reflecting some of the valuations. If you as you rightly pointed, the market is rewarding higher growth. So the narrowing of the premiums is because of the differential in growth rate, I would say.
So do you have any jewelry stocks in your portfolio?
We do. I'm positive on the sector.
Oh, you're positive.
Sorry. Go ahead,
yeah.
And what about on the other consumer sectors? Are you bullish on any part of the consumer discretionary or consumer staples segment?
So we have selected names. We actually have very few of the large cap FMCG stocks, frankly.
Okay.
Whatever we have in FMCG are very niche companies, which are...
What is niche?
Niche in the sense, for example, some snacking company, that company, some of the companies which supply to, say, kids, etc. So which are in segments which still have a long runway of growth, which is in line with our philosophy, that it should be a fast-growing sector or a fast-growing company with a long runway of growth.
Speaking of fast-growing companies, I just wanted your thoughts on Zomato and all the other platform companies. I mean, it's moved nearly 5 or 6 times from its recent lows itself, and now it's acquiring newer companies, it's acquiring newer platforms. District itself could be a next 22,000 crore opportunity for them in terms of valuation addition. What are your thoughts on Zomato?
So we've always been positive on platform companies, and as we during the NF also, this was one of the themes that we are pursuing, apart from the consumption and the financialization theme, infra theme, etc. Essentially, these are segments which are going to become oligopolies.
Okay.
It is a winner-take-all kind of a situation. So you'll have 2 or 3 or 4 players in each segment, and the total addressable market is anyway large. Plus, companies are going into adjacencies, so they can expand the TAM, by going into a newer category, which is what we are seeing in a lot of these cases. So we structurally remain positive.
Mir, a word on the luxury brand plays. Are you looking at that sector in a very strong way? Look at Ethos for example this week. At a record high, promoters sold out, and still, the funds are looking to buy into stocks like Ethos. In that luxury brand play, anything that strikes to you, which is still quoting at reasonable valuations?
So while we don't own any of those of this, but structurally the K shape is still there. Right. So you are seeing much more resilient demand at the higher ends of all the consumption items, frankly. So I don't think that's a surprise.
So if again, just taking a name here, Stanley Lifestyles is the other one, which looks at a large total addressable market, which is the luxury furniture market. Again, the same thing that one would have looked at in the jewelry sector, say 20 years ago, where a large part is unorganized. There is one large organized player. Do you think there is a case for this shift here and underlying wealth creation? Not specifically this stock, but this sector?
Yeah. Only thing is, you also need to consider the particular segment, what the competition levels are. So some of the segments are prone to national monopolies or oligopolies. Some of the segments are anyway so fragmented that it may not be possible to make abnormal margins for a long period of time. So you need to analyze using that prism also.
You do stay on. We want to slip into a very short break, but we'll come back and talk about the mega block deal scene in this week. Stay tuned.
Because you are increasing your calories, which is going to make you fat and obese, and you are increasing your carbohydrate intake with all the junk food that is there, and you're also increasing your fat content, and all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing. And processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete.
Well, this week was massive in terms of block deals in the stock market, and looks like it's only the PE investors and the promoters who are laughing their way to the bank. 20,000 crores is what we saw the block deal data for this week itself. The promoters and PEs have sold stake worth 20,000 crores. I'll start with this way. Today's large block deals. The first large block was Ambuja Cements. 2.8% equity got sold today by promoters, and they've raised close to 4,250 crores. Tata Technologies did a block deal happen in the afternoon trade. Another 2.5% equity got changed hands there. A clean out trade there was deal worth 1,000 crores. Nykaa saw another large block of 1.4% equity, a deal worth 800 crores, and GMR Airports also saw a large block of nearly 1% equity, deal worth 500 crores. So this was today's large block deals which happened in the market today. Similar was the case yesterday as well. Some large blocks happened in yesterday's trade. The biggest one was Kalyan Jewellers. 6.5% equity got changed hands. It was a clean out trade from PE investor. Wabok sold out completely, and that was worth close to 3,500 crores. The other large block deal was PNB Housing. In fact, PNB Housing saw 2 block deals in 2 days. Yesterday we saw 3.3% equity got changing hands. Asia Opportunities Fund sold, and that was worth close to 1,000 odd crores. The other big deals were, Eris Life saw a large block, nearly 7% equity got changing hands. Close to 1,200 crores of deal size was there as well. And so was Alchem Labs. The promoter sold close to 0.7%, and they raised close to 500 crores. So these were yesterday's large blocks. But as I said, PNB saw 2 large blocks this week. Even Wednesday, there was a large block, 5% equity got changed hands. General Atlantic sold, and they've raised close to 1,100 crores. And there was a large block in Zomato as well, where Ant Investment, they sold a large chunk and raised close to 5,400 crores. So As I said, this week was large in terms of, large promoters and PEs selling stake, and they've raised close to 20,000 crores in 1 week itself. But as I understand, there's going to be more large blocks which are going to come in the days and months, in the days and weeks to come. So looks like it's going to be an exciting week. Mir, what's your take? I saw your tweet as well. Despite so much of FI and AI buying, the markets have been not moved, but it's largely getting absorbed by these kind of blocks, right? Generally, how would you read the promoters and PE selling out?
See, at a price, there is going to be selling, whether it's promoters or PE or VC, doesn't matter. There will be selling, and it's a natural process of the market. However, in the last week or so, as you rightly pointed out, there has been an accelerated amount of selling, which probably means that promoters are getting a little, concerned about valuations, and then they think it's a good time to sell a little more, maybe buy a house or whatever,
So if you've been in the market for almost 3 decades now, generally who turns out to be right? The promoter who sells or the new investor who buys out?
see, small selling is fine. That's the normal amount of selling that promoters do. But when you see concentrated selling, that may be a little, concerning, and time to be a little cautious, I would say. In the past, we never had PE funds selling in such a big way because we didn't have PE funds, right? Say 10, 20 years ago. But the quantity of inventory out there with the PE funds is huge. So that is something that we need to be more cautious about. I would worry less about the promoters than the PE funds.
Okay, and PE funds obviously will, sell irrespective. Promoters can at least hold on for a longer time. PE funds have their cycles, etc. It also is telling of a market which is fairly buoyant on both the demand and the supply side. Not, either way. In a situation like this where promoters are selling, you're saying it's time to be cautious. How do you protect your capital? What do you do for you to stay above the water when everyone else is perhaps, drowning?
The first thing I would do is, never do is go down the quality curve.
Okay.
Because usually the lower quality stocks always optically appear cheaper. And there's a good amount of temptation to buy cheap stocks, so to say, but that never works in the long term, And the second thing, especially in these markets, is to look at cash flows very closely. People, it's fine in a normal market, you kind of ignore cash flows and all, it's fine because you're not really going down the cap curve. But as you go down the cap curve, as you go into a little less known company, I think the last 5-6 years of cash flows, working capital, fixed asset, those are the red flags, one needs to look at. But there are companies, which have a very unbelievably low gross block, but suddenly have a lot of turnover. Yeah.
Mir, a word on the telecom. We saw a couple of reports today. Reliance AGM is going to be a key trigger to watch out. A couple of brokerages have raised the Jio's EPS estimates and numbers and all. Largely on the telecom side, what's your view? Is this a good consumption play?
It is actually, and probably the worst is over for the sector. Sure. And for the first time this year, we saw pricing hikes being taken by the leading companies. So, in my view, telecom will be a moderate growth, moderate return kind of a situation. Probably little better than FMCG, the large FMCG, which are really into single-digit kind of growth. Telecom may be a little better than that, but it may not be as high as, say, the financials, so it's kind of somewhere in the middle.
What about aviation? Because you're talking about telecom, a lot of people believe that maybe aviation as well, the worst is behind the sector right now. Going forward, the consolidation of power has happened with Interglobe Aviation, but there is at the same time the overhang of some supply coming in as well. How do you look at that one?
So aviation is one sector which I traditionally have been unable to put my head around.
Okay.
And it's always been a sector where I think there's too much monitoring to be done in terms of on one side you have the competition, of course, and the fuel prices. On the other side, you also have regulatory issues that are coming up. So for me, it's always been a bit of a complicated sector. It's too much to monitor. So I have not really been,
You'd rather fly than...
Yeah, I'd rather fly.
You said you're buying pharmaceutical names, select pharma names.
Yes.
Elaborate a little bit more.
So again, this is another sector where probably the worst is over in terms of,
the earnings have been strong.
The earnings have been strong. And pharma is such an interesting sector because you get a lot of different plays. If you want a domestic play, you can get it. If you want an API play, you can get it. If you are an R&D play, you can get it. So there's a lot of choice in the pharma sector, depending on the comfort level. So we kind of mix and match and build a portfolio around that. Especially with a lot of other segments, which were earlier our favorite segments, having gone up so much, this seems to be a relatively better safe haven.
Mir, the entire PSU basket has seen some bit of correction now from the peak. A lot of stocks are down 15, 20, 30, 40% as well. And even the numbers have been quite mixed in the PSU basket. I actually reported last week, some of the companies have reported 1,000 basis points of EBITDA miss, those kind of numbers as well. Within the PSU basket, what's your take? Anything which is now turning attractive after the recent correction, and you feel like the numbers could come better going forward?
So in PSU, of course, it's a whole gamut of baskets from coal
Defense
companies
or whatever,
oil,
defense or bank.
but our favorites or our exposure used to be in the defense space, and a little bit on the PSU banks space. So I don't think there's too much wrong going on the PSU bank space, and valuations still okay, and stocks have corrected, so I think that looks fine. On the defense space also, while we did book a little bit of profit there, so we used to have a lot of exposure. Now we almost trimmed it down to less than half of what we used to have. But the stocks have corrected 20-30%, and I don't think the bigger picture has changed.
Okay.
So it's, I think, just a deferment of orders or a little bit of delay of the orders getting rolled out. But the big picture, if you have 3 or 5 or 10-year picture, has not changed. I'm still bullish on the sector.
Mihir, you said that it's time to be choosy and not cautious in the markets.
Yes.
Right, for a retail investor who invests via the SIP route, they want to go via the mutual fund. Which is the best? What's the best way? Should one be buying in, say, in a Nifty ETF or one of those equal weight, indices for the Nifty or the Midcap index? Would you go down the sectoral curve? What would you recommend by way of purchase via an SIP route? But if you want to pick, a mutual fund.
So that would depend on your level of sophistication. So if you're just starting out in your journey of investing, probably you start with a flexi-cap fund. But as you get more
But keeping the investing landscape right now in mind, the lofty valuations and where we are.
So if you look at pure valuations, I would say it's a barbell.
Yeah.
On one hand, the large caps are looking reasonably priced, but growth is not that great. But valuations have now come to reasonable levels. So that's the Nifty 50 basket for you, probably, maybe Nifty 100. On the other hand, I think the small cap space still offers a lot of exciting possibilities. And if you look at the aggregate valuations of the small cap index, it's at Nifty levels, at the large cap level. So given the growth adjusted equation, I would still say there's a lot more stock picking opportunity in the small cap. Is the middle 150 stock, which is the mid cap, which is standing out in terms of expensive valuation. So that's, in my view, the expensive part of the market.
Right.
Okay.
No, just your weekend plan. What's that?
Weekend plan, I think, is to relax after so much activity.
All right, guys, this has been a great show. Thank you very much, Mihir, for coming down to our studio.
Always a pleasure. Thank
for
you.
our newsroom.
Thank you.
Well, with that, it's a wrap on this edition of Editors Roundtable from the entire team. Thank you for watching. You enjoy your weekend.
So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way, you have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
In 1972, a fearless black congresswoman named Shirley Chisholm our president and her determination let me and millions of others dream bigger, not just because of who she was, but because of who she fought for. Working parents, poor children, the last, the least, and the lost. In 1984, I brought
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The market edges higher, ending the week in the green ahead of the Fed chief's speech at Jackson Hole. The Nifty and the Sensex end with gains of 1% each. 38 of the 50 Nifty stocks finished the trading week with gains. Promoters and strategic investors continue the selling spree on Dalal Street. Adani likely to have sold nearly 3% stake in Ambuja Cements for over 4,200 crore rupees. Shares of over a dozen companies worth more than 20,000 crore rupees have changed hands this week. More than a year after the competition law amendment was passed by Parliament, the government is likely to notify a critical provision on deal value threshold, which makes the CCIs not mandatory for deals above 2,000 crore rupees. The Congress party has raised concerns over the delay in notifying the provision, alleging preferential treatment to certain corporate groups and the lack of regulatory oversight. That's an exclusive. SEBI bans Anil Ambani and 24 other entities, including former Reliance Home Finance officials, for 5 years. The regulator charges Anil Ambani of orchestrating a fraudulent scheme to siphon funds by disguising them as loans to entities linked to himself. The regulator also imposes a 25 crore rupee penalty on him. Prime Minister Modi in Ukraine for the second leg of his two-nation trip pays homage to the statue of Mahatma Gandhi in the capital, Kyiv. His trip to Ukraine is the first by a Prime Minister since the nation gained independence from Soviet rule in 1991 and comes a month after his meeting with Russian President Putin in Moscow. The Indian government bans 156 fixed-dose combination drugs, saying they're likely to involve risk to human beings. The list includes commonly used painkillers, antibiotics and multivitamins. The Consumer Affairs Ministry flags concerns about the surge in quick commerce and its impact on Kirana stores. Sources say the government fears discounts and dark stores run by quick commerce players could hurt local shops. 14 Indian tourists are killed and several injured after a bus plunges into a river in Nepal. 16 people rescued so far. At least 11 are still missing. The US expresses optimism about a Gaza ceasefire being in sight even as Israeli operations continue in the region. Netanyahu denies reports suggesting that Israel is considering agreeing to an international force being deployed along the narrow border strip separating Gaza and Egypt. A UN official says that 90% of Gaza's 2 million residents have been displaced since the war began in October last year.
On behalf of everyone whose story could only be written in the greatest nation on earth, I accept your nomination to be President of the United States of America.
Kamala Harris pledges to chart a new way forward as she accepts the Democratic Party's presidential nomination, promises to unite the nation and be the president for all Americans. Well, we'll get to the US elections in just a bit, but first up, the market action of the day. The Dalal Street ending the week flat ahead of the Fed chair's speech at the Jackson Hole event later today. 38 out of the